in. Hello, Vanetta. Hello, Jenny. Look at this. Look at who we are.
Well, there's just a couple of showgirls about to do a show about options.
So look at this. It looks like you two are doing the show with Taylor Swift when I move out of the way.
Oh my gosh, I love it. This is probably the only financial show on today with Taylor Swift backgrounds and showgirl outfits. I love it, Vanetta. Great idea. Great idea.
I'm so excited. I think it was maybe Tuesday. I texted you guys. I was like, hey, girl, hey, I have an idea. And you were instantly in. Liz was immediately on Amazon. Jenny was like, okay, let's go. And I just want to sincerely thank you for getting into the fantasy with me.
Hey, listen, this is the fate of Ophelia right here.
Yes, you guys look amazing.
Oh,
I'm
so
not glad,
Vanetta.
Vanetta, this is take 2 because this was take 1 and it doesn't.
Oh, see, yeah, we have the matching one. That's the one that I'm wearing. You can't really see it, but
it didn't work. So I literally had to buy 2 separate pieces.
You know, this was the perfect day to do the morning show. Usually I cannot get out of bed for the morning show. But listening to the album was the only thing that got me out of bed.
And I told Liz, I was like, feel free to have your husband send me an Ulta gift card for making you order sexy showgirl costumes.
He was confused when he opened up the Amazon package. I will tell you that.
I was going to ask, I was like, what did your spouses say? They're like, you're doing what now? On the what?
Hey, this is actually my shirt.
Okay. You have to tell everybody it's your shirt, but you put a headband around your chest.
This is actually my shirt. This is an added accessory.
It's gorgeous. No, I love it. I'm just trying to keep my boobs in place. That's it.
Okay, now I have to tell you, sometimes, Vanetta, I know you can probably say the same thing, but there are certain points in the last 14 years, because we've been together for going on 15 years, where you're just like, I have the weirdest job in the world, right? So, like, this is one of those. We are doing a Taylor Swift financial show. I've also done the show for about 2 months, a financial show with an eye patch. So that was fun.
And you did the show in Lederhosen.
We did the show in Lederhosen. That's correct. This is all true things.
I popped into my daughter's room to say, have a good day. And she just looked at me and said, I don't know what is going on, but we do have an odd job.
And I love it.
Have you ever seen the showgirls, the very glamorous ones in Las Vegas?
I never have.
I have. And I like the shows. I like the showgirl shows.
It's so talented with the feathers and the fans and the, keeping everything in place.
Isn't there a movie out, The Oldest Showgirl with Pam Anderson?
Or something like that.
Yeah,
The Last Showgirl. Yes, it was critically acclaimed. I didn't watch it, but she got good reviews for it. So.
So what's going on today?
Nothing, just casual Friday.
We got nothing. We're talking about markets. No, we are. It is. The markets are crazy again. Up and away. I mean,
what are they doing? What's going on?
All-time highs. So, I mean, it was great. I gotta give credit where credit is due, because Frank was sending us this, but gold is in its 7th up week. I mean, and the markets closed up again yesterday, and they're up again today. So
Tom and Tony will have stuff to do in LA today.
Yeah.
They will. Yeah, they will have stuff to do. And you know what? What time is it in LA right now?
5 a.m.
5 a.m.
Yeah.
So they're getting up to start to do their hair right now.
Yes. And for the people in LA, they will also be dressed as showgirls today. So that'll be a nice surprise. No, I'm just kidding.
I'm sure Tom and Tony couldn't wait to see each other. I'm sure they gave each other a big hug when they landed yesterday.
It's funny. You know what? It is funny when you're with somebody. I mean, you probably miss him, Vanetta. You've been with him every day for 15 years. It's a big adjustment, right?
It is. It's weird feeling my self-esteem come back.
Slowly.
I'm like, what is this feeling? No, I do sincerely miss him, but it was time for him to move on. He's got to fly free.
No, I know. But it is okay. Vanetta, what are you doing? Are you part of this October mayhem with Bitcoin?
I mean, I'm making social posts for it, but I'm not. My portfolio is not participating. Had you heard of Uptober before?
No, but it's my new favorite word, and I keep
I
saying
love it.
over and over
I
again.
love it.
I
And
have to give.
is it just crypto or is it the whole market?
No, it's
Just
crypto.
crypto.
It's just crypto. Yeah. I
So,
mean,
'cause Bitcoin has been up 9 out of the last 10 Octobers. So.
yeah.
Okay.
And it's just cryptos. It's all cryptos. It's not just Bitcoin, correct, Vanetta? Because you did a piece on it.
That was, well, Bitcoin, the statistic 9 out of 10 was just for Bitcoin, but
Okay.
the altcoins, Ethereum and Solana, they are also up. I don't know because they haven't been around as long as Bitcoin, so I'm not sure about their historical performance.
And I love that you're posting on social about it. For those of you just joining us, Vanetta is the one who posts everything on social now. You're doing a great job, girl.
I'm exhausted.
Well, I loved the video that you posted yesterday, the Showgirl video. It was
Yes, I used AI to make you guys into showgirls. So I'm going to tweet out more of those pictures. Actually, I'm going to get some more of those up. So
The AI is pretty funny when it made us into showgirls.
I know you had to be real specific because it was trying not to make anything too scandalous.
I think I mentioned it to both of you when I first saw the pictures. I said Liz looks like Vanna White. It looked like
Yeah,
Vanna
you
White.
look like Vanna White.
I've been told that multiple times over my life. I like to go like this with my hands. So yes, I will be Vanna White today.
How is everything going with you guys? How are the kids doing in college and they're behaving themselves?
No, they're not behaving themselves. Not at all. Vanetta, I mean, it is, he's having the time of his life and it's insane. So it was funny because he's been trading a lot, but I text him market updates on the open and I told him about Uptober. So he's been telling all of his, frat brothers about Uptober. So
Logan's missing out on a lot of this because I don't know how long ago was it? A couple months ago, he was so happy with his profits on the year. He said, close all. I don't want to lose my profits on the year. So he's kind of
And there's nothing wrong with that.
Yeah, so
No,
I don't know, but he could have done better, but he didn't. He's kind of missed out on a lot of this run.
Yeah, I mean that's not. I mean, but that's how kids trade, right? It's a little bit different.
Yeah, he saw how much money he had, and he's like, I'm going to need that. I'm going to need that money. So let's just close all.
Yeah, for sure.
I mean, I would have done the same thing. I'm a big scaredy cat, but but then it is hard. Then you see it go up like 200% afterwards. Like that's rough.
No, but it's okay. We talked about this yesterday. Or no, I didn't talk about it yesterday with you. It was with TP. You can't time the market, right? So just because it's up right now doesn't mean that it's not going to continue to go up. You can't, and it shouldn't always be bullish either. You can't time anything in either direction.
Well, it's interesting because so many people after so many up days will scale back, pull money out, have money on the sideline, waiting for a down day to get back in. And sometimes you wonder, when is that down day going to come? It always does. It's just a matter of when.
Yeah.
And it's also hard for like new people, trying to figure out where do you get in when the market is at like all time high. Like it seems like there's, like I love a sale. I love a discount. And I know that there are still some that are out there, but everything just seems so just like, I don't know, rip your face off highs.
I agree, Vanetta. I'm the biggest fan of finding a sale. That's why I'm usually looking at the 52-week low column, but there aren't too many sales right now.
And can we talk about who's been the accidental gold bug for her entire life?
I put some respect on your name all the time. I was like, give Liz her flowers. She's been my favorite gold bull for years.
Yes, gold bull. I mean, that's what I meant. So when I used to do the shows with Tony from Mexico, diamond hands of gold.
Well, Liz grew up. She grew up with her dad, with your dad always saying, just keep acquiring it, right?
Yeah. I mean, my dad was a CPA, so he always had he's the one who got me into trading. He bought me Liz Claiborne when I was, and that RIP Liz Claiborne because it's gone. He bought me that stock. But yeah, so he's always been like, stay in the stock market, keep buying gold, keep acquiring it. But I mean, that's kind of what I'm doing in Bitcoin now because I've got him in the back of my head always.
So are you using iBit or what are you using to trade Bitcoin?
For Bitcoin, I'm using them all. I love our platform and I love that there is cryptos on there now. So I have little bits in there. But Vanetta, I'm a lunatic because I need to have a little bit in there, even little bits of each one so I know the price. If it's not in there, it's like,
yeah,
I get that, but I used to have just Bitcoin and Ethereum, but now with IBIT and ETHA, I switched. I closed out my Ethereum and Bitcoin, and now I just use IBIT and ETHA because on top of my position, I can easily use options, and it just, to me, is easier just having those two. So
That
I just
makes
have
sense.
those.
Yeah.
I don't think it matters. Like I think you can use whatever. They're all moving in the same, they move the same way.
And if you put it together, you get Ibiza. I'm so sorry.
I think we could fit right in. I think we could head over to Ibiza and fit right in the disco.
No, that's funny. How long have you been thinking about that one, Vanetta? Is that
I just not that I'm running on not a whole lot of sleep, but it was fine. It was just.
I mean, that should be coined. I like it. I like it a lot.
Well, I will be actually putting out a post later about like a showgirl's guide to trading, kind of like how you have like your prep and your practice, which is like watching our show, to get ideas, and you have like your opening act, which is like your watch list, so you can figure out what's going on.
There you go.
You got your choreography, which is our back testing. You can figure out how the moves go. I was doing a lot here, like I was really trying. But what would be like your showgirl tips for being a trader? Like if you're taking center stage, starting to trade, what are some tips that you have?
I mean, opening act is roll over. Make sure the iPhone recognizes your face and see where the market is. Sometimes it recognizes it, sometimes it doesn't, depending on the morning. But yes,
hey, I think the most important dance for a showgirl is the naked foot dance, Vanetta.
I reposted your tweet. I said it was going global.
Yes, you did. I saw that. Thank you, Vanetta. I knew that was you, so I reposted your repost.
Yes.
A college kid called me yesterday and asked, like, what would be my one piece of advice for someone learning options? And I said, learn how to sell a put, because I think, if I could only do one strategy, that would be my one strategy.
And I think Tastyination is totally counterintuitive. Everybody else is like, they teach you how to buy options first, and we're like, oh, no. If you can own a stock, you can sell a put.
Yeah. I think.
So, Vanetta, what's on tap for this beautiful weekend in Chicago for you? Are you riding the bike?
Hopefully, maybe. Like I was just trying to get, like we call this Swiftmas, like Taylor Swift Christmas. So I'm just trying to get through Swiftmas and all of the shenanigans that are surrounding this release that I've been mentally and emotionally preparing since she announced it, and we've been counting down and having some fun. So I'm going to the movie today. Gonna see. I might go to the movie a couple more times. We'll see.
Now, is it sold out? Do you think?
In the city, some showings are sold out. I'm going to like an early showing, but I think you can still get tickets wherever you are. So,
okay.
But yes, I would like to take the bike out, but it's just been so crazy. Like I went to the gym yesterday in shorts and a t-shirt, and I'm like, it's October.
Vanetta, my pool is still open. Annabelle's having a pool party.
Your pool is still open?
Uh-huh. Yep. There's a pool party tomorrow at the house. We shall see how it goes because I'm going to be gone. God help us all.
You have like your cameras though, right?
Oh, we got cameras everywhere. I have a fundraiser tomorrow night. I'm going to be like this, watching like a hawk. But
they'll be fine. It's only Annabelle home. It's JD's at college. It's not like the boys are.
Girls are good. Like when I would hang out at my friend's house, even if their parents weren't there, like we would just like drink Diet Coke and talk shit about people. Like it was not.
I know. The boys are the ruffians and thugs.
Yeah,
if you will.
I can't believe your pool is still open though. That's bonkers.
I'm closing it the first week in November. I called the other day. I mean, it's great. It's been a great season.
It's crazy how nice it's been.
Yeah.
We have homecoming. Lily has homecoming tomorrow, so they're lucky the weather's so beautiful for pictures.
Well, Jenny, when do you put your boat away?
I did. You know what, Vanetta? It's funny because Logan is on fall break next week. And so a group of his college kids are all going to the condo for his fall break. And so I called and I said, put that boat away right now, because I didn't want all the college kids out on it.
Sure.
Yeah, I get it.
Yeah, so it's away already.
I get it.
That makes sense.
Yeah. Okay, I'm keeping an eye on the chat, and this is funny. So Jason just said, okay, a bit shocking when I logged in. Just got here. What's going on?
Hi, Jason. It's Showgirl Friday.
It's pretty funny. The chat is pretty funny.
Yeah, Yeah, like if you just
People are
log in.
hoping that Frank is not wearing a dress. He might be. We're not sure. Frank is not
We
showing
don't
his job.
judge here. We don't judge here on Tasty Live. Like you do
Yeah.
you.
Honestly, this was pretty nice. I didn't have to do my hair; just plop this thing on my head.
I'm slightly nervous for the rest of the show because I'm sure there's going to be an imprint of this leaf.
Oh, an indentation of that's too funny. Well, hey, let's get this wonderful show on the road. It is a fantastic Friday here on Tasty Live, and Liz and Jenny take over because Tom and Bat are in LA doing the At Work event. Tom will be at the remaining events. So he's doing LA this morning, Charlotte and Austin. He will be at those cities. So if you haven't already, go to tastylive.com/events to sign up. I know so many people ended up wanting to go to LA. It went to wait list. So show up early, I guess. I don't know. Fight it out for Tom's love. I don't know. I don't know what's going to happen there. But for today's show, at the top of the 8 o'clock hour, we got Jamal in. Someone tell Jamal he needs to be wearing sequins, but he's going to recap the week. Shut them down, open up stocks. I love that. Do you know what that is? A little DMX reference.
Shut them down, open up stocks.
Yeah, hold
like
up. Yeah, no, okay, yeah.
I like it.
Yeah,
I like it.
he will explain it to you. But I clocked your reference there, Jamal. That's going to be at 8 o'clock. And then Fast Market. You guys get viewer submitted trades. How much do you love the segments where viewers contribute?
I love it. You know what though? But I love it a lot. I love to, well, we take live tweets on a daily basis. So we do communicate with them quite a bit and almost in real time because they can keep retweeting us. But I love it. They give us ideas. They're looking at different things than we are and we love it.
And honestly, when market's at all-time highs and vol is low, it's harder to find trades. So I think it's super helpful to have what's your assumption in fast market in a period of time where there's low vol and all-time highs. It's easy to find trades when the market's falling and vol's high everywhere, but I think it's helpful for everyone and viewers. Everyone's looking for trade ideas. So
yeah, I mean, you guys have busy lives. You're running a show. Like you can't be, scanning the markets all the time. And it's cool when someone's like, hey, I saw this, maybe there's a trade there. And you're like, hey, thank you very much.
Vanetta, I don't know if you heard, but did you hear Liz and I are taking over last call 2 days a week?
I did hear. How did they wrangle you into that?
We're not sure how that happened.
But that's going to be a welcome addition because I like doing the show with different sets of people because you guys all trade differently and I learn different things from each person that I co-host the show with. So you guys doing, your end of the day recap and overview is going to be a totally different perspective. So I'm actually pretty excited about that.
We're trying to lure, and I'm saying it on air so it happens. We're trying to lure Tim Knight into 5 minutes of our segment. I feel like it'd be fun to have. I like the cross overlap.
We want the handoff again.
Yeah, we want the handoff. We're gonna be nicer. We'll be nicer.
You would be nice. Definite upgrade for.
So he's come on our show before when Jenny's been gone. I've done a full show with Tim Knight, and I love him.
Yeah.
Yeah.
Then at 9 o'clock today after Fast Market, we got a market measure. We're going to take a deeper look into implied volatility and expected moves. Always great. Our research segments have really been dialed in lately. So looking forward to that. And then at around 9:20, Quentin coming in. It is crypto month now here because it's October at Tasty Live. So we've been bringing in guests and Quentin from the trade desk who, again, it's so odd. I remember his dad bringing him into our office when he was 10, and now he works here.
We have a picture. We have a picture. He sent it to me. I'm going to see if I can find it. We have a picture of him, Jenny, and I when he is 10. And he's so cute.
Yeah.
So we'll see if we can find it for that segment.
Oh my gosh, that's so funny. Yeah, but now also he can squat 600 pounds now. So
I know. So smart.
Power lifter.
He is. I love it.
Yeah, it's very random. Just a full circle moment of it's crazy how long we've been here. But he's gonna come in and talk all things crypto. And yeah, that's our run of show. Showgirls, are you ready?
We are ready for the news.
I'm ready for it.
Daily dose. All right, hit me with my theme music.
Our leading story, breaking news,
across the wire, leading story,
top stories, jump in.
today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It is October the 3rd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
I just have to say, first of all, thank you guys for agreeing to do this and, participating in my hyper fixation that is Taylor Swift. I listened to the album twice now. It's great. I love it. It's a bop. Taylor Allison Swift did the damn thing, shaking your ass. It's got bops. I cried. Eldest daughter, track 5. It's fine. It's before I put my makeup on, so it's fine.
I thought it was great. And did you see Rolling Stone gave it like 10 out of 10 or 100?
I haven't been on the internet yet this morning. It was just enough to get up and do all of this.
Well,
I'm not gonna lie to you. I have not listened to it. I will, I promise, but I have not listened to it.
Stream it. Everyone stream it. I'm streaming it right now.
It's getting rave reviews. It was great. I listened to the whole album this morning, just getting ready because it's not that long.
Yeah, it's not. It's for like 41 minutes, and it's a bop. So anyway, let's keep it moving. The S&P 500, this S&P 500 sector gauge points to excessive confidence and an imminent pullback. This guy says that there's 11 sectors in the S&P, but their 5 major sectors hit an unusually low level of correlation, and that since 2023, every time that's happened, it's been followed by a drop in the equities benchmark. I don't put a ton of credence in this, but what are your feelings as we keep just hitting new all-time highs every day?
It makes me slightly nervous, and I don't know how I feel about this. Wait, can you repeat your headline again? How many times when it gets like this?
So there's 11 sectors of the S&P. So the 5 major ones, you can see them here at the bottom of the slide. I know it's kind of hard to read, but it's like technology,
industrial, finance.
Right. So they are the least correlated that they've ever been, those 5 sectors. So normally they're pretty tightly correlated, but now they're not correlated at all. And so since 2023, which is not a very long time, every time that this has happened, that this lack of correlation has happened, the market has then gone down.
Well, didn't TP have some other statistic yesterday, Liz, or 2 days ago when he was on, about when XYZ happens, the market's about to go down as well? It wasn't
his. It was an article that he wanted to talk about and he wanted to debunk. So that's like, this is probably very similar.
That's probably it.
Probably. This is seemingly very, very accurate.
Probably it.
Everyone
his whole point was, it doesn't matter what's happened in history. No one can time the market but what he's saying is people are seeing things like this. And I'm just kind of regurgitating. I'm not.
Sure.
His point was people are reading these and it's almost like clickbait where they're trying to scare people.
Sure.
Yeah.
Yeah. What are you guys doing in the indices relative to each other? Like, are you doing stuff in S&P or NASDAQ or Russell?
You know what's so funny, Vanetta, is I've been I don't have any of that stuff in right now. I really truly don't. I'm in a lot of individual companies, which maybe I knew that this was happening. But Jenny, you're not in a lot of indices, and our show account isn't into a lot of indices.
No, I'm not in any. It's funny because I have read a study that says when vol's low to use the indices use the ETFs instead of individual products. But with the market so high, I'm just trying to cherry pick certain products that I don't mind being into if the wheels fall off.
Sure.
So I don't have any general market ETFs right now, and except we do the 0 DTEs every day, but you're in and out of those, and that's not an overnight position.
Yeah, I don't consider that, the long and hold. I mean, the VIX right now, the VIX is down a little bit today with the market up. The VIX is 1643. So I mean, it's under 17. Yeah.
Yeah. Liz, I put this story in for you. Gold drops as dollar gains as investors take profits after a rally. Gold did retreat yesterday and the dollar pushed higher as investors booked profits after a 5-day rally that saw it reach fresh records. Let's talk your precious metal here.
So I do thoroughly love my precious metal. You know that, right? But so I want to give this, hold on. I got to go into this. This was from Frank because he sent me this morning. something about gold. Gold prices are on track for the 7th straight weekly advance. So I don't know what headline this is, but they're on track for the seventh straight weekly advance, holding near record highs of 3,900 an ounce.
But what I will say is we've been talking about a lot the gold silver ratio, how silver's had quite a run up more so than gold. So a lot of people have been putting on the pairs trade where they're getting long gold, short silver. And that's not working at all today, because today silver is up a lot more than gold is on a percentage wise.
Well,
So-
I mean, the silver has been outpacing gold, but gold's been like your tried and true, straight up. Silver will pop and like hold, pop and hold, which is pretty interesting. I like looking at the metals though.
But today that pair is not looking good.
Yeah, I mean, but both are up. They're just not.
I just said silver's up. Like
to Vanessa's point in the earlier story, they're just not as correlated, right?
Yeah, like just looking at my positions today, because I have the gold silver ratio on just using stock, and my silver, I'm short silver, long gold, and I'm losing 7 times as much in silver as I'm making in gold today.
Wow.
Yeah. So
Okay. That's important. It's kind of clarifying there. So thank you for that. Nikki calls this the presidential portfolio. So you just got to buy everything that's in here. But a company called U.S. Rare Earth jumped 8% after its CEO confirmed discussions with the Trump administration. The company makes rare earth metals, which we need because we get some from China and things there aren't great. So the shares of the company continue to rise in extended trading.
I just Googled this just as you were talking. Not
Yes.
Googled, but I got on the platform. USAR is the ticker symbol, just a little FYI. And it's trading $27 or $25.71.
we have never traded it, so we'll take a look at it. Do they have options, Liz?
Hold please. Hold on, I'm in the curve view. They do have options. I don't know. I don't know how liquid it is, but I like it, Vanetta. I'm writing this down as
Yeah, it's also the other play this week that I mentioned was Lithium Americas.
LAC. I told Jenny about it yesterday.
Yeah.
Yeah.
So put it in the presidential portfolio and let's go.
But I mean, that's what happened. So, I mean, I've never seen things being put in the presidential portfolio before this, so this is all new to me. But that's what happened with Intel. Intel got its pop, and Intel can't stop.
Give me a second, Liz. I got you.
Sorry.
Yeah, no, I'm just kidding. Yes, but you're right. And this is sort of unprecedented. But if it gives traders an opportunity, we'll see what those opportunities are. In other commodity news, oil, while gold was hitting its 7th weekly high, oil is on track for its steepest weekly plunge in 3.5 months. Oil prices did rise slightly after 4 straight sessions of declines. What are you guys doing in crude oil?
We just put something on a crude oil yesterday.
Yeah, we just sold puts in. I think we just sold puts in crude in the micro crude. It's nice. There's the MCL, so it makes it accessible to any size account.
I think Nikki trades that as well, or Mikey does. One of them.
Nikki and Mikey, I love it.
Can
you call me Lizzie? Because it's Nikki, Mikey, Jenny, and I'm just Liz. Can I be Lizzie?
And Katie. Yeah, everyone's got
Everyone's got an E at the end. I want to be Lizzie.
We got to talk about the softs. Soybeans follow through higher on Thursday. Also corn and wheat, but soybeans could be majorly in play as Treasury Secretary Scott Bessent says that there could be some sort of relief package or bailout plan for farmers, and that would come on Tuesday of next week. But all the softs were higher Wednesday and Thursday.
Well, and I read an article yesterday, and once again, so this is not me, this is not information for me, but that China has not bought 1 bushel from us.
Not 1 bushel of soybeans.
Not 1 bushel, right? not one bushel, yeah.
Right. So the soybeans are going in the government portfolio.
Well, we don't have any positions on in corn, wheat, or soybeans right now. I don't think so.
The ironic part is I pulled up the soybeans chart, and it looks like it's mid-range. I did have a pop-up the last couple days since October 1st, but it's probably because they're getting the bailout, or news of.
Yes, we will see what happens, but softs are in play. Hey, here's something I want to get your opinion on. Vlad Tenev, the CEO of Robinhood, says that tokenization will become the default way to get exposure to stocks, and that it's an unstoppable freight train that's coming to markets. I was kind of like, I didn't get this, but the way that Tom explained it, it did sort of make more sense to me. And that's basically in the same way that Vlad is framing it, that it gives people outside of the US exposure to underlines that they wouldn't have exposure to. What are your thoughts on tokenization?
I mean, hey, I hope so. I hope it's a freight train that happens, because I mean, we can't even trade our own stock.
Oh, yeah.
But we
Right.
would be able to. So this would be, I hope this freight train keeps coming at us as fast as it can, because I would love to have access to some things that are, in the European markets and things like that nature.
And it was interesting when we were in Germany, we talked to so many people who were from Europe who said, I can't trade this or I can't trade that. So it would be nice if everyone could trade everything. So
Yeah.
I agree. I mean, to Liz's point, like, we're owned by IG, and to trade IG, I have to like make a phone call. He makes a phone call, wait to hear back. It's not like I wish we had an instant button to just trade it on our platform.
It is funny when you talk to everybody, because of what we do for a living. They're like, "Would you want us to work it?" I was like, "What do you mean work it? I can see the bid." Like,
Like, what price do you want? And do you want to do market or limit? And we're like, hey, it's crazy when we're trying to trade any of it.
yeah.
And then I asked this question to Bat too, and you guys as well. I'm going to pose it because coming from the time that you were on the floor to like what we're seeing now in the markets, like, did you ever think we would see, one company being worth $4.5 trillion? Like, did you ever think like things could be tokenized and sort of just in this virtual block? Like, it just seems so unbelievable for especially for you guys who started out on the floor.
I mean, what was the first hat that you saw on the Dow Jones hat, Johnny? Wasn't it like
1,000? What
It was like 1,000.
It was 1,000. Oh, wow.
Oh yeah. Once it crossed that, it was crazy. So yeah, no. Did we see this coming? No. But the only thing that's constant in this world is change, right? So
I think when we started the show, the S&P was around 200.
I don't know about two, maybe
Wow.
I know. I think
You mean
if
SPY.
we go back,
You mean
we started
SPY,
in-
right?
Yeah, SPY. Like when we started in 2011. When we started in
Hold on.
2011, wasn't SPY around 200?
I'm only in 2010. Oh my goodness, Jenny. Hold on. Yeah, SPY was, I'm going to go December of 2011, okay? Actually, in January of 2011, SPY was 125.
Oh my God. That's bonkers.
I know.
I mean, it's 670 right now. We're not talking about SPX. We're talking about SPY.
Sure.
But yes.
Right. Yeah. But still.
I don't mean to break in, but someone was asking, and I saw Frank pose this question: are we going to pop into our Twitter at all today, Liz? Will we ever pop into Twitter in case anyone has any questions that to post on Twitter?
Sure, we can. I mean,
Yeah.
I can keep an eye on things as well. Like I've got the chat and I can pull Twitter up. Like I said, I told you yesterday, I got monitors for days, and computers are
Okay.
good.
Yeah, so we
So I can
can.
do that.
So if anyone wants to post anything on Twitter, just use the hashtag LIZJNY, and we can pop into Twitter today. I can only imagine if Mikey's up and watching what kind of pictures he's going to make with these outfits.
Okay, the chat, I will tell you, I have the chat up sometimes, but it's hard because it builds on top of each other. So if there's something you really want us to see, put it in Twitter. Put the hashtag LIZJNY. Vanetta, just a little for you too. If you ever want it to come on our live show, like if you want to post something on social media that you want us to address live on the air, put the hashtag LIZJNY.
Boom. Also, I know the password to your Twitter account, so I could also do it that way. I'm just kidding. I don't
I don't know if you do, because I keep that thing changing all the time.
Well, one time Liz and I were on the road and they put us in charge of the Tasty Twitter account. And then when I got back home, I forgot to change out of it. So then I was posting like silly stuff of like clearance or the kids, and it was going
to the main corporate account. Classic. Hey, speaking of stuff we never thought we'd ever get to see, two executives at Vanguard are laying out their vision for quantum-powered investing. Last week, IBM helped HSBC pull off a quantum computing milestone. Now, IBM wants to further demonstrate quantum's use in finance. Basically, they can make these crazy hard technical problems about building like portfolio optimization, and they recode it into a quantum problem, and then the computer solves it. What are your opinions on quantum investing?
So Jenny's got more opinions on quantum, but I'm just going to say brains over bots.
I was gonna say, ask Julia. That's what I was gonna.
I don't understand this. I think it's cool to look at. I love how like steampunk it looks.
No, or this week, all I said to Liz was, so my son's an engineer, and I was just there for his engineering fraternity parents weekend. And my other friend has a daughter at another university who's an engineer. And if you ask all those engineers, what would you rather invest in right now, quantum or nuclear? And they all say nuclear because they think that's like more on the forefront, and quantum's so down the road. That's just from these college kids. I don't know. That was from my survey.
Interesting. Okay.
Now her college kid's a lot smarter than mine. When I asked him what to buy, he gave me some ridiculous stock that he heard from someone.
Here's a non-ridiculous stock. What are you guys doing in IBM?
Oh, you know what? IBM. That's had some movement. So IBM's been in the news lately too.
I've seen more IBM commercials lately than I've ever seen before.
I told you, I told Nikki on the show yesterday, I'm doing all the throwbacks. I'm doing stories about Qualcomm and AOL and IBM.
You're right. So from like the beginning of August to now, which isn't that long, it's gone from 230 to 290. That's a pretty big bump for IBM. You're right. This is a throwback.
Yeah.
What's old is new again, Vanetta.
Have a party, Big Blue. Get into it. Hey, U.S. banks are pretty jazzed. They expect victory in new capital requirement rules as Trump regulators are revamping things. Regulators are revamping bank rules. Big lenders expect their capital requirements could fall, which would be a stunning victory for the industry, which faced a big hike for capital requirements under the Biden administration. The Trump administration is aiming to cut red tape. Banks will be first to report their earnings pretty shortly here. Any insight?
The banks were down this week because we have a position in Citigroup, and we saw Citigroup fell a few dollars this week. So they weren't really following. It's not, Liz, I know the market's up, but it wasn't like yesterday, it wasn't up that much. And I think like, even though the market's been going up, Citigroup has been falling. I haven't been watching the rest of them.
So I think most of the financials have been falling, right? So Citigroup, and we know that because it was trading 103 about 6 days ago, and now it's trading 97.29. So the banks have not, and I was listening to some report this morning saying that the last of the Mohicans, or the last of the ones that needs to rise with the rest of the market, is the banking sector. So maybe this is the catalyst to push them over, and they can.
Well, we will see, because they're going to be first to report. Getting to some tech news real fast. Delays to President Trump's UAE chip deal is frustrating Jensen Huang of NVIDIA. The multi-billion-dollar deal to send NVIDIA's AI chips to the United Arab Emirates is stuck in neutral 5 months after it was signed. What are you guys doing? Like I said, NVIDIA did hit all-time highs this week. Company worth $4.5 trillion. That's not a real number. What are you guys doing in NVIDIA?
It's NVIDIA is all-time highs again today because it's up, a tiny bit. But we don't have anything in our account, but I have NVIDIA.
I can't get into something that's just so high. I can't. I have a hard time. So like Liz still has NVIDIA. She still has Palantir. But when something has gone through the roof like that, it's hard for me to stay in it.
Yeah,
I get it. Intel stock, as you also mentioned, Liz, earlier, Intel stock is up 50% over the last month. That puts the U.S. stake in the chip maker at $16 billion. Intel shares were up 3% yesterday. What a time to be alive.
Is it a self-fulfilling prophecy when the government invests in you?
I guess so, yeah.
Do you know what I'm saying? Like that.
The government can't go to zero.
I know that Nikki's probably been talking about this, and you kind of mentioned that before. But I mean, with those other ones, you have USAR and LAC, and now Intel. Like, I've never seen the government take stake in companies before, ever in my life.
They also own a part of NVIDIA's chip sales in overseas too. So.
Oh, okay. Well, then there's that as well. That's all-time high.
Even before that, like we've all been getting long Intel, hoping for a pop, hoping for Intel to get some momentum.
But it didn't get any momentum until it had the government sales underneath its wings, and the wings underneath its sails. It didn't get any momentum. It stayed flatlined for a year and a half.
But like before this, the government was putting money and investing into Intel long ago because they were putting money into, there were this new big plant that
Well, the CHIPS Act, there were subsidies, right?
Sure, they were putting money into it, and it still wasn't going up. So I think this Intel move has been a long time coming.
Yeah, but the CHIPS Act is different than an investment in the company.
Yes.
It's totally different. The CHIPS Act is different than the government is taking an investment in Intel, and that's the wind underneath its sails.
Yeah.
But they're not the only one investing in Intel. Other companies are investing in Intel too. So I think, I've been waiting for Intel to pop up for a long time. So I looked at my Intel position yesterday and I thought, do I want to do anything with it? And no, I'm holding on. I'm holding on. I hope it keeps going up.
I think it's a self-fulfilling prophecy. That's what I'm saying. I think once the government decides to, it's everybody's like, oh, well, if the government's in, they can't let that one fail.
Hey, just real fast, OpenAI wrapped up a $6.6 billion share sale, which now values the AI company at $500 billion. The sale actually fell short of the $10.3 billion that was authorized, but this just indicates that insiders see this as a sign of employee confidence. I don't know if you saw this. I don't know if we can play the video if you have it, but OpenAI has a new app called Sora, and it wants to be like TikTok, but everything on the app is AI generated. And so they put out this press video, and it's the creepiest thing I've ever seen in my life. I think we have it.
Well, let's see.
Do you have it? Let's see it.
Yeah, I don't know if you could show it. You got the start. I think it starts at like 139 there, John, if you can start there. Or Beth, I'm not sure who's switching.
Was this the woman? Is this the AI woman?
No, that's Tilly Norwood. She's like the AI actress. No, this is just Sam. This is AI Sam Altman and a bunch of AI scenarios, and it's creepy. Watch this. None of this is real. This is all AI.
That's why we're launching Sora 2 inside the Sora app, allowing everyone to push the limits of their imagination and create in ways we never thought possible.
That's not him on camera. That's AI here. I don't know why she's riding a duck.
Yeah, why is she riding a duck?
You can make images just based on text prompts, but it skyrocketed. It's now like the number 3 app in the App Store. So,
wow.
What you will. Hey, in other news, Amazon is in a little bit of hot water. They're facing FAA and NTSB probes after 2 of their delivery drones crashed into a crane in Arizona. Oh no, but I need my stuff.
Oh no.
I'm not sure what Amazon stock is doing, but
I'll take a look. Hold on.
Has anyone ever seen a delivery drone flying with a package?
We don't have them in Chicago because it's too dense here. But I've seen videos like in Texas and in Arizona and other places.
Yeah, I don't know.
I'm not opposed to it, but yeah.
I've seen lots of drones, but never a delivery drone.
Yeah, it could be dangerous, so whatever. Skipping a story here. Boeing announced their 777 is going to be delayed till 2027. At least that all lines up. Delivery of Boeing's 777X jet is being pushed back to early 2027 instead of next year, so we can't get this Boeing going. What are you doing in Boeing?
I don't have anything in Boeing right now, but
Boeing's trading 216.76. The only reason I say that is as soon as it gets to 217.
Yeah, we're gonna do the 217 calendar today in Vanessa.
I mean, it's kind of mid-range. Boeing's been between 240 and like 200.
Yeah, I wouldn't mind selling some puts in Boeing or doing like a Jade Lizard or something.
It's got a 19 IVR, which is kind of low, but.
Hey, FICO, Fair Isaac credit rating company, saw their stock surge yesterday, up around 20%. Not sure it was up even more after hours. But the company said they would license their credit scores directly to mortgage resellers who can then distribute FICO scores directly to borrowers. It would then allow basically mortgage lenders to bypass credit bureaus for credit scores. So that sent shares higher.
Okay. Hold on. Do not look at this, Jenny. Do not look at this. What price do you think FICO is trading?
I didn't even know it was a public company, honestly.
I didn't know it was Fair Isaac Corporation, but just make a wild guess because you're going to be, and I'm telling you, it's crazy.
1,000.
$2,100. $2,000.
Yeah, but it started yesterday at like $1,700.
Yeah, yesterday it almost started. Well, the day on October 1st, it was $1,500. It went up to 2,000, and now it's 1,800. I mean, FICO.
We're in the wrong business.
No, we've never looked at it. Does it have options?
I mean, take a look. So does it have options?
I don't think it's a liquid product. I don't know.
It's got options.
It does.
Only 1,000 shares. I mean, I know it's pre-market, but 1,000 shares have traded. 1,000 shares of a $2,000 product. That's insane.
Woof. Hey, this is great, and I can only do this because I am with you on this show today. But should more U.S. companies offer paid menstrual leave? Yeah, let's get into it. Most workers are offered family and medical leave or sick leave, but a rare employment benefit is getting renewed attention: paid period leave. Amen. Finally, her first 100K, a personal finance career platform, has joined a short list of other U.S. companies that offer their employees paid menstrual leave for those experiencing period symptoms.
I mean, any guy I would know would be buckled at the knees if they ever had a period. But
right?
I would say just take some Advil or a leave and get to work.
Yeah, because that's why women have a higher pain tolerance.
Boom. Get into it.
You heard it here first. That's why we make better
I love
traders.
everything about this, and I say it's about damn time.
This is why I'm gonna transition this into trading. This is why we make better traders, because you have a higher pain tolerance.
There you go, man. I mean, those are just facts. Hey, I want to offer congratulations to the Chicago Cubs. They have won a postseason series for the first time since 2017. Bring on the damn Brewers. The Cubs took the 2-game lead over the Padres, cinching their win and advancing. So
okay, I've got another question for Jenny. Jenny, what is the date that the Cubs won the World Series last time?
Oh, it was your birthday.
Correct.
It was Liz's birthday. It was Liz's birthday, and the Cubs won the World Series. And I feel like we were in Florida.
No. It was my 40th birthday. We were not in Florida.
Oh, okay.
That's very Ferris Bueller kind of your life that it synced up like that. November
2nd.
What year?
Well, if I was 40, it would have been 2016.
2016.
Yeah.
Wow.
So good. if you ever need to phone a friend, call me. 2016.
Anyway, so funny. Hey, finally today for my viral video of the day. I'm still doing trader food videos, so I scour the internet for food for traders. And the reason I'm bringing this up is because this restaurant also has a location in Lombard, Illinois.
Listening.
Yeah. So it is a BYOB at this gyros truck, and this looks so good. Watch this. You bring your own bag of chips, and then for $10, they fill it with all of this stuff. Yes, you bring your own bag of chips and you give them $10, and they put all the meat and the sauce and the toppings and the fixins in there.
My son would love that.
I know.
Constantly making walking tacos with whatever we have in our kitchen. I love it. I'll try it.
I like it. You should try that, walking gyros instead of walking tacos.
Yeah, I'm in.
Looks good. I get
it.
Does look good. They have a location in Lombard, Illinois. So do with that what you will.
I love it.
Liz and Jenny, this has been one of my bucket list life moments. Thank you for indulging me in this ridiculousness. I'm sincerely grateful. What's coming up next?
We've got confirm and send up next, and I got to take this off. It's now squeezing my brain.
A showgirl works through pain.
I have so much fun this weekend. Enjoy the show. If you want to come again on Sunday, I've got an extra ticket.
There you go. Stream Life of a Showgirl. We'll be right back. You're watching Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong!
Hold on.
She's wrong, I'm right.
High school party, high school kind of.
Yeah, because it wasn't high school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college, I went to a different college, but we both ended up at the CBOE together.
Yep.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Hello, everybody, and welcome back to Liz and Jenny Take Over the Morning. It is, now we're going to jump into Confirm and Send. Are you ready, Jenny?
I'm ready. I mean, I love Vanetta's idea and I love the Taylor Swift morning, but I am happy to just be in a t-shirt and got the rhinestones out of my hair.
Oh, God, I'm going to lean in so everybody can see the damage that it did to my forehead. It's all right. We're back. We are back with Markets Live. Listen to this, though, Jenny. Spoons are almost going to be red. They're only up 75 cents right now, between $1 and 75 cents.
You know what I'm so excited about today, Liz? Is that we're going to be on air at 9 a.m. so we can put in an SPX 0 DTE.
I know. I was thinking the exact same thing. We can do it live at the time that we do it. Give or take 5 mintes, because that's what the studies always say.
Yeah, give or take 5 minutes.
But we're excited. Okay, so with Jenny and I, we like to make the shows our own. So we're going to take a little bit of a different take on Confirm and Send, meaning that we're going to jump back and forth between the questions and the platform to show what we're talking about.
Okay. All right. Fire up the first question, John. Let's see. Confirm and Send. First question. Can the ladies explain, the big lizard? Yes, this came in. We had this question come in the end of the show yesterday on Twitter. We thought we would use it today. Do you want to jump into the platform, Liz? And we'll go over a big lizard. Vanetta talked about she mentioned Boeing. She mentioned IBM. Maybe we look at one of those for a big lizard.
Those are great ideas, and I love it. I would like something with dollar wide strikes because it's a little bit easier. Boeing and IBM both have $5 wide strikes. I'm fine with that, but let's jump in the platform so Jenny can take a look at what we're looking at. Agreed. Let me look at what we can do. Can we jump in the platform, John? I think so, right?
Yeah, we can. Yeah, here we go. All right.
Okay, so then I'm going to go to IWM. Is that too high?
Yeah, I was just trying to think of something I wouldn't mind getting long, because if you're putting on a big lizard, it's a neutral to bullish strategy. Your risk is to the downside. Something you don't mind getting long.
Okay, so we'll try to go with Boeing. The other thing I want to show too, while we're here, because I can, is if you go to here, I'm just going to go to the actual front homepage of this. Why can't I get out of that? I can show you where you can find the big lizard, except I can't get out of this right now.
So, but on the tastylive site.
If you go to tastylive, you go to shows and then go to Liz and Jenny strategy series. You can go right to the big lizard, which is right here. And we will talk slowly through that. We talked about it yesterday, but I do like to visually show where you can find it. Shows, Liz and Jenny strategy series, there's the big lizard.
Okay, so the big lizard starts with selling an at the money straddle. Again, it's a neutral to bullish strategy. So you're getting a big chunk of theta. So you start with selling the at the money straddle, and then you just create a call spread. You create a call spread, you define your risk to the upside, but you don't define your risk to the downside. So here we have a $15 wide call spread. Yeah, I think that worked perfectly.
Well, I just wanted to show how I got there. You were talking, which was great. So I was going to let you talk through this. Like I just started at the expected move, but this green bar didn't go all the way, so I just moved it down.
Yeah, so here we have a short $15 wide call spread. We're collecting over $15. We've got the naked short put. This is a big lizard where you're selling that short put, but you're getting the extra oomph of the call spread. It makes the strategy more neutral than bullish, because instead of collecting $9 on that put, we're getting almost $16.
So, and let's take a look at it on the analysis page. Here we go. So yeah. You see this on the analysis page. The big lizard is neutral to bullish, to Jenny's point, meaning like it can meander up and you're not going to lose any money. Now, we would typically close this. We're not playing for 50% here.
No, on a big lizard, when we start with an at the money straddle, we're playing for like 15, 20%, somewhere 10 to 20%. If we made 10% on that, it's $158. So we'd be fine with 10%. And it doesn't take too long to get 10% on a big lizard if we kind of stay in this range. Now, this would be going through earnings.
This is. That's why Boeing was a weird, I appreciate what you're saying, but Boeing was a different example. Can I just walk through one real quick in IWM?
Sure. I was looking for something I wouldn't mind getting long. I'm not going to go get long IWM.
No, I agree with you. I'm not going to get long IWM, but you can kind of set it up a little bit differently with dollar wide strikes. That's all I'm going to show real quick. Just went to the November. There is no earnings. To Jenny's point, you start with the at the money straddle. And then you're going to buy something, right? Where would you buy something?
Wherever you can buy something and have there you go. And then you could keep tweaking it. Yeah.
This is giving me risk to the upside. There we go. This is going to be $10 wide. So you've got $10 on the IWM, and I'm just going to go to the curve view. So you can see this here. Ironically, Jenny, we were getting $15 using 5,000 in Boeing. We're getting $10 using 5,000 in IWM.
Yeah, because the vol is higher in Boeing. They're about the Boeing's a lower price. It's lower price than IWM, but the vol's higher. So here's a very similar situation. We've got $200 and something product. To get no risk to the upside in IWM, we had to make the spread around $10 wide. We're only getting $10.84 using 5,000. But what's the volatility in IWM if you go to the trade page?
Let's go back to it.
Volatility is 14 or 23.
23.
And if you go to Boeing, what's the volatility in Boeing in November?
In November, it's a 40.
40, which is why we were able to get $15.
So much more.
$15.
But that is the setup. And there is a big lizard with a fat tail and things of that nature as well. I know we have to keep an eye on the time because we got Jamal in 10 minutes. So we have two more to get to. So let's pull up the next. What's your assumption? Do I have to stop sharing? I don't. Okay.
Okay, here's the next one. This says, I want to get your opinion on some of the zero DTE strategies. I have been listening to the different strategies between Jejune, Iron Condor, Iron Fly. I like the Jejune and it was nice on up days, but then I had little success when I was trying the iron condors. I have not tried the iron flies yet. Wondering your thoughts between which would be more consistent with less P&L swings.
And Jenny, you're going to find this fascinating because you told me to cut this down. The email was 6 times longer than this. This is the watered down version.
Yeah, that's what I said. Like, don't send the whole thing.
Yes. So it was this big, but so they were talking about the study that we did with TP the other day, and the study with TP, and we did it, and I will actually show that as well, where you can go back and watch. But it was talking about length of streaks, and it just talked about the $10 wide iron condor. So I think that's where this question was coming from, is that $10 wide, not iron condor, I'm sorry, iron fly, I misspoke. They were talking about the $10 wide iron fly, and if you take it off at 10% or take it off at 25% or let it go to expiration. And now 10% was the winningest of winning, 25 was good. Going to expiration, it was bad, because if you're talking about SPX from a $10 wide perspective, let's jump into the platform if we can, John. So I think I would like to get your take on this, Jenny. So if you're doing a $10 wide, I know we're not open yet. I'm well aware of that. But if you're doing a $10 wide, you'll get between $8. Here it's $8.80 because we're not open yet. And this is the wrong strikes because this isn't where we're trading. Hold on.
Yeah, but again, we're not open yet, so the prices haven't.
But it'll be around $8. But the logic behind this was the streaks of winners are pretty big if you're taking it at 10%, and your drawdowns are a lot lower. But the point was, if you let this go to expiration, Jenny, if you're putting on a butterfly, which is essentially this, let me clear this. What are the chances that you're going to pin this strike?
Slim. I don't know the exact probability that you're going to pin that strike, but it's slim, very slim.
Yes.
I mean,
so
your pop on the trade is 20%, but that's your pop. That's your probability of making at least 1 penny. So the chance of pinning that strike is very slim.
In a $6,000 product, this is almost a lottery ticket where they're saying, do not let these things go to expiration. So that was kind of the question where it came from. There is, with these strategies, and the next one kind of springboards off this, but these strategies that we're doing in the 0 DTE, the results look amazing. And you got to remember, Jacob is doing them day in and day out, and they're just looking at these. But the key, the crux that we get from this iron fly is 10% is key. If you let this go, like 90% of them were losers.
So the study you did with TP, was it all on the iron fly, just looking at the iron fly, 10%?
All iron flies. All iron flies, 10%, 20%. And you know what, Jenny, I'm going to do that real quick for you so you can see some of the things. Liz and Jenny show, here's TP&I, and you can go straight to these slides, okay? So it was streaks and 0 DTEs. Oh, yeah. All of it was iron flies. But take a look at this. So this is the winning streaks and the magnitudes of the runs. So when you look at this, TP actually explained it pretty well to me when I was glad he was on the show, because he's saying this is your, the losing runs are so small compared to the winning runs at 10%.
At 10%.
Versus, watch this. Here's 25%. You'll notice that the magnitude of the losses gets bigger and the numbers get bigger. And then versus, look at this. This is unmanaged. It completely flips the script, and they're almost all losers. And you can see the winning ones are a lot less.
Well, when you're at the money, I mean, we were just kind of talking about this with Big Lizard. When we're selling the Big Lizard and we're selling the at the money straddle, and we're right there, right, call and put right at the money. We're never looking for 50%. We're usually looking for 10, 15, 20% on those Big Lizards. Similar with these 0 DT iron flies, you're right there at the money. So you have to, when you're risking so little too, you've got to think you're not going to hit like too big of a percent.
The ironic point about what you just said, and they kind of all springboard off each other, is this is the Big Lizard.
Yeah.
This is the iron fly. You're just eliminating the one option.
Right. I'm curious, and again, like how a Big Lizard would perform in the 0 DTEs.
That's so expensive. But there is a common sense slide where you
could go buy something, even if you spend $1. Even if you spend $1, Liz, look at how much you're getting. You sold it.
Oh, yeah, that's bad. Hence the $21,000 or $260,000.
So here a Big Lizard, you're taking in 1430. Now you don't have that very little defined risk, but if you're looking for 10% out of that, it's $140. I wonder how long it would take to get that.
I mean, that would be a good story for another day. It's still a big drawdown. So the person's question was, and I think I have a different answer than you do. They're looking for something that has a lower drawdown, and that was the question that I got from there. What do I do with the lowest drawdown, or how do I? Because they suffered a big loss with an iron condor. You've been doing those iron condors where you're risking 1,500 to make 500, right? Ish, where they're $20 wide or $15 wide, and you get one of those losses, and it hurts a little bit. And I think with smaller accounts with a lower drawdown, I've been leaning towards and liking, and I think it's because I've got my son in my ear, the iron flies at 10%.
Hey, you know what? They can't afford. I'll tell you this: like our boys, they can't afford a $1,500 loss on 10 DTE. They can't. Their accounts are too small. They don't make enough. Like they can't afford a 15. They're not going to take a $1,500 in risk in one trade. They just don't. So, so the iron fly makes sense. And if you don't want if you don't want that risk, the iron fly makes total sense. Now, if you're trading, you're going to have a lower probability of success with the iron fly and the less risk. You're going to have a higher you're going to have more wins with the 20 delta iron condor, but you're going to have bigger losses when you do have a loss, much bigger.
And I think that's, in the words of Dr. Jim, for every gimme, there's a gotcha. And when we do these studies, it's just a menu. So I think the answer to the question is we can't say, because it's a personal question, right? It's a more of a personal question on how much risk you want to take. Because Jenny, you've taken a $1,500 loss on these, but you can live to play another day. But if you take four $1,500 losses in a row, you might be a little gun shy.
Oh, I don't remember what was a week or two ago when I was doing the iron condor, and I had one that, I took quite a big loss on. You figure quite a big loss on, I was like, geez, that just wiped out my winners for the last 2 weeks. So that's the risk with those wider ones. Now we have proven success with them. We see people like Blue Wackadoo and Jack Tucker doing those wider ones. They wouldn't keep doing them if they weren't having success with them. But you have the risk of the like one big hit can wipe out a bunch of winners.
And we can't, we say this all the time, you can't time the market. So when you do get in, if your first one is a big loss, it is kind of hard to jump back in and do this again, right? We've all been there with certain trades. I mean, I've done that with I loved the stupid stuff. Like, remember I did the $1,600 calendar, and I was like, oh, like I'm never doing those again. You know what I mean? If it's the one time that it loses and it's your first time, it's harder to do, but it's a personal question.
So the iron fly is a good one for beginners for sure, and even advanced traders. Like you've been trading forever, and you've been doing the $10 wide iron fly.
But I do like it. And my question, and I do need this, because of all the research that I've seen from Jacob studies, is you're better off multiplying your he hasn't said this. This is my interpretation of his research. He has not said this, and so I don't want to put words in his mouth. But if it is true, and that kind of springboards into our next question, which you know what it is. So let's actually go to the next question, if you don't mind, John, because this will actually answer some things too.
Okay, if taking profits at 10% on an iron fly is so consistently profitable, why are the institutional traders not just putting on thousands of these each day? Or maybe they are, and maybe they are, really, honestly, like who knows?
And the volume is so high, but this is what I was saying. And I this could have said love Liz, because my question, this is when I'm looking at the research, and this is my interpretation, I'm much better off I just threw whatever in, this is an iron fly, doing multiples of this at 10%. And I'm exaggerating here, but multiples of this and taking 10% versus widening it out from what I see.
From what you've been doing?
No, from the research that we've seen consistently from the monetary value. So I don't know. That's why I would love to know, what is it better? Is it better you and I both know that with durational trades, if you're going to do a multiple, you're better off getting wider. I don't know that that's true in why am I doing this? I don't know that that's true in these. We don't know. We don't know if they're doing thousands of these.
I don't know what the institutions are doing. I don't. Are they Are they doing these 0DT trades? There's more. We know there's more retail traders. The retail traders have like surpassed the institutional with these 0DTEs.
The retail traders have. Can I mean, I'm going to ask you a question. I think you're going to have to answer it in theory because I don't think you know. But if you are an institutional trader, do they just give you willy-nilly that you can just be like, this is what I'm going to do today? I don't think so.
I don't know. I don't know.
So do you see what I'm saying? And maybe that's why the institutional traders aren't doing it. And it's more retail because they can do what they want.
Maybe. Yeah, I really am not sure. I don't know. I mean, maybe institutions are doing this.
Maybe they are, but you and I both know that the retail trader has surpassed the institutional trader in the 0DTEs.
Or maybe Jacob and Tasty, these are new. So, right, these are new, and we have our research team and Jacob started these studies. We've been doing these studies for a long time, or as long, almost as long as these have been around. So maybe Tasty is one of the first to market with doing studies on these 0DTE and how these 0DT strategies perform. So maybe Tasty is like some of the OGs.
That's what TP said. TP gave us the credit for all the retail volume in the SPX.
Yeah.
It's
now,
a real
now, I know we usually, for most of our for these SPX trades, wait until 9 a.m. But do you ever try to put in? So let's say we're up 375 right now. So that would put us at like 67.20. So if you go to 67.20 and do the $10 wide iron fly,
Can you see the platform?
Yeah, I can see
that. I want to make sure.
Oh, but the viewers can't. Okay. Now they can. So let's say you go to where the at the money is going to be on the open.
So I think it's more. I mean, what Jenny and I are both looking for is where the calls and puts are the same price, and it's right here. But it's probably going to open 67.23. Right?
No, I was looking at where we closed at the end of the day yesterday and adding spoos up a 3. So I was at.
Oh, that's what I said. I said 67.23. So you kind of look at where the calls and puts. I've done this before the open. It's still that same process like you do in the VIX. You see where the calls and puts are about the same price.
So I just always wonder on the open, but if we put this in before the open and put it in for a hefty credit, like put it in for 875 or 880 or something, put it in for like a credit larger than we would usually get on this, and then just to see if we get filled on the open.
Sure. I'll put it in 890. I've gotten filled 890 before, and usually those are dead on wrong, but it's before the open. Every time I've gotten close to $9, it's gone.
Well, let's just throw it in and see. I mean, it's only $110 in risk. And what I say is like ask for a crazy price and see if on the open, in the mayhem of the open, it fills.
We've never been able to do this before, and now we can. I like it.
Now we can. And we'll still get on 9 a.m.
So let's take it. I'm keeping an eye on the time. We've got Jamal waiting in the wings at 8:10. Is that correct on the schedule? So let's take a very quick break, and when we come back, we'll bring on our friend Jamal. All
right, stay tuned.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
everybody. Welcome back. We are delighted to have our friend and yours, Mr. Jamal Chandler. Thanks for joining us.
Ladies, how you doing? What's going on?
Welcome to the show. Welcome to the show.
There was question whether you were going to be dressed up or not, but we went with the all black theme today, and I like it.
Yeah, I saw the outfits earlier. Life of a Showgirl. It's out today, right?
It's out today.
It came out at midnight last night.
Yep.
Nice. Remember when albums used to come out on Tuesdays and you go to the store and you go pick it up?
On Tuesdays? I don't remember Tuesdays.
You don't remember that? That was always Tuesdays. It was always Tuesdays, right? When we'd go to the store and pick it up. It was always a Tuesday, I thought.
My dad,
you're way hipper than us.
My dad was in a band. My dad was in a band and a DJ, so I feel like he got access to everything. He would just bring albums home. I don't ever remember standing in a line.
Even the stuff that you wanted?
Yeah.
Oh, wow. Okay.
No, her dad was cool.
Oh, nice. Oh, okay. Okay. Speaking of cool, I was at the Cubs game yesterday. It was so fun. Oh my God. A clynching game. You gotta love it. It was so fun.
Amazing to watch. It really was.
Oh God, it was really good. It was, I mean, the energy in there was so good. I haven't been to like the last clinching game I went to was I think it was like 2010 when the Hawks were in it was like a 3-1 game in a series, a 5-game series. So all they had to do was win that basically. But still, it was a clinching game, and just the energy in there is like in a clinching game is so amazing. So yeah, yesterday was just great. It was awesome. Great seats too by a buddy of mine. It was awesome.
Oh yeah, you said you were about what, 10 rows back?
Yeah, like 20 maybe. Yeah, like 20 right behind home plate. Yeah, and he hit me up. Like it was funny because I was on Option Trading Concepts Live when he hit me up. Obviously, that's new for me this week being there, which by the way, that's changed my whole life without realizing. Mostly because I eat lunch every day at 11 and now I'm like completely different and changed on that. But yeah, he hit me up during the show. I didn't even realize to look after the show. And I was like, oh no, like I'm thinking like, oh, he's like, are you in? And it's like an hour ago. And you know, when somebody hits you up, are you in? And it's like an hour, you might be out. And I was like, I'm in, let me know. And he's like, I'm in. He's like, you're in. I was like, yeah.
If you were 20 rows behind home plate, did you see how mad John Cusack was at that call? It was so funny. So Jenny and I went to the Cubs game with the SIBO, and so we got a picture with John Cusack. So we know exactly where he sits, and he's directly behind home plate. And it was the 9th inning, and some call, he stood up, and he was so mad, and the camera pans to him. They're like, "Don't make."
Yeah. I do remember maybe seeing that. I do remember. I was definitely in that general vicinity.
That's what I'm saying. If you were behind home plate, you were right by him. He's in the front row.
Yeah.
He wears like a hood. You can't see him, but he took his hood off, and he's standing up there like this. Like, oh my God.
And he was. Yeah, I didn't realize he was there, but I should have known. But I mean, you assumed everybody was there. They showed Vetter and Chelios on the big screen at one point in time. Jim Belushi kind of like said the "Let's Play Balls" deal. Arrieta and I forgot who the other pitcher was. Did the 7th inning stretch. It was awesome. It was great.
Oh, so cool. Fun.
Yeah,
we're lucky enough that the SIBO takes us to the Cubs game, and they have amazing seats. So Liz, I don't know about you, but since they took us to those seats and it was on our Ticketmaster account, now I get emails from Cubs of, would you be interested in buying season tickets? I bet after this win last night, they're going to be harder to get.
Oh, they're hard to get at. You have to get on a wait list for Cubs tickets always. The Cubs aren't like the Sox.
Yeah.
No, I don't know, because ever since we went to sat in those SIBO seats and I bought tickets one more time when I took Lily, now they're sending emails to me about
I think it's a wait list. It's real hard to get Cubs season tickets.
Yeah, like you said, they are not like the Sox for sure.
No, it's not. And it's not.
That's
like
right.
I know people who won't give up their tickets because they've had them for years and years and years because there's wait lists behind it.
Yeah. I don't think there's any Sox fans doing that at all.
I don't think so.
I'm just gonna keep digging in on that.
Hey, I'm a White Sox fan, but I happen to marry. I'm a Chicago fan. I married a Cubs.
You don't have to make up for it. You know what I mean? The Cubs are on top right now. Okay,
was that James in the background? Was that James?
Yeah, it was.
James, for sure, James. Sorry, James.
I met my husband at a Sox game. We've always been Sox fans.
I'm not, James. Okay, I don't care what they're saying. I'm not. Okay, my kid was born during 2003 during that potential World Series run that didn't happen. We were like in the delivery room during like game 2 maybe against the Marlins. Yeah, it was wild.
I'm sure your wife loved that. Okay, now Jamal, I got to ask you this. This is a trivia question for you. I hope you weren't watching earlier. What was the date that the Cubs last won the World Series?
The date that the Cubs last won the World Series?
Yes.
Well, it was 2016.
Yeah. Yes.
So he got that right, Liz. I'll give you points for that, Jamal.
I'll give you 1 point for that. What was the date?
Jeez, October. I mean, it would have to be late. October 22nd.
Close. It was November 2nd. It was my 40th birthday. That's the only reason I know that date.
I guess it was a Game 7. I should have went to November. I should have.
What a 40th birthday present.
It was.
I didn't remember though, Liz. Where were you watching it?
I watched it at home.
Oh.
Yeah, I was watching it at home with my son. My husband was out of town.
On your 40th birthday?
Yes. It was I don't know if you remember, somebody died. So
let's pull up the slides on this.
It was a real good time for me. But yeah.
Well, maybe it was their spirit that brought him the W.
Yeah, it might have been. You know, exactly. Yeah. See, and look how happy you were, even though you're a Sox fan.
I know.
Shut them down. Open up stocks. Let's pull up the first slide here. So government is shut down, and you know what? Markets are still hitting all-time highs, folks. People aren't worried about markets. Markets aren't worried about shutting down. It affects a whole different area of our economy, right? Non-farm payrolls were not released today. I was going to be curious if there was going to be like a 7:30 central bump in the markets, like as if algos didn't care that there wasn't an actual data release, but there wasn't, I don't think.
Okay, can I ask you a question about this, Jamal? I know they don't release the data, but somebody was saying it's already done, like it's already out there. So it's not as if the government is actually working if somebody pressed a button to release the data. So I didn't know if it was going to be released or not today.
Yeah, I mean, it wasn't as far as I know. And
yeah,
again, that was the one thing I was wondering if we would see some kind of like bump in the market, right? Like at that same time period where algos usually, kind of move, right?
Yeah.
I didn't notice one. But yeah, I'm sure that it is done, but they're just not releasing it. They can't.
Yeah. Yeah.
Dollar's heading for its worst week since last July, and gold and silver are on track for their 7th straight weekly gain. They just keep moving higher. We had that huge move in a lot of those drug makers this week. Pfizer, Amgen, Merck, among others. Big moves the other day. Lilly as well. Apparently there's a change in drug pricing with the policy deal with the White House. So there's a lot going on there. And we'd heard about this kind of teased a few months ago, and they were really quiet for a while. But yeah, a huge 2-day move in some of those stocks. Corn and wheat futures have been down. I don't know if you guys are trading any of those, but they've been on the lows more recently, and there's bigger than expected stockpile. So not sure when they're going to get a bounce, but they've been down there. And I think corn and wheat specifically have a little bit of vol to them.
Now, we don't have anything. Vanetta brought up corn and wheat. Do you have anything going on there?
She brought up soybeans.
Right, just the softs in general, but we don't have any positions in any of them.
Neither do I. I haven't traded them in probably the better part of a year and a half. Yeah. Volatility, like I said, made a little slight bid, meaning it's not in the it's not 12 or 13. It's still 16 and change. 16, of course, is pricing 1% move in either direction, and the SPX and VIX futures is still in contango. So we got quite the market, even though the government shut down. Again, I've been telling these people for a while, this doesn't really affect stocks a whole lot, and stocks are still hitting all-time highs. Gold and silver are still hitting all-time highs.
My favorite thing about this, I'm glad you brought that up. It's something we haven't touched on in a long time. When you've got a 16% VIX, it is a 1% daily move. I like that. We used to talk about that a lot more, Jenny, and we haven't in a while.
Yeah, it's the best way to think about it, right? Gives you an idea of how much movement we're seeing in the market.
Yeah.
And now I know you said the drug makers surge, but okay, so Pfizer, Amgen, and Merck. I know we had just recently put on a position in Moderna because Moderna is near lows. I know it had
that one didn't participate. It was mostly the bigger ones like Pfizer, Amgen, Merck, Lilly, I think were the huge ones that moved.
No, we did get out of that within a day, Jenny. We put it on with you, and I took it off the next day with TP because we sold the put, took it off for 50%.
Right, but that hasn't had the run that some of these others have had.
Yeah, no, it hasn't.
Let's move to the next slide. This is an interesting chart showing the blue line is showing the calls as a percent of the total options traded in the market. And then the gray line, of course, is just the opposite. This is puts that traded. And so on Wednesday this week, we saw this the amount of calls traded as a percentage of the market hit 65%. That was kind of record tying to what we saw late last year into early January. So it just reinforces how many calls are trading these days as markets are at all-time highs.
And do you think it's people buying calls, getting long, or do you think it's people selling calls against a long portfolio?
I I would say a lot of it is I mean, who knows, but I would think a lot of it is people bidding. I mean, as markets are hitting highs, there's FOMO happening, right? And we've seen it in a lot of some of these other wild names like the Oklos of the world, the Oracles. There's been a lot of upside volatility. I should say upside bid to volatility in some ways. Skew's been changed a little bit, so that's what I assume. I'm sure there's both sides happening, of course, but I mean, as markets are all-time highs, people are typically trying to reach for calls to participate.
And Jenny, you brought this up yesterday because we always Frank the Great, who runs our YouTube chat, he gives us the calls and put volume. And Jenny's like, when's the last time you saw put volume leading call volume? And you were asking this yesterday.
Yeah, I mean,
probably 2022.
Yeah,
not in a long time.
Like 2022.
Right.
Next slide, please. This is from our friends at the SIBO. This is VIX EQ versus VIX index. So just looking at the volatility of single list, not the list, single stocks, single stock volatility versus index volatility. And you'll notice single stock volatility is making a move to the upside. And all this is saying is that as earnings come close, single stock vol is getting bid, which we kind of know already.
Yeah, that makes sense.
I mean, I love having you on, Jamal, because this kind of edifies what we were talking about with Vanetta this morning, too, meaning that, we don't have a lot of the indices in our account. We're on mainly single stocks right now.
Mm-hmm. As am I. I mean, I think that's what I love about what we do is to be able to trade single stocks.
Yeah. Yeah.
I mean, it's index vol is awesome to trade at times, too. But then when you have kind of a quiet market like we have, even though, like I said, I mean, the VIX is 16, that's not like 2017 quiet, but it's kind of quiet. But yet we're seeing a lot of movement in a lot of names. The cloud computing names, the IonQs of the world, those are moving like crazy. We just mentioned the Pfizers and the Amgens of the world. Those are moving around. You still have Mag 7 names moving around. Tesla had a big move over this past week and is moving to the downside more recent. So there's a lot of things moving. Like, it's not a boring market. You can't say that.
No, there is a lot. And so if we don't want to trade the ETFs because the vol is low, you can find things to trade. You can certainly find things to trade. I mean,
absolutely. You know what ETFs vol are not low though is IBIT and Ether. I've looked at those recently. Those have a bid to them.
They do.
Yeah, well, they've been running up this week. So we're in both of those. We have positions in ETHA and IBIT in our account. I do too. Vanetta asked us this: Do you prefer IBIT and ETHA to Bitcoin and Ethereum, or do you like to trade both, or it doesn't matter to you?
Bitcoin and Ethereum themselves, I wouldn't say I trade them. I just own them and I have them in perpetuity, and wherever they go is fine with me.
Yeah, you're right. I mean,
trade IBIT and ETHA.
You trade. That's a very eloquent way to say it. I trade IBIT and ETHA. I own Bitcoin and yeah.
Let's move to the next slide. So what do we got coming up? Well, no NFP today, but our FOMC meeting minutes should happen next week, I assume.
Will they happen?
I would assume. And you know what? This is a real funny situation to determine if there's real independence between the Fed and the rest of the government. We'll see. Powell's supposed to speak on Thursday. The week after that, earnings kind of start to kick off. You got JP Morgan and Goldman, along with, well, I don't know if we're going to get CPI and PPI. We'll see. And then we got expiration. And then after that, you can see the other earnings that are coming out in the weeks to come.
So busy. It'll be the October picks up. We've got some big names in earnings in October.
Yeah, it should be fascinating, right?
Yeah. Nice.
Okay, last slide.
Nice, Jamal. Thanks for bringing this on.
Oh, for sure. Tesla, they reported those global deliveries, blowout global delivery numbers, and it seemed like a buy the rumor, sell the news because the stock definitely faded hard yesterday. Let's talk about stuff that was moving earlier in the week. The cannabis stocks were moving to start the week. Supposedly they might be reclassifying marijuana, so we'll see if that actually catches any real wind. We've heard this before, though. Reddit has dropped quite a bit this week, and I know a lot of people have been wanting to trade Reddit. Apparently, their data is being used less and less in ChatGPT stuff. It cited about 2% of responses. Historically, it used to be about 10%. And then DraftKings has been seeing weakness as prediction markets are picking up. I'm hearing people talk about those a little bit more. And then research, market measure, how many stocks actually follow the market? Check that out.
You know what I want to happen, Jamal? So you know how on DraftKings or sports betting, you can bet for a team to, make it to this playoff or make it to that playoff or win the Super Bowl. And then those odds are always changing. I want you to be able to, if you make a bet and then your bet changes, that you can get out of it and take your profit, but you can't. You're just stuck in that bet until the end.
Exactly. And that's why trading is better than that.
Yeah.
Jamal, did you hear the other day when Jenny was blaming you for her football picks?
I knew this was going to happen. Did she?
10th place last week, Jamal. 10th place.
How? I mean, you said you haven't been doing that great anyway, right? So we're still in the same ballpark.
No, it's all right. It's all right. I didn't blame you. And honestly, I got in big trouble yesterday because the picks were due before kickoff last night, and I think it was 30 minutes before kickoff. The guy who runs the fantasy league texted me. He's like, "Hey, you never put in your picks for this week." I've forgotten. I've gotten so bad I've forgotten to put in my picks.
That's funny.
Oh, Jamal, have a wonderful weekend.
You guys too. Good to see you.
All right, good to see you. Thanks, Jamal. We appreciate it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Jenny, we are just about to make it for the opening bell. I know we heard the bell, but that was through the platform.
I know, 8:29. Let's get in the platform.
All right, let's take a look. So,
who's up 5?
Yeah.
All right. Are we gonna let's watch our SPX, see where that opens. 865.
I mean, that's not too far away.
No, but
it's not at the money's anymore.
Yeah, like I would close it. I would cancel it now because now we're not at the money. It's not
too far away. So let's take a look at this though, Jenny. We're 70 715, 735. We're trying the 720.
Yeah, 67.26 is where we're trading right now. 67.26.
So we were at the 20 level. Yeah, let's cancel this.
Yeah, let's cancel that. I just wanted to see. It was just an experiment. We'll get filled.
Well, and what we want to do is do it at 9, give or take 5 minutes. Yeah. But here we go. Take a look at this. SPOO's up. Everything's up again. All-time highs. Take a look at this. We hit it yesterday and we are just a little bit underneath it today. All-time highs.
Yes.
Do you want to take a look at our gold silver ratio to talk about what you were talking about this morning? I'm going to open both of these up. So you're saying you're taking a little bit of a hit. So to your point, you are down more in silver, and we are down more in silver than we are up in gold.
Now it's interesting because I put ours on the day we did on the show. Like I put on that afternoon, and yesterday, and again I did a bigger one. So yesterday mine was an $80 winner. Net $80 winner, this gold silver ratio. And now it's turning into, now basically I lost that $80 win that it was yesterday. Today it's moved that much with silver up. Like you can see if you go to SLV, the percent that silver's up versus the percent that silver's up versus the percent that gold is up.
So silver's up 1.59, gold is up 50 cents. Yeah, that's exactly, or 50%. 50% of 1%. Yes. So you should see that. I want to show some. We just got hit on our Rocket Lab, this GTC hit. I'll push that to the follow feed. You'll push it through to the other side. So
and Roblox. Yeah.
That's was it Rocket Lab or Roblox?
Roblox, I think.
Oh, Roblox. Sorry. Yeah, you're right. So we have Rocket Labs here. That's the only reason I was confused about that. Nothing else needs to be managed on here really quick. We were talking with Jamal about ETHA and IBIT. So let's take a look at both of those. Both of those are down slightly, right? So we've got IBIT down a wee bit, which means Bitcoin might be off of its highs. And ETHA is up a wee bit. So it's kind of like a tale of two cities there. Yeah, Bitcoin's trading 120. So and ETHA's trading 4,400. So do you think we're going to hit the 5Gs? You think 7Gs. We talked about this yesterday. You think 7Gs. I think 5Gs by the end of the year.
I think ETHA, I think, you know how it took silver so long to start catching up with gold? I feel like it's taken Ethereum so long to start catching up with Bitcoin.
You know, and what's confusing to me is I get that both silver and gold are metals and they're both mined and there's a finite amount of those. But Ether and Bitcoin are two totally different animals. And that's what confuses me is there's a finite amount of Bitcoin. There is not a finite amount of Ethereum. Like there's a finite amount of silver and gold. There's not, so they're two, I understand that they have some type of correlation because they're both digital currencies, but it's just so confusing to me with all that stuff. Do you know what I mean?
No, that's why it's good. That's why it's a good thing we have a crypto expert come on every Monday.
That's why we have the experts come on because it's brand new to me, right? Anything else that we want to manage? Let's take a look at our natural gas. It looks like it's 220% because we have it butterflied off. It's down again today.
But it's been up. It's been up. So it's like gotten far from our spread. So we had that huge move up this week and then yesterday. So
what was crazy was yesterday it was up, but it ended down. And I know that because I'm keeping an eye on my natural gas position. It's something that I watch all the time. It ended down on the day, which was kind of crazy.
I kind of want to look at all the softs that people have been bringing up. Vanetta talked about soybeans. Jamal was bringing up the softs. We don't have a position.
Oh, sorry. ZS, sorry.
Yes. We do not have a position in any of these. You mentioned they were kind of mid-range.
Take a look at that. When she was talking about soybeans, I just glanced in the chart. This to me looks totally mid-range, right?
Yeah, 34 rank. If you go to the trade page and we look at the 49-day,
you would go to the 49-day, not the 21 days is too short.
If you go to the expected move, what are we getting for an iron condor? $10 wide by $10 wide is really like a $5 wide. So you're getting 218.
Yeah, you're 218 versus 281.
Yeah, sure. I don't mind.
I mean, I can pull it a little bit. I'm gonna stretch it a little bit out. Okay, so let's get 160. This is a third of the way of the strikes. This is your plain Jane vanilla iron condor.
Okay, yeah, sure. Then we're in it. Then next time Vanetta asks us about soybeans, we'll say, we're in it.
We're in it. and we don't know. I mean, it is a good news story. It is pretty interesting that there's so many stock. So we're filled in that. I'll push that through too. That there is so many stockpiles of it. That was an interesting news story to me. But I hadn't looked at these in so long.
I kind of want to take off our Oklo Iron Condor if we can, because I'm afraid it's going to run. Yesterday it had a crazy run. I'm getting nervous that it's going to start running through everything to the upside again.
You want to take our 8%? I'll let you go. You're our Oklo expert.
Well, what do we have? It's just an iron condor. All we have is an iron condor, right?
Yeah.
Yeah. So $40 on an iron condor. I don't know. We only have 14 days to go. So I would say if we wanted an iron condor in here, you can go further out in time.
You know what you just did, and I'm actually glad we can talk about this. We're not set in stone. We had an iron condor on. There's 14 days. We've only had it on for 4 days, but that's fine. But your assumption changed, right? So let's talk about that. You're like, I'm worried. What I heard you say is that I'm worried it's going to blow through the upside. So if your assumption changes, close it. You took a little bit of a profit.
I mean, look at the chart. Look at yesterday's move. Yesterday's move had
I was like, what the heck?
So yesterday's move was so crazy. It was starting to get, I thought, I don't want to I'll be so mad. Here's what I said. I'll be so mad if I lose on the calls on that iron condor. I'd rather just take $40 on it than lose on the calls.
I agree. I don't disagree. But I mean, hearing what you're saying, if you're looking at a trade and your assumption changes or you're worried about something, get out. You know what I mean?
Right. I never want to lose. I never want to lose to the upside in there.
I know. I want to take a look. I want to take a look at IBM, and I know you were talking about getting long Boeing too, because these were things that Vanetta had just brought up. IBM's got a 42 rank. Look at this, but it's not all-time highs. You're going through earnings and a lot of this stuff, and that's the same with Boeing. The earnings are on deck, and you're going to see that with
IBM used to always be a perfect candidate for earnings setup calendar, which we could.
It's already got a 42 rank. Looking at Boeing and IBM, the 42 rank, you could. So. Let's go. I'm just going to go 300 because I don't know what strikes they had.
Oh, that's too much. Like we saw in Citigroup, what happens to a calendar if the stock strays too far from the strike? What did we get? A bounce back up? No, we rolled it. We rolled it.
I was like, no, this is not exciting.
We rolled it, but we did not roll the calls, only the puts. So you could see that the puts and calls would win or lose about the same. So we can see we're down 100 and 100 and something on those calls. So we know we'd be down around that much on the puts too.
Yes, for sure. For sure. And you can only lose what you paid for in a calendar. So if we went to Citigroup and I went to, let's see, we put it on 14 days ago. Just Citigroup, not anything else. This is all you can lose for because we did a double. We did one on each side. So $342 is all we can lose.
Yeah. And we took in 20 cents for the roll. So $320.
Yeah.
And I guess, we don't need to roll those calls.
Look at this. This is something I just opened it because I glanced at the $80 win, not the $28 profit. This was a Band-Aid over a bullet hole, I think. Did we do this right before we went to Germany? No, because this is 21 days ago.
Well, maybe. I know we changed our short puts into a long call.
We did. We changed our short puts into a long call. We should probably do something with this.
Okay, so let's take a look at the chart and see what love has been doing.
Okay, so we're down quite a bit in it.
But it's, with this pop-up, maybe we do get out of that long call and just sell puts or downside ratio spread, or maybe we don't want to be in love anymore. I don't know. I think it's been, I don't know what people's take on it is.
We've made back, here's what I'm kind of looking at. Today, we made $97 back because it's up 113. Let's just get out of this and we'll live to fight another day in something else instead of just.
I kind of think so too. Like, we don't need to scrape back in love to get our money back in love. I feel like their prices have gone up.
Oh, you mean the actual product?
Yeah. Right. Like if you're trying to book flights on there, and people aren't loving their new system.
They're not loving their new system, and you're pushing everything through, right? Or good.
Yeah.
Okay, so I don't know. I'm trying to keep an eye on the time that I don't. What time is the next segment?
So we've got it's almost 8:40.
Fast market is up next, so we will be right back into the platform, and we'll be back and forth between these two.
Right, and I'm actually looking forward to all the trades in fast market. As far as anything else we wanted to look at,
take a look at this booze. So this is what I find very interesting.
17.
We were here. We have to act like we've been here before. We were here yesterday, and then at about 9, maybe about 9:30 is when the wheels fell off, and we went down for a while.
And this is why we say, and what Jacob's studies show, it might be best to wait till about 9 a.m. to put on your SPX trades, because sometimes you get more movement from this 8:30 to 9 time, and then it start to settle down a little bit.
Yeah, it does start to settle down a little bit.
And I know I've talked to the original Jajun.
The OG? You talking to the OG?
The Jajun himself, and he says he watches the minute in SPX and waits till he sees it kind of settle down.
All right, let's take it to the tape, right? So let's go day. I'm going to go minute.
Yeah. Minute for 1 day. 1 minute, 1 day. And you see
Let me just go today. There we go.
Yeah. Okay. So he'll, you see this big movement, and he'll kind of wait for it to see just it's staying in a little range, like it's starting to settle down, and then he'll jump in with his trade.
Okay, so this isn't yet. This doesn't. Yeah. This isn't yet.
Doesn't look like it's settling down yet.
Okay. All right. So let's take a quick 90-second break, and then we can jump right back into the platform with Fast Market.
Okay. Stay tuned.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, Jenny. We are back, and it is fast market. Market's open. Who's up?
All right, we're ready.
I didn't know where that was going to end. That seemed like a very long song.
All right, we need some trade ideas. We need some trade ideas. So let's fire them up, John. All right, first one. Liz, if you can even start pulling these up in the platform, and I'll read it. So this is UPS. This dog has been oversold. Sell a put, or with earnings 1023, maybe some sort of diagonal. So this is from, and I don't know if I can see this properly, Mikos in the chat.
Okay, let's do it. Let's pop in. I'm in UPS. To Mikos's point, we've got, they have earnings on the horizon. They want to sell a put. That means they're bullish. So you could go out before earnings and sell the 84 put. It's $1,500. You can go after earnings because it is a put.
If you're directional, I don't mind going beyond earnings. So this isn't bad. That 75 put, you're getting $1.24 using only $750. I don't mind that at all.
I don't mind it at all, but I did want to, just because they were looking at two different things, I want to look at an earnings diagonal, if you don't mind.
Not at all. So we'd be going in an earnings cycle, buying at the money. That's the 85 call, selling, getting at least some premium for something that will expire before earnings. And that's the 89. You're getting 65 cents or so. So that is $4 wide, and we're paying $2. That's about what we expect for an earnings diagonal, paying 50% the width of the spread. So maybe we do this. This is bullish as well.
I kind of like this only because I like the premium of the earnings. If it goes up, great. They're bullish. They want it to go in that direction. If it goes up before earnings, we're out.
Yeah, we're out. And if it goes down, well, we only risk $200 on this. And then on earnings, we could sell a put.
All right. I'm shipping it.
Ship it.
That was anticlimactic. We didn't get filled in right away.
That's all right. That's all right. Okay, John, what is the next one? Build. Ooh, Exxon. Exxon pulled back from the highs, but I think there's still upside ahead. Maybe a November 105, 115 call spread since the IVR is low. So they're looking at buying a call spread. This is something we don't even need to jump into because we have an Exxon position already. We had another viewer. This is from Jack from Philly, but we had another viewer who was very bullish in Exxon. So we put in Zebra. Zero extrinsic back ratio to the upside, where we're essentially long synthetically 100 shares of stock.
And then we changed it to just a long call because we had ratcheted it up.
Yeah, but then since then, Exxon has kind of fallen.
So we ratcheted it up once, then it fell down, and we have just the 112 call. So we are, with this viewer, we are already long Exxon, Jenny. So to your point, we do not need to jump in.
Yeah. All right. Next, Baba. This is from Carlos. Baba needs to go to support before continuing its upward trend. Sell the Nove 155 put. So they're telling us exactly what to do. Sell the Nove 155 put in Baba.
Okay, Jenny, we can jump in the platform, but do you see the price? They want to sell that Nove 155 put for $3.20.
Well, no. So, it's $1.80 now.
Yeah, that's what I was going to say. So if you take a look at that, I was pulling it up as you were going. This was Fast Market. They put it in yesterday. What did Baba do yesterday that it's now? Oh, wait, hold, please. Jeez.
Oh, you're in the minute.
I know. Hold on. I got to go 1 day, 20 years. Whoops, not 20 weeks. Okay, let's see what Baba did yesterday. So So I think they did it. That was probably a smart thing to do, but they put it in at 320. I might even be out today if I did it yesterday.
If I did it for 320, it was $1.80 today, I'd be out already.
Yeah.
I don't want to say like, we missed it, because if today for the first time we looked at Baba, maybe we would sell that 160. But it's not bad.
It's not bad. I mean, it's a little bit of capital intense. It's a little capital intensive for me when I saw what they did yesterday when they would have been out today.
Yeah, right. It's hard to sell something for $1.80 that we could have sold for $3.20 yesterday.
Yeah, that's hard for me to do. I wish they didn't put that price in there, because if they didn't put that price in there,
they didn't put the price in, we wouldn't have really thought twice about it.
I know.
All right, next one, John.
Yes.
All right, Rivian. I like Rivian for the long run. Picked up some premium selling the November 13 puts. Hey, this is Brian from Denver. Let's get in. I don't know if we're in Rivian. I just added to my Rivian.
It's funny because we do not have a Rivian position in here. They want to sell the Nove 13 puts, they said. Let's go to November. Let's pop in.
112, something. Yeah, so that I don't mind it.
So let's show the world our platform if we can, because I'm in Rivian, the Nove 12s. We like to show it. It's it's $1.10 if we can pop in the platform. I don't mind selling this. It's only $484, but I'm not going to sell it until we get in, right? Or should I just send it?
Okay, so as far as selling puts in Rivian, let's jump in the platform if we can, and then we'll walk through selling either this put or the 12. Honestly, I don't mind the 12s either, because the 12s are 67 cents. The 13s are $1.08. We're not in the platform, so go ahead, Liz, and sell whatever one you want to sell.
Okay, I don't know if we're having an issue with. I'm going to Teams John and see if he's having a problem switching it.
Oh, there we go.
Okay, right, just because Jenny and I like to visually show what we're doing instead of in theory talk about it. So it's a lot easier for us to actually go through and do it, so that if somebody wants to watch what we're doing, they can see it. So from that perspective, they were selling the 13 put for wrapped around this price, different than the Baba. Baba was a different price. I don't mind this.
So, okay, there's the 13 put using 484, or the 12 put gives you a little more room, and you're still getting, I think, a decent credit for the price of the product. Using 385, I don't mind.
Now there are earnings on the horizon, which they talked about. I don't mind this at all. I kind of like getting $1.
I agree. Can you, since we just had the questions on the Big Lizard, can you just pull up?
We're
the Big
starting to
Lizard?
share a brain because I thought the exact same thing.
Yeah, you could do the $2 wide, Jade Lizard. You could. I thought you could maybe do a $2 wide.
Take a look at that. That's actually pretty good.
Where you're getting a lot of extra. You're getting a lot of extra premium. Your break even here is what 1137.
And if it goes, so
1157.
So let's talk about this, Jenny. If Rivian goes up, and we just sold that put, we would probably take it off for 50% anyway. If Rivian goes up here, we're going to take 45 cents, which is just shy of his 50% of the other one. And if it stays here, we might be able to take more. So I'm going to ship this.
I kind of like this. So this is Jade/Big Lizard. It's trading 1360. We don't have a 1350 strike. So to kind of create that 1350 strike, Liz was just separating the call and put. 13 put, 14 call.
And that we're getting the most extrinsic value. I'm going to ship this.
Yeah, I do. I kind of like that.
Okay, so that's working. And I actually pennied it down, and we are working it. So hopefully
Who's up 20.
I know.
So good thing, the 830 trades would not be working.
No, they would not. And it's almost 9:00. We have about 10 minutes. Right after this segment, we can put our thing in.
Or I think after the last fast market, before we take a break.
Okay, let's go.
Otherwise, it's going to be too late into it.
Yeah, let's go to the next one.
Next one, please. DocuSign. Adam from Jersey City. Nearing a long-term support area, sell a put or a cheap strangle.
Do you notice everybody's bullish?
It's funny because a week or two ago, we had a lot more bearish. And what's your assumption? Now, these are all just like selling puts and bullish strategies.
It is crazy. All right, let's jump into the platform. We're going to go with November with the 49 days. So if they are nearing support.
Let's pop in the plat. Oh, here we go. We're in the platform. I kind of like the 65 put.
I do too. I just started with the underneath while we were talking about it. So take a look at that from return on capital perspective. When you pull it up, it's $1,300 to put it on for the 70. You take it down by $5. It goes down to $882.
Yeah, because these aren't dollar wide strikes. It's $5 wide strikes.
Yeah. So it's $5 wide strikes. I actually don't even mind. And I mean, I'm just bringing it down. If you wanted to get out of the way, the 88 cents putting up $600 is still not a bad return on capital.
No, it's not bad.
DocuSign is down here.
Look at that fall. I'm glad we're not in it.
Yeah, it gives us a little bit of room to be wrong. I've been DocuSigned before, so I'm just going to put that out there. So that's why.
But we were DocuSigned when it was 150.
I love that it's a verb. We were DocuSigned at 150. So let's flip it.
I can't believe this is just made me think of this. Can't believe I didn't tell you this. Remind me to tell you. You know how we hear of like random people just getting punched in the face?
Yes. Who punched you?
No.
Who hurt you?
The Black Widow. The Black Widow was down in Millennium Park. She was down for a run on the lake for like a fundraising run, and some rando walked by, punched her in the face. Like her face was bleeding. It happened to her.
Are you kidding me?
No, and I can't believe I forgot to tell you.
I can't believe you forgot to tell me that too. That seems like breaking news.
I know.
Is she okay?
I mean, it was insane. It was insane. She was really hurt.
Yeah.
Yeah, it was.
Somebody's got to stop that maniac.
And when you said we've been DocuSigned, and I went like this, I thought.
I mean, we're not laughing at what happened to her. We feel bad about that. I'm sending this. Okay, hopefully we'll get filled on that. We are. What is up next?
All right. Next, we have DraftKings. Terry from Poo Poo Point, Washington. My Taiwanese source told me the recent drop caused by Kalshi is overblown. So that's what we didn't know what's going on with DraftKings. So recent drop caused by Kalshi, going with November 35 put, 32.5 puts, 1/3 ratio. Now we're long DraftKings. We've got out of the money puts, in the money puts. We've got a bullish position in DraftKings.
We have a synthetic covered strangle in DraftKings, which is right here, which is bullish. So we are with you.
Yeah, we're with you.
We are in solidarity, and the DraftKings has been overdone. And in honest to God, I would switch positions with this because my position is bullish as well in DraftKings.
But now we know what the news was, Kalshi.
Yeah, for sure. Okay, next up, Does it give us a number on what number we're on?
Yeah, it does. Yeah, when we get to the next one, I will 7 out of 10. MHG had a pretty big move. Time to fade.
Micro copper futures.
Take a nickel of it. This from Aaron from Waxhaw, North Carolina. MHG had a pretty big move up. Time to fade it. So they're bearish on MHG. Let's jump in the platform.
Okay, so here, micro copper futures. That's what it is. Just so you didn't make me type it slow. I read it for you. Okay, so it dropped down, and then it's come back up like this. If they want to fade,
it. You just have to sell it. There are no options here.
Yeah, I don't know how I feel about this because I don't know much about futures or how big it is and if we're going to scalp it or not scalp it. So I have to say no to the MHG.
Yeah, I'm not doing it.
I'm glad we're both on the same page. I was like, yeah, we're going to have to go ahead and put a pin in that one.
All right. Next up, we have, this will be 8 out of 10. Oklo, $16 billion market cap on zero revenue and half a decade away from generating any power, if ever. When the plebs start talking, it's time to short. Easy money, damn right. Ken from Idaho, I am never selling my Oklo. So
it's so funny because you know what you'll do to me in this situation when I have a strong assumption? She's like, well, it's their assumption, not yours.
Hey, go ahead, sell a call spread in there. But
It's pretty dangerous to sell a call spread, in my opinion.
Well, there's such a call skew. Here's the thing: you have to sell a naked call because there's such a call skew. You're not getting anything. So I told myself like I wasn't selling any more calls in Oklo, but I did yesterday. I texted Liz. I was like, why don't I listen to myself? In November, I sold calls against my stock, and I'll tell you what they are. And might be kicking myself one day for it, but I did it yesterday.
Jenny, what do you think? And I know you. What calls did you sell? And then I'll show you this.
You know what? I did the 14-day 160 calls.
I'm in the 14-day. So you did the 160s. Oh my God, you were just so conservative. You went so high. Okay, but I'm just throwing this out there. I don't know that this is the right trade, but it's something that I could sink my teeth into. I was going to go down and do a downside ratio spread until I realized how much capital it was. Oh, it was only 20 cents a second ago. It was a $5 wide butterfly for 20 cents. There you go. Lock it. I'll pay you 15 for it.
Yeah, for sure. There's a bear's trade for you. Honestly, here's the bear's trade. Honestly, here's the bear's trade. This is what I did actually in the 14-day. Buy a put spread. So, and because of all the skew here, it's not bad. So yeah. This is what I did. I bought a put spread. So here's a $10 put spread, and then sold 2 of those 160 calls to pay for it.
Yeah, we can't afford that.
But I'm just saying, like, if someone wants a bearish trade,
look at this. To the tune of $9,000, you can have a bearish trade.
But look at that. Your call's at the 160 level, and then you got a $10 wide put spread.
Yeah, I get it. I'm working the weenie butterfly, so just bear with me here. It's 19 cents. We'll see if we can get filled.
All right. Let's go, John. Next slide. 9 out of 10. SPX feels like the market is brushing off the whole government shutdown thing. Odds are nothing gets solved before the weekend. So I'm eyeing a 0DT. Let's do it. This time. This came in at 9:01.
Okay. What do they want to do?
Looking at a 0DTE Iron Condor, but let's just look at the 0DTEs and decide what we'll do.
They were 20 delta, $25 wide. I just want to look at theirs first because so here's 10, 25. So this is 20 delta, $25 wide. 20 delta, $25 wide.
Now,
this is Jack Tucker. What did it say? Did it say love Jack?
Okay, so this is not a lot right now. I think I've been finding you can do a 20 delta, $15 wide, and you usually get around $3. $15 wide, $15 wide.
Yeah, $3.
Yeah, so I'd rather do $15 wide for $3.40 than $25 wide for $4. Like it wasn't that much different.
It wasn't that much different.
I'd rather have the less risk. So this is what I've been doing. But you've been doing the iron flies, and I'm fine with that.
So I've been doing, where are we trading right now? 25. I'm going to go with this one. It doesn't really matter.
Yeah.
It doesn't matter because you're pinning it. So this is $8.50. Can I ship it?
Or if we want to get out quick, just do a put spread.
There is the put spread too. And
it was only up 9 and they were up 20. Just do a small one. Do a $5 wide. $5 wide for 180.
Sure.
What price did we get filled?
175.
Okay, so and then just put in an order for $50. This is similar to what we did the other day. It's not an iron condor, but
it is not an iron condor, and we appreciate it. We do like what they're doing. I'm not doing 50%. I just want to close position. It's Frank. See, I did a day order. You're gonna like it, and I'm gonna go
125.
I just went 130 because I want out.
Yeah.
And so the order is in to close it if we pop up a little bit. And so take a look at that, Jenny. It was 5 to 9 and we were up 20. It is now 9:03 and we're only up 7.
I know.
It's pretty crazy. So I'm gonna put this all symbols.
All right, let's get to our last one. Amazon is gearing up for a push into 230 days. Push to 230 before next Friday. Amazon to 230 before next Friday.
Whoa, okay. Amazon to 230 before next
Friday. So this will be really easy. They want 230 before next Friday by like the before next Friday. So in the 7-day, if they say I would just sell the 230 call. I would sell, make a call spread, like by the 220, 230 call spread.
Oh, you want to? I was like, sell the 230 call. I was like, they're bullish. Okay, so that's.
I mean,
that's not bad. So the interesting thing here is you're buying a little bit more of extrinsic value than you think.
I mean, we could make it. Otherwise, it'd be more and more and more expensive if we. If we wash extrinsic value, I'm just.
You can't see broad in under 20 into under 20. But to be honest with you, I would rather just take a small position and make it a 174 if we can.
But either, like, if Amazon goes down, if Amazon goes down here, we lose 324. The other one, we lose 400. But but here we only have $175 in profit potential. The other one, we had a lot more profit potential.
Why don't we do something where we're at least washing extrinsic value, where we have 250 to make 250? It's the same thing. It's the same thing. But honestly, it's the same thing as if I did this, just because it makes me feel better. There we go.
Yeah. Right. Risk 250 to make 250. It's kind of a baby trade. I know they said Amazon to 230, but we'll make 250 on it.
Yeah, we'll make 250.
Okay. I think that's it for Fast Market.
I think we did it. So here, let's pop out the side. I'm going to talk about what we did in Fast Market. That was Love. UPS was Fast Market, wasn't it?
So far, the only things I have on the follow page are UPS, DocuSign, SPX, and Amazon.
Those are the only things we have that we're filled on. We're working Rivian. I'll take that down a little bit.
Yeah, let's try to get filled on things.
So Rivian is done and out. Okay, then what else are we working? SPX, that's the closing order.
Yeah.
All this stuff. Everything else, I think we're good, right? We have Exxon, we showed it. Everything else that we're working, we're done. So good job. 6 out of 10.
6 out of 10. I mean, the ones we didn't do, a lot of them we had positions in. And the only one we really said a hard no to was that copper, like mini copper future.
Mini copper future, because we didn't want to scalp a future. I'm not very good at that.
Yeah. All right, everyone. Stay tuned. We'll be back with market measures.
Stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show. Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Welcome back. This is Market Measures, sponsored by the SIBO.
I'm excited. Our research team's amazing. They put these together, and we love that they're sponsored by the SIBO.
I know. We do love the SIBO. We love our Market Measures. This one's from Sahil, I think, right? Which is Baby Shark.
Baby Shark? Do they still call him Baby Shark?
I don't know. I don't know.
I don't know.
I wonder if he minds being called Baby Shark.
I thought they started playing like Jaws music for him or something instead of the Baby Shark song. Instead of the Baby Shark song. Speaking of sharks, someone asked me yesterday if they were going to book us for parasailing, and I said no, thank you. Because didn't you say when you went parasailing, all you could see were sharks?
Everywhere. I did it was I in Sarasota? I went parasailing. I've been to parasailing a couple times, and it was so creepy for me now because when you're up there, you could see people in the water, and sharks were just kind of around them.
What? Yeah, I'm not doing it.
Mm-hmm. It's true.
I'm not doing it.
Oh yeah, he's Jaws now. Thank you very much. Organic farming. Yeah, Jaws. Jaws created this Market Measures for us. Jaws.
All right. Well, we are ready for it. Are you ready for Market Measures, Liz?
Are you ready for it? You get that Taylor Swift reference?
Yes, I do. A deeper look into implied volatility and expected moves.
Yeah, I'm excited for this one.
I mean, yeah, especially since Vol's not that great right now. I think we're going to learn some bad news that expected moves are not so big anymore.
You know, yeah, I mean, but they do a good job breaking down the edification of it. Let's see. That's what I would think too. With a lower implied volatility, expected moves are usually lower, right? I mean, that's just
right. Which people see when they're selling those 0 DTEs, they're not getting as far. You're not getting as far with your shorts if the vol's lower, expected move is less. But let's see what Jaws has got to say about this.
See what Jaws has got to say. Okay. IV rank, IVR, is the gauge we use to tell us whether an underlying has enough premium in its options to justify trading it.
Traders also use IVR to gauge the anticipated movement of the underlying asset. Higher volatility indicates a greater likelihood of significant price swings in either direction.
So today, let's expand on this, the usefulness of IVR by looking at how well it estimates the stock's daily move.
Okay. How well it estimates it. So it's like, what's the IVR and how often does the stock stay in that range? That's
I
good.
mean, I think that the options gods are good odds makers.
Yeah.
I say that all the time. I go, they're better than me. So if they think it's going to stay within this range, it usually does. So number 2.
All right, here's the study, and they're using SPY, Qs, IWM, diamonds, USO, gold, silver, Amazon, Goldman Sachs, Google, IBM. They're using so many, so this is covering a wide range.
Are you surprised? Okay, so you've got your big 4, right? SPY, triple Qs, IWM, diamonds, and then USO, gold, silver. Got it. Amazon, Goldman Sachs, Google, and IBM. That's an interesting.
Yeah, they've got IBM is back, Liz. It's back. We talked about it today. IBM is back. It's they're using it in the study.
You know what they don't have on here is your big
Facebook, Meta,
like your circles or your core weaves or your Oklos, the ones that the volatilities are completely out of control.
Well, because they haven't been around since, like, those are all new. This is
2013 to present. You're correct. They don't have them for a year.
Right. So they had to find stocks that have been around for long enough to back test.
I like it.
Yeah. Okay. Recorded IV rank.
You can keep going.
Recorded daily percentage price move. Observe what happens to the daily range when IVR is less than 20, between 20 and 50, and greater than 50. So they're taking these ranges of IVR, not the volatility, but the IVR.
Okay, so hold on for that one for 1 second. So less than 20, I think we're going to see a lot of the time. Between 20 and 50 is a lot. So between IVR of 20 and 50 is a lot. And greater than 50, it's pretty rare.
I mean, I think, yeah, like between 20 and 50, that's, you're going to have between 20 and 50 quite a bit. I don't know what the percent of the year is, but let's say I'm going to guess a third of the year we're between 20 and 50, and 2/3 of the year we're less than 20. And maybe 1% of the time we're greater than 50.
Yeah.
Or 3% of the time.
3% above 50, right? Yeah.
Yeah. We're rarely above 50 IVR.
So this is good. And this observed how the actual moves are greater or equal to the implied moves. Okay.
Yeah. All right. I switched from my coffee to my water. It's about that time.
When do you go to wine?
I have 3 hours is a long time. So I've got coffee, 2 waters. I wasn't sure how this morning would go.
I know. I hear you. Okay, let's go to number 3.
Looking only at SPY, we see that a 10-point increase in IVR will increase the daily percent move by 0.25%. So not that much.
No, a 10-point increase in IVR. So if you're going from 20 to 30 in IVR, that's a big IVR move.
A 10-point increase in IVR. Yeah. That, like, if IVR goes from 20 to 30 and my daily move only goes up by 0.25%, that doesn't seem like that much.
No, it doesn't, right?
So that, and when hearing that, it's like, okay, if the rule of thumb is don't sell premium unless IVR is over 25, well, hey, you know what? If it's 22, I'm still going to sell it. Or like, it's not changing the price that much.
No, you're right. So between 22.
Is that SPX? Jajun. I might call it
Jajun. Okay, I'll push that up. But yes. So pardon the interruption. Okay, let's go to number 4.
I was waiting for it. I was waiting for the sound. I was hoping you still had your sound on.
I have my sound on. I'm pushing it through right now, and then you can do the other side, and then we'll go back in. I'll go back into the.
All right. Okay. So when the IVR in the indexes is less than 20, the typical moves are less than 1%. So when IVR is less than 20, typical moves are less than 1%. So it's accurate. It's predicting a low move, and typical moves are less than 1%.
And so when the IVR goes north of 50, which is very rare, the typical move triples in all indexes. Okay, good. That's exactly what we should see.
Yeah.
So less than 20, meaning like look at the first line and then the last line. It's like 0.5% triples, but 7% triples. So that's usually what we should see. It should triple if it's over 50. The move should be a lot more.
Right. So that's greater than 50, between 20 and 50. And again, most of the time, 97% of the time is what my guess would be. We're in those first two categories.
Okay, so my question to you, Jenny, is before we go forward, and I did not look at this. So when you're looking at these, now we're going to go into individual products. I'm going to guess that when the individual products IVR is higher, the moves are greater.
The moves are greater than
the indices.
Yeah.
You see what I'm saying? So I'm saying when the IVR in an individual product goes up, I think if it's greater than 50, I think it's going to be a greater move than what would be in the indexes, right? Because the indexes are a basket.
And I think you're going to get a bigger pop in vol, right? And I still go back to that study I saw where it said, when IVR is low, trade the indices, trade the general market ETFs. When IVR is high, trade the individual products because you're getting paid more. You're getting paid more premium.
Yes.
Okay, let's go. Move to the next slide. Based on the results of the regression, we have some key numbers to know. So when IVR is 0, the typical move in SPY is 0.3%.
Oh, okay. When IVR is 100, the typical move in SPY is 2.4%.
When IVR is 30, the tasty threshold of when we sell premium, the typical move in SPY is 0.8%.
Okay, those are good facts to have, right?
Yeah. Baby shark.
Okay, and then go to number 6 of 10.
Now maybe we're getting into the other products.
I think we might be getting into the other products.
And I'm going to guess, Qs, IWM, they're similar to SPY, but we'll see some differences with the individual names.
Yeah, so let's go to 6 of 10. Moment of silence. There we go.
All right, the theoretical percent of time that the actual moves are less than the implied moves is 68. The theoretical percent of time the actual moves are less than the implied moves is 68%. So, and that's what we like to see. More often than not, the moves are less than the implied moves.
So the statement here is volatility is overstated instead of understated, correct?
Yeah.
So they overstate the volatility, so the move is slightly underneath what the implied volatility is stating it is. And then look, it goes for equities, however, it was much higher. This suggests that markets are less volatile than anticipated by options prices. Okay.
Where did you see that?
It's the next sentence.
Suggests that markets are less volatile than. So equity indices, SPY, Qs, diamonds.
But it says for equities, however, it was much higher. This suggests that markets are less volatile than anticipated by options prices. So once again, options prices, even in equities, are overstated versus understated.
Here's what I want my takeaway to finally be from one of these studies. We've been doing the show for 15 years, and sometimes they write indexes, and sometimes they write indices. So here we have equity indices, but on the last slide, it was indexes with an X. Like somebody clarified to me when you use indices versus when you use indexes.
And that is not me that can clarify it. That's somebody smarter.
15 years.
That is somebody smarter who did not. I mean, I'm a math girl. Jenny, I am not a language girl. Okay. Let's go
too bad Vanetta is in here.
Yeah, she should chime in on this. Okay, let's go to number 7. The commodity ETFs that we like to trade saw similar expected move overstatement, but not to the extent of the equity indices. Okay, so they were pretty much on par then. So if you're looking at your US oil, your gold, your silver, their expected move was 68%, but their actuals were wrapped around there. Gold, wow.
But look, silver, crude oil, the actual moves was a little bit more than the expected.
Yeah, and gold is kind of on par with what the expected move is.
And honestly, in the commodities, we rarely sell just iron condors. I feel like we're more directional. When we have, like in crude oil, we're short just puts. In silver and gold, we just have the pairs trade. But we will rarely sell both sides and take a completely neutral stance. And we like to be directional so we could get out with one quick move. So I mean, I see why, because the actual moves are slightly greater than the expected.
Well, the other thing too with this, I think that is odd, is both of these three things in general, because of the way that they are, the implied volatility can go up even if the product is going up.
Right.
So your IVR can rise. Like I said, with this one, the pendulum swings much farther on both sides with this. It's not your typical. You go to SPY, if the market's all-time highs, you'll see your IVR down. And that's pretty standard. But not with these. This
So you would
has
think,
both
like,
sides.
with silver and gold, when they rise, their vol goes up. So you would think the actual move would be less than the expected, but it's still greater.
It's still greater. It's still greater. You know what this? My takeaway to this slide is, when it starts to move, get out of its way. That's what I think.
Right. Get out of its way.
That's my takeaway. There should be a disclaimer on the bottom. When these products start to move, get out of their way.
Okay, the next slide, please, John.
Individual stocks also showed similar overstatements and expected moves. All markets had overstatements in their 45-day expected moves. Next, we'll test the overall market in various IV environments over a 15-year.
And you kind of talked about that, these individual products having bigger moves. So, when the expected move was 68%, the actual moves were all greater.
They were all greater. Yeah, they're all greater here. That's kind of that is what we expected to see.
Well, I mean, that's what you guessed to see. I mean, that's not what we would like to see. We'd like to see the actual move less than the expected,
But individual projects do move. Like we do know that. They just have a tendency to move. Where a basket of a products, which is your indices, if you're feeling pretentious, I got that from the chat. The indices are a basket, right? So even if Amazon moves, there's probably IBM in the same basket.
And so this I feel like, as far as selling premium, and if you're looking at these thinking, oh, should I stick with the indices? Should I go to the individual products? But the individual products move is actually greater than the expected move. To me, it's follow the mechanics of vol. When like VIX is low overall, have a lot less risk on, because that means markets at highs. And then when we have a drop, vol expands, the IVR increases, and then that's when, after a drop, when you and I will just sell puts or just sell straight lizards. We're never selling those strangles on a drop. We're usually just selling one side and having risk to one side.
And I do want to say, there is something to be said about having kind of that market awareness, Jenny. It's like, you and I have been doing this for so long. We've been doing the show for 15 years, but we've been trading since we were 21 years old, right? So it's something we've done our entire lives. So there is some type of kind of a little bit of market awareness there, right? And that is the one thing, but I do like having these guidelines for people that are just walking in. They should understand that.
Right. Okay, slide 9. Okay, here we go. SPY, a deeper look into implied volatility and expected moves. So we're looking at SPY over the last 15 years. You've got the average realized move, an average expected move, breaks to the upside, breaks to the downside, and then on this other side, what the overall IVR is.
So I am kind of shocked that in IVR between 20 and 40, there's 12% breaks to the upside and 10% breaks to the downside. That I was shocked by.
Because vol's already a little inflated.
Higher. So that means it's bouncing back up.
Well, you would think when IVR is over 75, that's when markets falling. And you would think we've seen like breaks to the upside. But usually by the time we're having the breaks to the upside, vol's already coming back in. So vol, then, like, let's say we have IVR of over 75, markets falling. By the time we're rising and bouncing back, then IVR is back into the lower ranges, that 20 to 40, 40 to 75. Yeah.
This is the SPY over 15 years. This is a good chart.
Because the IVR doesn't stay high for long. You get down move, but IVR over 75, maybe that lasts a week or less.
Who sings that song? It won't be like this for long. It's a country song.
I don't know.
Where's Mikey when I need him? Okay, then let's go to 10 out of 10.
10 out of 10. I give this market measure 10 out of 10.
I give market measure 10 out of 10 too. Our takeaways: when IVR is high, we use it to trigger. We use it as a trigger to sell premium, and we can also use it to eliminate how much of a move we will see today.
Yeah,
estimate, not eliminate. Estimate. Sorry. Once again,
compared to when IVR is less, and we don't need to go back to the last slide, but what I don't want people to be scared by is when IVR is over 75, that's when you saw like that bigger move to the downside. But when IVR is over 75, if we're selling puts, we're getting pretty far away. It's not like and I think that's a warning of when IVR is high and the market's falling, I don't need to go right at the money. You can go pretty far and still get decent premium.
Yeah.
Okay, compared to when IVR is less than 20, all the indexes will see a 3 times or 4 times jump in the daily move when IVR is greater than 50.
The expected move based on implied volatility tend to overestimate actual market moves, especially for indexes and individual stocks.
The discrepancy between expected and realized moves is part of what provides option sellers with a statistical edge. So, great. Thank you to our research team. Thank you to the SIBO for sponsoring Market Measures.
And thank you, Jaws. Dun-dun, dun-dun. Isn't that Jaws? Yeah, it's Jaws, right?
All right, everyone. We're going to take a quick break, and we will be back with Quentin.
Thank you. I love that the song on the way out.
Yeah.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
Hold on.
She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. Welcome back. It is our great honor. I actually feel like I am the voice of God now because I can hear it reverberating to introduce one of our favorite people who's going to introduce somebody else, too. We've got Quentin. I tweeted a picture of Quentin the first time we ever met him, Jenny.
Live from the trade desk.
Ladies, good morning. How's it going?
I thought we were going to reveal Marty as like a...
I was getting an intro.
like,
I thought I was getting like a special introduction.
I thought it was supposed to go, we introduced Quentin. Quentin introduced Marty. This is everybody. Welcome, Marty. How are you?
Good, guys. What's going on, ladies? That's my trade desk son there, so he basically should get to introduce me, right?
Yes, this is my father. Welcome.
Hold on. Jenny and I take credit for raising Quentin.
Well, it's right. With most divorced TV personalities, we both take, 50% credit for it, right?
Fine.
And I don't want people to be confused because Mark the Trainer is a tasty celebrity. So Marty is not Mark the Trainer. Mark the Trainer is Quentin's father. Marty is not Mark the Trainer.
Yeah, Mark the Trainer is my biological father, but on the trade desk, Marty runs the house.
I've taken full responsibility for him.
However, Marty,
which has been rather easy, right?
I try my best.
Yeah.
I don't know if. Hold on, I'm going to see if I can pull this up. Let me. We need to get some proof. I'm going to see if I can share my screen. Can I share my screen, John?
Hold on.
If not, don't worry about it. I've got a picture.
No, we can't right now.
We
can't right now.
Okay, that's fine. People go to Twitter. You will see why Jenny and I can claim Quentin as our own. He's
I gotta
adorable.
see. I want proof.
How old were you? 10? Were you 10?
Yeah, I think I was about 10. Yeah.
You were about 10 years old.
Really?
Yeah.
Yeah, when I came here for one of the live shows.
It was like a summer camp for him, right?
Yes, it was summer camp.
Between Camp Windermere and here, those were your summers, right?
Yeah.
I mean, when you came to Tasty when you were 10, is that when you thought like, oh, I really want to go back there and work there one day? Or was it your dad who said, Quentin, you got to go work at Tasty?
Well, I sort of got into it on my own. I mean, he obviously introduced it to me, but I fell in love with it. I mean, it was really during COVID watching your show, actually, watching Liz and Jenny with my friend's dog next to me on the couch, because I was staying with my friend in Maryland rather than being in New York, because New York, it was really bad. But so I was staying with my friend after spring break. They said, don't come back. And then so after that, we drove from Florida. We drove from Destin, Florida, to Maryland. It took like 24 hours. We had to make stops, pack our stuff up. It was brutal. We were like shaken from all the caffeine we drank to stay up. And then, yeah, I just started learning on the couch with my friend and his dog and just watching Liz and Jenny. And then I took to it, was a member of the research team a few years back. And then, yeah, now I've been on the trade desk for almost 2 years.
So instead of like Disney World for your summer vacation, they took him to like Tasty World, right?
Yes,
They did.
Right. Okay.
I'm gonna bet there's some osmosis. I'm hoping this, Quentin, because I'm hoping my kids have absorbed something that I've said over these years, whether they like it or not.
Bring them in. Bring them in.
There's probably some sort of osmosis, don't you think? Because your dad's been watching for so long, and you've been so ingrained in part of the process between everybody.
Yeah.
You were a household name before you were even on camera.
Yeah, I mean, like hearing him trade throughout the day, because like he's Mark the Trainer because he's a personal trainer. But then like during the day, so he would train people in the morning and train people at night. And then he would raise me and trade during the day, baby in one hand, computer in the other, And so he would trade during the day. And yeah, I mean, the osmosis, the mechanics, all were just flowing through for sure.
How do you think he would have done in the pit? This one.
Me?
With that smile, he would have done great.
I don't know.
He would have been a broker's favorite, right?
Yep.
Right.
Marty, what about you? You've got years on the floor.
I started as a runner in 1980, like in my sophomore year of college. And then when I finished college in 83 is when on Jackson Street, I went and did the Mr. Applicant thing. It was kind of a big deal back then. You guys remember. So I was there from basically 83 till 2018 till I came here. This was my first job. First job interview too. I'm 1 for 1 on job interviews. Okay. Uno for uno. But yeah, I was on the floor for my entire adult life. My father was a trader, so I got to work with him for basically 35 years, which was awesome. My brother was a trader for a long time. I had a couple cousins that were on the floor. It's kind of a, kind of a Bennett family business, so to speak, right?
I love that you said this is your first job, because I always say traders we're not qualified to do much of anything else, except we all find each other.
Right. I came here to see Scott in like 2017 when you guys were first starting. And I walked into this environment and I'm like, I got to work here. Like I was like, Scott, what do I got to do? And he's like, we don't really get any turnover, which I now kind of understand because, coming from the environment that we came from, which is the biggest alpha business on the planet, other than maybe being in a professional sports locker room. I don't even know. And then to come here and, you have all these incredibly talented, younger than me, because I'm basically the elder statesman. And it was like just something that I just threw caution into the wind. I'm like, I got to work here. I had to work here. So,
What's interesting is most people who come to Tasty and that we hire at Tasty, they're people who, were traders on the trading floor or viewers watching, learning, having a understanding of what's going on before they come here. I had a kid call me yesterday interested in a job, and I was asking him option questions and how many shows has he watched and what he watches, and it was none. And I said, look, kid, the people that we bring in have been longtime viewers, and they understand what's going on.
Yeah.
I mean, I watched this show probably from, 2015 to, till I came in, obviously. And you can't, I don't know if it translates, obviously, on air with the personalities you have, but the culture here is just, there's nothing like it. There just isn't anything like it. And, being able to work with, as opposed to the pit where, you could say you're more intelligent than everybody else, but here, there's just so much talent in that room in there. It's basically, been incredible for me. I've changed my life anyway.
We love it, and we're glad to have you on air. Is this your first time on air, Marty?
Yeah, this is it. I'm very nervous.
Wow, look at that.
I'm really nervous.
You couldn't tell.
No, it's this was something that I watched Scott do. When he was just kind of he was natural and organic doing it. So I guess I had. This is a big chair to fill. The Sosnoff seat. It's a big one.
We're happy to have you.
Yeah,
so live from the trade desk, what do we have going on? What are the top movers and shakers today?
All right, let's go over it. So top 20 symbols going through the system. First, we've got Tesla and their IVRs. Tesla, we've got 25%, Palantir, 31%, UNH, 40%, NVIDIA, 10%, Amazon, 30%, Apple, 20%, Meta, 36%, GLD, 28%, Intel, 55%, Robinhood, 29%, Coinbase, 34%, AMD, 33%, Micron, 38%, SoFi, 28%, Oracle, 57%, iBit, 36%, RGTI, 31%, Plug, 41%, Roblox, 61%, and Shopify, 40%.
And this Tesla, he's unfadable, right? This Musk, correct? It's you can't fade this stock, this Tesla.
Recently, you can't. It's been,
recently, right? But in general, I mean, it just goes to show you what you can do with like a 204 IQ and a bong, evidently, right? Because it's just every time I look at it, and I was talking to Quentin about it earlier. It's like, I don't know, it's like what is it? 488 something is the.
As of recent, it's been parabolic. I mean, it hasn't passed its all-time highs yet.
Yeah,
but it's just
when
been
we were on the road, the last time we were on the road,
Yeah.
Johnny, so that was, I don't remember. God, I'm old. They all blend. But
I know the story you're going to tell.
I was talking to a couple of viewers, and they said if it gets to, what did he say? If it gets to 420, it's going to 700.
It was something great.
It wouldn't shock me. It
So,
just
and,
wouldn't.
and so you'll notice like it got to 420 once before, and then it came straight back down, and now it's
Right.
hovering at 429. And once again, I'm not saying I think that. I'm just saying the viewer. I love
Yeah.
talking to other traders and where they think it's going. They said if it gets to the 420 level, it's going to 700.
So I have a question for you guys being on the trade desk. Can you see, do you see the activity? I know you see the most active, the top symbols, but do you see, are people mostly selling puts? Are people mostly buying calls? Like what kind of it, do you see the actual activity?
So from our customer base, we don't necessarily see that. I mean, we have systems that we can look at, I'm sure. And then we also have like overall market data, see like high call volume and stuff like that.
Okay.
A lot of iron condors and a lot of, I mean, I've been seeing a lot of that with just the way that they're trading. They like to maybe in this market, start with short put spreads and then potentially add on. We were talking about that earlier too, turn it into a condor or something. Adjustment techniques are interesting. We were talking about that earlier today too. See a lot of clients that'll maybe throw on a condor. It doesn't matter necessarily what it's in. And then let's assume that the put side goes against them rather quickly. It would be, and you guys talk about it all the time, is adjusting the other side to bring it back into context with it, with the other, might as well get the extra credit that you.
Hold on, I got breaking news real quick.
Yeah.
I just glanced at the chat, and I don't know who they're talking about, but
Yeah.
they did say, wait a minute, who is this man, and why is he so handsome? So I don't know which one they're referring
Well,
to.
probably quick.
No, that's about you, Marty.
Yeah,
That's
oh, yeah.
about you.
Stunning, striking, if you will.
So,
Stunning.
sorry, Marty, I got distracted. I know you were telling some very nice story, but I had to break in.
No worries, no worries. It's just we were talking about how clients in general adjust and what they can do to, increase their ability to keep a position in front of them, if you will. I'll see clients all the time that will have an iron condor on, and let's say that the put side's doing okay, and then the call side's, $25 out of the money, and it just sits there. So it's like it's like having breath mints in your pocket. If you're in your pocket, they're not working. You could take the call side, drop it down, right, and get something out of it. And then we were talking today earlier too. It's about if you have one of those spreads that goes in the money, and you have time left on it and you have extrinsic value on it, you don't need to close it out, I guess, unless you're worried about assignment risk. Or you can just, if you need the buying power, then I guess, you can close it out early at max loss. But I think that it's imperative that they understand that max loss is exactly what it is, obviously, until expiration day. So you can sit and wait. What's the worst thing that'll happen?
Well, and you know what I like to think about a lot as well is, so let's say you got an iron condor on and then it goes against you on the put side. Then when looking at the call side, you can of course like roll it down or just close it out.
Right.
But let's say, you got an iron condor on 5 wide, you sold it for $1.60, something like that, third of the width. And then that call spread's trading for something like 50 or 20 cents. Do you still want that upside risk on for just the extra 20 cents that you're going to take out of it? Do you close out early or roll it down?
It is.
That's up to you. But if the position that you have on currently, if you wouldn't enter it at that price, sometimes like, why would you even keep that on?
Right. Yeah.
Okay, my question. You guys are both on the trade desk right now currently,
Yep.
correct?
Correct.
Can you be requested if they make the phone call?
Yes. Yeah. People request Marty all the time.
Requested me.
People request Marty all the time. Me, not so much. I'm a bit junior to him.
Yeah, no.
But people request Marty.
Quentin's
all the time.
awesome. Don't let him like
I
give you
know,
this
I
fake
know.
humility thing. Okay.
Well, we do love you both. We do love you both. So my last question, and then I know because Jenny and I have to get into Twitter and do some of our shows. But my question to you guys is, how many people a day do you think you talk to?
Oh, I mean, so you guys don't know this about Marty, but Marty's like our best representative on the entire desk.
Yeah.
And so I would say
Want a raise. Okay.
I'm sure it's been reflected. But I would say some days Marty's talking to 80 plus people, whereas I'll do like 50, something like that. And then I've got other things to tend to as well, like preparing for this show, right?
Yes,
but
correct.
Marty will talk to 80 plus people some days. Yeah,
So they're
Marty's
calling
amazing.
in with questions about their positions?
Right before I came on, I have a
So
guy.
Marty, I've called and gotten you before. Do you remember? I've called and I had a
Well, I
problem.
talked to whose brother-in-law did I talk to, or brother?
You talked to my brother.
Okay, there you go. Yeah, he's awesome, by the way. Today I got a call right before I came on the show from one of our clients that just gets into BP problems all the time because he's got 100 SPX positions on, and once you get to that point, and I'm not telling anybody obviously how to trade, you have to have on what's manageable. But if you're constantly adding stuff in your positions that's messing up your buying power, taking it away, you have to get, a lot of them need help with it. I'm happy to do it for them without, you're not trading for them. You're just trying to give them suggestions of how they can increase their buying power positionally wise, because a lot of them will put something on to get more buying power, and then they have like a rogue couple positions.
Yeah, so a lot of what we do is, we handle everything from like account opening to funding to the craziest margin call that you've ever seen. But a lot of our day-to-day is people will call about certain positions and they'll say, I want to do this with it. How can I actually do that? And then that's where we can come in with our knowledge and help them, get what they want. We're not giving them advice or telling them what to do. It's
an observation, right?
Yeah, we're making observations on how you could do what you're looking for.
Got it.
Yeah.
I like it.
All right.
If we get kicked off the air one day, I think we could work on the trade desk.
Hey, gotta get licensed
I don't
first.
think I'm
Please
qualified.
come on over.
I don't think I'm qualified.
You two
I'm
can
not
call and
qualified.
ask me, request me anytime you want, either one of you, or family members too.
I know my brother calls all
Yeah.
the time to probably talk to you, but that's okay. All right, well, thank you, boys, very, very much.
Thank you guys for having us.
Of course, thank you.
The chat loves you both, and we look forward to seeing both of you more on airtime.
All right.
Bye, guys.
Thank you
so much.
guys.
Thank you.
Oh, that was fun.
I know, that was super fun. Those guys are great.
And it's nice having Marty there now on the show.
I know, right? He's a wealth of knowledge, and I have talked to him multiple times, and he did get saddled with my brother the one time, which I felt so bad for.
Oh, saddled with your brother. Well, yeah. It was just a account opening. It wasn't anything crazy. It wasn't like your brother was getting a margin call.
No. My brother did not get a margin call, but he was very confused. He was trying to open different things, and Marty walked him through everything. And I think they talked for about an hour. It was pretty funny.
Look at this. Boo's up 25 now.
I know. Do you want to pop in the platform? So I'm trying to make sure I've got everything up. I think I do. Hold on. Before we pop in, I got to do one thing. So they're next to each other.
Yeah. Got it. All right.
Okay, there we go.
So let's
Stand
pop
by.
into the platform, and then we can take a look at Twitter.
Yes, Spoo's up 25. We are going to, Jenny, Spoo's are, we'll get there in a minute, but right now, E-mini S&Ps are 6,792. Do you think we're going to cross the 6,800 mark today?
No.
No, you think so? You think we're going to stop 9 points shy?
I don't. It's Friday, going to the weekend. I don't know. I don't think so. I don't think so.
I do. I'm good. I'm putting my 6,800 hat on for the E-mini S&Ps.
That's what Liz is gonna be wearing all weekend. Or 68. I didn't make my 6,800 hat yet.
I like that you're just like no. So that would be we'll see. We'll see how it goes. But yeah.
All right. So let's go to Twitter because we haven't gone to Twitter at all. And
all right, let's pop in. There's Quentin. There he is. Hold on.
There he is.
I had to start with that. We will get to everybody. There's Quentin. That's the latest. That was him at 10 years old. I'm so proud of him. I'm so proud of him. He's become like such a intelligent young man, right? Like he's doing great.
You know what I think is the funniest about that picture is like you and I used to get dressed up like newscasters to go to work.
Yeah, we did. Not anymore.
Not anymore. Okay, Mikey, TGIF and Happy Lady Takeover Day. Has been great to see you both all day. We are hitting 7,000 if the government stays shut down.
Well, that's what I was saying.
Yeah, no numbers are coming out. So,
68 today. I'm pretty sure of it.
yeah, I think we. I can see that coming. But and maybe 6,800 today. But
are we boring you?
next week? Next week, maybe 6,800. Maybe today.
Let's keep going down. This is 25 years ago, Palm Inc. was worth more than Apple. Wow. Palm Pilot was worth more than Apple, Amazon, and NVIDIA combined. I appreciate that.
You remember it was called the Palm Pilot.
The Palm Pilot, yeah. You don't remember that? The Palm Pilot?
I mean, I didn't remember it until you just said it.
Oh, well, I'm jogging some short-term memory for you there. Okay. This is from Frank. He put it obviously from the chat, and this is from Dan.
So it's called vertical.
On NLR. I don't know what NLR is. That's why I said it so slow.
Well, type it in slowly so I can read it. NLR. Don't hit Van Eck uranium. Oh, uranium and nuclear.
Uranium and nuclear. I'm surprised you don't know what that is. But let's see. They wanted a call or a call vertical.
Stella call vertical. So if you look at the chart, I'm sure it's skyrocketed just like uranium and nuclear have been.
That might have been in reference to whoever wanted to short Oklo.
Right. Yeah.
So you can take a look at this. This isn't my only issue with this is taking a look at this volume. It isn't the most liquid of stocks, and then take a look at
this strike.
Yeah, look at you can't sell a call vertical 690 at 930. This is a non-liquid product, non-tradable.
And I want to say I appreciate the idea. We didn't even hear of this NLR. We never looked at it before. But the markets are just a little wide. They're just a little bit wide.
And liquidity is our number one. It's liquidity.
Honestly, like there's other like nuclear products and uranium products that are more liquid. What's CCJ? We haven't looked at CCJ lately. We don't even.
You know what? I'm in for uranium at this. You.
It is you just uranium, or is it other things, or like
it's other things too? But it's gone up with it. Like it's kind of.
Yeah. I used to have you.
CCJ, they all look the same, right? They all kind of are following that same path of Oklo has shot up more than anybody else, but I think it's pretty.
Well, I mean, they're all up quite a bit.
Look at this, Jenny.
But you know what? Who hasn't? SMR. SMR has not had the same run.
What is SMR?
I think they're maybe like an Oklo competitor.
Okay.
New Scale. If you go to SMR,
that hasn't had the same run. It doesn't have that same trajectory.
Yeah.
It doesn't. Okay, let's pop back in. I want to make sure we get to everybody. Blue Wackadoo. This was an hour ago. Thank you very much. This is his. He's doing. He's got tranches, 6 lots, 16 delta.
Okay, and
$25 wings. I love it, and I appreciate it. 40% GTC set. So he's got what he's doing, and I love it. I think he stands firm with his 40% GTCs, and he's taking a little bit more risk, but going wider.
And thank you, Eric. Hope you had a great day fishing yesterday.
I know. I love the fishing. Look at this, Frank. I've been a Cubs fan. Oh my goodness.
Is baby Frank. How cute.
Baby Frank was adorable.
Aww.
And then I did want to get to this because I really liked AI that they put this up, AI gone wrong. Okay, regarding the questions below, this was about the confirm and send. We also got this in Twitter. We took it from Twitter. So firms and customers are both short gamma in the at the money or in the AM for the 0DTE SPX. Customers continue to be short gamma in the PM, which is the after, you know what I mean? There's the AM and the PMs. Customers as a group appear to be putting on iron flies in the 0DTEs from the 0DTE SPX data. I like that. I mean, I liked that they gave us this.
Yeah, right. Okay, top 10 volume share of complex strategies. So put spreads, call spreads.
Which means there's your iron. Yeah, there's your iron condor. They're both doing them together.
Well, right, but a lot more put spreads or call spreads. So people taking one side or the other. So you get a move and you can get out.
Yeah.
So short gamma just means selling premium. If you're long more units, here's the thing. If you're long more units, you have long gamma, meaning as the market goes up, you get longer, and the market goes down, you get shorter. But you have theta decay. You're losing theta decay. Every day you're losing it. But if you are short gamma, you're short more units, meaning as the market's going up, you're getting shorter, and as the market's going down, you're getting longer, but you're collecting that theta decay. So that's just for people who don't know what that means. Like if you're short gamma, you're short more units than you're long.
That's very well said. I'm glad you said that. And that's a very professional thing to say, right?
Yeah.
That's not, gamma isn't something that you and I talk about because we don't talk about it from a unit perspective.
I don't watch my gamma anymore as a trader in the pit. I watch my gamma constantly, but as a retail trader,
you had to keep an eye on your gamma when you were a trader in the pit. You don't necessarily have to here.
Yeah, right. So, because it was so big then, and it's like the rate of change of your delta, right? So, but as a retail trader, I don't watch my gamma, but just know if you're like short more units, you're short gamma. Now again, it depends on how close you are at the money, out of the money, but I mean you're never looking like, oh, what's my gamma?
No, I don't know in the last 15 years that I've ever looked at my gamma.
No.
Yeah. And then this is what happened to us in AI.
That's why I said let's look like Vanna White.
I think it's because you can see my hand. Otherwise, you'd look like Vanna White too.
And that's so funny.
Yeah, these are cute. And then Frank comes in with our economic calendar. I don't know if any of that's going to be happening. I just wanted to make sure we got to everybody in Twitter. And it looks like we did.
And it's already 9:57. So
I know we've done a good job keeping us on time today. And what did I get to everybody down here? Oh, this is Jordan. He's looking forward to last call with you guys. Curious to hear why Jenny doesn't want to give it up, because you said you don't want to give up your trading time.
So, I mean, that's when I'm trading in my account, 2:33. 2:33 is always my trading time. I sit at my computer from 2:33 and get all my trade, go through all my positions, make adjustments, add on my trades. So I didn't want to give up that 2:33 trading time, which is my the time that I trade. So I'm going to be in my platform on last call, and Liz is going to be running the show platform.
Well, and that's what I was saying too. I can do both. Like today I've been trading in my account while I've been doing this whole thing. Yeah. So we can do this. I will allow you to stay in your account. I'll stay in our show account, and I'll have mine up as well. As long as we're here. I don't know that I could do it from the studio. How about that?
Right, at home. Yeah, as long as we're at home. Sure.
Yeah.
Sure. Liz can manage many things at once. That's a talent of hers.
It is here, but not if I'm like a fish out of water. Like it's like a first day with a new set of hands in the studio.
Right.
I mean, I'm not allowed to do anything in the studio. I have to sit back and let you run it.
But you know what? We've got such routine down at the SIBO, and we're gonna be doing last call on Tuesdays and Wednesdays. Except next week will just be Tuesday last call.
Jenny, we are 5 points away from 68.
Oh, well, you're looking at SPOOS. Where's SPX? I thought you were. Where's SPX?
Oh, SPOOS. That's what I was saying. We were 7 points away when I was asking you this. Are the SPOOS going to hit 6,800?
Oh, I thought you meant where's SPX right now?
Oh, SPX is not anywhere near there.
So when I said no, I thought you meant SPX.
No, E-mini S&P is right here.
Oh, okay. Yeah. Could they hit 6,800? Sure. I think I was looking at SPX when you asked me that, and that's
because we were only 7 points away, and you're like, no. I was like, okay.
because I was looking at SPX thinking you meant SPX. Because I don't know that the general market, when they're talking about 6,800, I don't know that they're using ES. I think they're using SPX or SPY.
It's definitely not SPY because it's not 6,800. But
or maybe they are using ES. Like if the news says 6,800, are they using ES or are they using SPX?
We're going to find out when it hits it, and the news cycle tells us if it is or not. Because I was going to say, when you were so adamant about it, I was laughing because I was like, there's an 80% chance we're going to hit it at some point today.
No, but if you go to SPX and look at 6,800,
okay, now I'm picking up what you're putting down.
And you look at 6,800 for SPX. I was like, no, there's like 1%.
That's why you were saying no
way, Liz.
I do think in my personal opinion that when the media says it, they use the futures because they always quote these.
Yeah. All right. No, it's 10 o'clock. We're out of time. A quick put on the positions, and I just want to make sure we have no red in the money signs.
Let's go to our trade page, positions.
Any red in the money signs? Nope. All yellow. We're good.
No, we did a decent job managing a lot of this stuff today and recently. We've been pretty good about it.
Okay.
We rolled Citigroup yesterday. That's the one that needed to be rolled.
Yeah, we're fine. Nothing's red. But time's up.
Time's up.
Time's up. You're getting the hook.
All right, everybody thank you for spending your morning with me, Jenny. And everybody have a wonderful weekend. Hopefully if you're in Chicago, go out and enjoy the weather. Good luck at homecoming. Not you, your daughter.
Thank you. Have a wonderful weekend. Have fun at your fundraiser. And everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
Yeah. We'll see you on Monday.
So welcome back to our latest crash course. My name is Jim Schultz. I'm going to be your tour guide for this 5-episode crash course on all things rolling. Now, my objective with these 5 episodes, I want this to be your one-stop shop when it comes to all things rolling. Now, one thing to keep in mind before we get going, all 5 episodes, they are meant to be consumed together. They are meant to be consumed effectively at one time because the content is going to build on each other. Like the content is going to be very continuous from one episode to the next. So keep that in mind as you're working through the material. That's right. This is going to be 5 episodes, and the 5 episodes are going to be episode number 1, this episode. We're going to define what a roll is. Episode number 2, we're going to roll defined risk strategies. Episode number 3, we're going to roll undefined risk strategies. Not surprisingly, episode number 4, we're going to talk about adjusting our profit targets after we've rolled. And then episode number 5, which I think might be the most valuable episode inside the whole course, it's going to be rolling FAQ. So without further ado, let's do it, man. Let's dive into episode number 1 on rolling, and let's define what a roll is. All right, so to kick things off, I want to start with some basic rolling terminology. In the world of options, man, there are so many things going on. There are so many different moving parts that just being able to keep up with the conversations, just being able to understand the terminology, man, that is more than half the battle. We'll get into the specific strategies and all those things in later episodes, but here are the most important rolling terms that you want to become familiar with. So starting with rolling out, this is maybe the most common type of roll, and it simply refers to moving the position from the current cycle to some later cycle. So adding time to the trade. Now that added time, it could be a couple of days, it could be a couple of weeks, it could be a couple of months, whatever. But rolling out is always adding time. Sometimes rolling out is also referred to as rolling forward. Next up, we've got rolling up and rolling down. These simply refer to changing the strike price or prices of your position and moving up the option chain to some higher number or down the option chain to some lower number. Now, it doesn't matter if it's a call or a put. If you move a 100 strike to 105, that's rolling up. If you move a 100 strike to 95, that's rolling down. Pretty self-explanatory. Now, interestingly, the last one, rolling in. This is not the opposite of rolling out, as we never reduce the time in a trade by adjusting expirations. Instead, rolling in refers to moving the strike closer to the current stock price. Again, calls or puts, it doesn't matter. If a stock is trading at 50, let's say, and you roll your 40 strike to 45, that would be rolling it in. Or with that same stock trading at 50, if you roll your 60 strike to 55, that would also be rolling in. You're bringing the strike closer to the action of where the stock currently is in both situations. All right, so now that we're familiar with some rolling terminology, let's go ahead and define what a roll is to begin with. Like, we probably should have led with this, to be honest. But a roll is nothing more than closing the current position and reestablishing a new position that is slightly different. Now, that slight difference, it could come in the form of, the same strikes in a later expiration, that would be rolling out. It could be new strikes in the same expiration, that would be like rolling up or rolling down or rolling in. And of course, you could do both. Like, you could roll out and up. You could roll out and down. You could roll out and in. These are all examples of what a roll actually is. So when it comes to our rolled trades, technically, these are 2 separate, 2 independent trades, but we don't normally look at them that way. We kind of view them within the same trade package, so to speak. This is helpful because it gives our original hypothesis more time to be proven correct, and it allows us to lean into something that you hear us say on the network all the time: duration over direction. Now, either way, regardless of how you view it mentally, or regardless of how you actually roll your position, whether it be rolling it out or rolling it in or staying in the same cycle or going out to a new cycle or whatever, one thing you have to be very, very aware of and you have to recognize is your mark price. The current price of the rolled strategy is going to change once you make that roll. Let me show you what I mean. Suppose you have a short put in Apple at the 160 strike that you originally sold for $2 when Apple was sitting at 175. Now Apple is also at 160, so your strike is being tested, and so your option is now selling for a $5 mark. Thus, you have a $3 loss on your hand. So you might want to roll this option to the next cycle. Suppose that in doing so, without changing strikes or adding anything else at all, just the same strategy, you would be able to bring in a credit of $4, which that might be a little bit high, but I want to keep the numbers different inside of the example so you can more easily follow what's going on. If you did this, this would bring your total credits to $6, which is great. But once this position moves out to the next cycle, its mark will no longer be $5. It will be more than $5 because the options have more time associated with them by being in the next cycle. In fact, the mark will be higher by the amount of the credit that you rolled for, because that's where the credit roll comes from, which simply means you still have some work to do to bring the position back to profitability. And again, lean on duration over direction. I will see you guys in episode number 2, rolling defined risk strategies. So welcome back to our rolling crash course. My name is Jim Schultz, and our mission today continues forward. Back in episode number 1, we laid out some rolling basics, right? Laid down the fundamentals to understand what rolling is, what we're trying to do, and familiarize ourselves with some of the terminology. Here in episode number 2, we're going to talk specifically about rolling defined risk strategies. So this is what gets everybody excited. Your verticals, your iron condors, your diagonals, etc. So without further ado, let's do it, man. Let's dive into episode number 2 of the rolling crash course, rolling defined risk strategies. All right, so before we get into any specifics, here is the most important thing that you need to pull away from this entire episode. Maybe one of the most important things you need to pull away from the entire crash course. Whenever you roll a defined risk strategy, you need to make sure that you do so for a credit. This needs to be adhered to 98% of the time. Now, why isn't it 100% of the time? Well, more on that in a later episode, but this is so important. Let's break it down why it's so important. So why is it so important that you roll your defined risk strategies for credits? Well, it's pretty simple. Doing this ensures that you reduce your risk. Suppose, for example, you have a 195 short put spread in Disney that you sold for $1.80. At trade entry, your total risk in the trade is $3.20, and that total risk is capped regardless of what might happen to the price of Disney. I mean, it could fall to 0, and that risk would still be the same. Now suppose some time goes by and the trade isn't quite working, but you can roll it out at the same strikes to the next cycle for a 15-cent credit. It's not a huge difference, but look how that changes your risk-return dynamics. You've now collected a total of $1.95 on that same $5 wide spread. This means your total risk has dropped from $3.20 to $3.05, all because you rolled for a credit. Suppose instead you had to pay a debit of 10 cents to roll. Now your profit potential has fallen, your total risk has risen. This is not what you want for a defined risk strategy. All right, so rolling for a credit might sound too good to be true. Well, it's not, if you can do it. The reality is a lot of times you will have to pay a debit to roll a defined risk strategy, which, as we've just seen, increases your risk. To further illustrate how all of this works together, let's start working through some of the more popular defined risk strategies that we use at Tasty. And let's start with maybe the granddaddy of them all in the defined risk strategy genre, the vertical spread. So vertical spreads are fairly straightforward. If the trade is working, so a short vertical spread is out of the money or a long vertical spread is in the money, you should be able to close the trade for some kind of profit, which is usually preferred at that time over rolling. Now, what if the trade is kind of in the middle? So it's not really working, but it's also not really not working. That's where you can usually roll for a credit. If the trade isn't working, so the short vertical spread is in the money or the long vertical spread is out of the money, this is where you'll likely have to pay a debit to roll the strategy. So that is a no-go. Now, you might be wondering, Jim, how does that work? Like, why is it a debit when it's not working? Well, without even getting into the mathematics or even taking a really, really close look at what's going on, we can actually zoom out and take a much easier approach. The answer is really straightforward. If the trade isn't working, whether it's a short vertical spread or a long vertical spread, it doesn't matter. If you want more time on the trade, you have to pay for that. you have to assume more risk. Because think about it, if you didn't, if it was a credit, then we would never have to take any losing trades ever, which obviously can't be the case. All right, so that's all you really need to know when it comes to rolling vertical spreads, whether they're short or long, it doesn't really matter. Let's now move into an iron condor, which is going to be a pretty simple transition because an iron condor is just two vertical spreads. So with an iron condor, when it comes to rolling out, we want to view it very much the same as a vertical, which makes sense because, again, it is comprised of two verticals. If both spreads are out of the money, so the stock is between your two short strikes, then rather than roll, just take the trade off with whatever profit you might have. Now, if you don't have a profit at that time, which certainly does happen with iron condors, then you probably just need more time. But what happens when one side goes in the money? Well, here your roll is going to have two parts. You're going to have the tested side, that's going to be a debit to roll. You're going to have the untested side, that's going to be a credit to roll. So what you're going to want to do is net them together to see if your net is a credit or a debit. If it's a net credit, then go ahead and roll it out. If it's a net debit, then pass. And by pass, I mean sit on the trade and hold it longer, giving it a chance to come back. Again, duration over direction. All right, so those are some iron condor roll basics. Now, I actually have more to say about iron condors, but I'm going to save that for episode number 5 on the FAQs because there are some specific questions that I'm asked on a very regular basis when it comes to iron condors and rolling. And so I'm going to put that information in that segment. But let's now turn our attention to the last example that we're going to work through here in this episode. Let's dig into some diagonals, which are quite unique because of the way that they are structured. So with diagonal spreads at Tasty, we buy an in-the-money option in the back month, and we sell an out-of-the-money option in the front month. And the idea is, if the stock moves in our favor, so this would be higher for a call diagonal or lower for a put diagonal, then we'll just take it off for a winner and be done with it. But what happens if the stock moves against us? The way this strategy is set up is we have a built-in roll ready to go. That front month short is going to expire worthless. So we're going to be able to reload again in another expiration. Now this second expiration, it could be a weekly option that expires before you're long. It could be the same expiration as you're long, thus creating a vertical spread. That would also be fine. You can do this at the same strike, or you can even choose a different strike, which would usually be a closer strike. And the best part is you're always going to be able to do this for a credit. It will always be a credit because you're just adding another new short option to the mix, and short options alone are always credits. Now, how do you choose? The same strike or a different strike, a closer strike? Well, the same strike is nice because your spread width will be the same, so the credit you collect just reduces your overall risk and boosts your profit potential, similar to a vertical spread. But you could also consider a closer strike, which will bring in more credit, but it will also shrink the spread width and reduce your overall profit potential. I would only consider this if the stock has really moved against you and you want to aggressively take risk off the table. Wow, man, and just like that, we are done. Everything you ever wanted to know about rolling defined risk strategies. Now, some of you out there might be thinking, Jim, that was not everything I ever wanted to know, because I still have some questions. Like, what do I do about rolling the untested side of an iron condor? What do I do at 21 days to go? Hey, those are outstanding questions. They're so outstanding, in fact, that I've placed them in a special episode, episode number 5, the FAQ. So definitely stay tuned and hang around until you get to that one. We're going to cover all that and more in that episode. But either way, man, but I will see you guys in episode number 3, where things really get exciting with rolling undefined risk strategies. So I will see you there. So welcome back to the Rolling Crash Course. My name is Jim Schultz. I am still your tour guide, and we are now into episode number 3. Now, we just got through with episode number 2, where we talked about rolling defined risk strategies. So naturally, we're going to hop onto the other side of the fence with this episode and talk about rolling undefined risk strategies. Now, a quick little disclaimer. We've already covered a lot of things as they relate to strategy management in the strategy management crash course that's already on the YouTube channel. Now, my goal is not to just repeat all the things we've already covered in that course. So use the information in this course alongside the information in that course to give you a more complete, holistic view of position management. My hope is still inside of this very episode, you will discover a couple of brand new nuggets along the way that you can use when it comes to adjusting your position. So without further ado, let's hop right in, man. Episode number 3, Rolling Undefined Risk Strategies of the Rolling Crash Course. All right, now before we get into any specific strategies, a couple of important things to note. Number 1, one of the great things about undefined risk strategies is the simple fact that whenever you roll out in time, you're going to be able to do so for a credit. Now, does this mean that you should never roll an undefined risk strategy for a debit? Not necessarily, and I'll have more to say on that when we get into the FAQs in episode number 5. But the beautiful thing about rolling for a credit with an undefined risk strategy is whenever you do that, 2 things happen simultaneously. Number 1, you reduce your risk. Number 2, you widen your break-even points. These are 2 very, very powerful implications of rolling an undefined risk strategy for a credit, because with undefined risk strategies, here is priority number 1. This is mission critical. You need to control your risk. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. So, okay, now that we've got those couple of things in our back pocket, let's move into 2 of the most popular undefined risk strategies that we utilize. All right, so we're going to start with the short strangle, but a quick little disclaimer that actually applies to any undefined risk strategy. If you're at 21 days to go and you're not profitable on the position or as profitable as you would like to be, then it's time to roll it out to the next cycle. You can keep the same strikes. You can even move the strikes up and down. Like, there's a couple different ways that you could handle this. But either way, it's time to go ahead and move this guy out. Doing so allows you to avoid the increased gamma in the position that comes near expiration. This is important to avoid because more gamma means more directional bias. That's not something that we want to voluntarily sign up for. So, all right, the short strangle. With a short strangle, you have a short put below the stock price and a short call above the stock price. And the simplest way to begin thinking about adjustments is this. If the stock is between those 2 strikes, don't do anything. The trade is working, so you don't have to start adjusting. Of course, if you want to be a little bit more preemptive with your adjustments, a little bit more aggressive, and start rolling your call down when the stock drops or rolling your put up when the stock rises, you could do that to help neutralize your delta. But for our purposes here, we're going to work through the simpler approach, which I'm not sure is any less effective than the more aggressive approach. So let's suppose that your put strike eventually gets tested. This is when you'll want to roll your call strike down to bring in more credit and improve your break-even points. When you roll that call strike down, look to reduce your position deltas by about 30 to 50%. Reduce them by more if you want to be less directional, and reduce them by less if you want to be more directional. Similarly, if the call strike is tested, roll the put strike up and do so such that your position deltas are again reduced by 30 to 50%. Now, keep in mind, as you make these rolls, this delta reduction is the magnitude of the delta, not necessarily a mathematical reduction in delta. Cutting position deltas from positive 50 to positive 25 is a 50% reduction. But in this context, cutting position deltas from minus 60 to minus 30 is also a 50% reduction, even though the number technically, mathematically, got larger. All right, so that's how you roll up and down. That's how you start thinking about rolling up and down when your strangle strikes are tested. But what about the time component? What about rolling out? How do we throw that into the mix? Well, this is a lot more of a gray area, and there's going to be a lot of subjectivity that comes into play. But here are a couple of things to think about. So if it's very early in the life of the trade, like still 40 plus days to expiration, it might be a bit too early to roll it out just yet. Of course, roll it up and down to reduce those deltas, but staying in the current cycle, that might be the move here. here. Now, what if you're already close to 21 days to go? So anything, let's say 29 or below, and you're tested. Probably go ahead and roll it out too, because you're getting close to that 21-day marker where you're going to want to roll it anyway. Now, if you're in the middle, like somewhere 30 to 40 days to go, this is a judgment call for sure. Roll it out if you want to lessen your exposure to the Greeks, and keep it where it is if you want to benefit more from the stock reversing back in your favor, but this is very much up to you. All right, so that's how you begin to think about rolling a strangle. Again, more on that specifically in the FAQ section. But what I want to do now, let's move into the other strategy that I wanted to cover here today, the short straddle. So let's have a look. So similar to a short strangle, the short straddle has a short put and a short call, but here they have a shared strike. So when it comes time to roll, one strike is always tested. So how do you adjust your rolling strategy? Well, your first move, should you need an adjustment, will not be to roll one side up or down. That would bring you into an inverted strangle, which is definitely necessary at times. And it's a tool that we use often, but it's not usually our first go-to move. Instead, you'll look to roll out in time first. So not exactly the same process as a short strangle. All right, great. But how do you know when to roll out? Well, here you'll want to use your break-even points rather than the strikes themselves. If either break-even point gets hit, that's when I would look to roll out, especially if there's 20, 25, 30, 35 days to go in the trade. Now, if you're really early in the life of the trade, like 40 plus days to expiration, and one of your break-even points gets hit, you could maybe hold it a bit longer to see if it comes back before you want to roll, but I would give that a short leash, man. Again, this is very, very subjective, but it's something to think about, and you don't want to build bad habits. But holding on to the trade a little bit could be warranted here. All right, so rolling a short straddle is in the books. Rolling a short strangle is in the books. Again, guys, don't forget, use this crash course in conjunction with the other crash course that we already have on strategy management. And don't miss episode number 5 of this crash course, where we're going to go through the FAQs related to all of these different things. But that's it, man. Episode number 3, rolling undefined risk strategies, is in the books. So welcome back to the Rolling Crash Course. My name is Jim Schultz, and you made it, man. We are now in episode number 4 of this Rolling Crash Course. We've already laid down some rolling basics. We've gone over rolling defined risk strategies. We've gone over rolling undefined risk strategies. Well, here in episode number 4, we're going to begin to put all of that together. We're going to talk about how do you adjust your profit targets once you've rolled your position. So without further ado, let's do it, man. Let's dive right into episode number 4 of the Rolling Crash Course. All right, so your position has been tested, and you've rolled accordingly, whether it's up, down, out, or some little combo deal across the board. Like, you've made the appropriate move. So now the question becomes, what should you do with your profit targets? Now, this is going to be a little overlap from what we've already covered in the previous episodes, but still, the thing you want to recognize first and foremost is how have your risk-return dynamics changed? Let's take a look. Remember that whether you roll a defined risk strategy or an undefined risk strategy, the objective is to reduce overall risk in the trade. This is easy to see with defined risk strategies, where when you roll and you don't widen the strikes, any credit you collect goes towards decreasing your max loss and increasing your max profit. Thus, you're able to improve that risk-return dynamic in your favor. Similarly, with undefined risk strategies, if you roll the whole strategy out at the same strikes, you roll the untested side in closer to the action, or some combination of the two, again, you're improving the risk-return dynamic by taking risk off the table, decreasing your max loss and increasing your max profit. Okay, so now you can probably see that rolling and adjusting and managing your positions, like, this is going to have a significant impact on that risk-return relationship. And the goal, of course, is to always improve that relationship. All right, so how should you adjust your profit targets once you've adjusted the position? Well, the answer to that question is largely going to depend on whether or not you view this role as an offensive role or a defensive role. Let's dive in deeper to what I mean by that, and let's start with what a defensive roll looks like. So most rolls, almost by definition, are going to be defensive in nature. The only reason that you would roll a position in the first place is if it's not going according to plan. So you won't usually find yourself feeling like you have all the leverage when you're rolling a position. Instead, with a roll, you're often just looking to plug a leak or stop the bleeding a bit before you consider your next move. Hence, the default setting you should apply to all of your rolls is that of a defensive stance. And this is probably why this whole process is often referred to as defending your position. All right, so given the fact that most rolls are defensive in nature, it kind of logically follows that we might want to consider paring down our profit targets a bit once we've rolled a position. That makes a lot of sense. Well, there are different ways that you could do this, and ultimately which one you choose is of course going to be completely up to you. But here are a few things that you can think about. So there are effectively 4 different ways that you could adjust your profit target now that you have rolled your position. First, you could keep your original profit target. Even though the target itself hasn't changed, this is very much a defensive move because your total credits collected on the position have increased, meaning you have more credits to work with, so your original target is a smaller percentage now than it was. Second, you could reduce your profit target to a smaller profit than you originally targeted. This lowers the hurdle that you need to jump over, i.e. the type of move you need the stock to make to bring the position back, making it more likely that you can hit this lower, more attainable target. Third, you could target a scratch, like just break even. There will be times when you just want the trade off your board and you'd be over the moon with a wash. Remember, you're playing defense, so turning a loser into a scratch isn't really that much different from booking an outright winner from the beginning. And fourth, you could target a small loser. These are going to be your dire situations where you're sitting on a big loss and you'd be perfectly fine with just turning the big loser into a smaller, more manageable loser. This is going to be used for extreme situations only, but sometimes you just have to wave the white flag and be realistic about your expectations. Lastly, just as a side note, even though the same basic principles apply, due to the undefined nature of naked, undefined risk strategies, how you adjust your profit targets on undefined risk strategies is a lot more important than how you adjust your profit targets on defined risk strategies. All right, so that's pretty much everything you need to know when it comes to rolling defensively. But what about rolling offensively? Well, this situation is really only going to apply in one specific circumstance. You had 21 days to go, you have a slightly profitable position, and you want to roll it out. You want to roll it out because IV is still elevated or IVR is still elevated or whatever reason you might have for keeping that position on. Well, here, you're in a really, really great spot because you're going to collect a credit when you roll that position, but this position is already working. So you have a lot of leverage that you can use when it comes to adjusting your profit targets. And you could even warrant kind of ratcheting up that profit target just a little bit if you wanted to. I would just be very careful and very cautious with how you approach this because it could start to build bad habits. It might be a better, more prudent decision to maintain the original profit target that you had and just use that leverage to kind of increase the probability that you're going to get there. All right, guys, and just like that, man, we made it. Episode number 4 of the Rolling Crash Course is in the books. How to adjust your profit targets on a rolled position.
Boom.
So welcome back to the Rolling Crash Course. My name is Jim Schultz, and you made it, man. We are in episode number 5. So I would argue that this is the most valuable episode of the entire Crash Course. Because for the next, 10 or 15 or 20 minutes, however long it ends up being, we're going to talk about some rolling FAQ. Now, I'd be willing to bet that in the previous 4 episodes, episode 1, 2, 3, and 4, you've had some questions along the way. Well, my goal and my intention with these FAQs is I want to fill in some, maybe even all of the gaps that you've had along the way here in episode number 5, Rolling FAQ. So without further ado, let's do it, man. Let's dive right in to episode number 5 of the Rolling Crash Course. All right, so let's dive right in because we have a lot to get to. FAQ number 1. Now, these are in no particular order, but our first FAQ. What do you do when you have a position that's been tested very early in the cycle? You still have like 35 days to go or 40 days to go or 43 days to go. Like, do you still roll that position? Like, do you still move that position out? Do you still move, one of your strikes if it's tested? This one is a little bit trickier. The safe, diplomatic answer is yes. Roll the defined risk strategy if you can for a credit, and roll the undefined risk strategy for sure because you can always do it for a credit. But I gotta be honest, this is a unique situation. It's kind of a gray area. So if you wanted to wait just a wee bit longer to see if the market might come back to you, to see if things don't normalize, I gotta be honest, man. I don't hate it. I don't hate it at all. Just don't tell Tom that you did it. All right, so FAQ number 2. What do you do when your strikes are not available, the strikes that you currently have in your position, are not available in the next cycle? How do you handle that? Well, there's actually a few things that you want to consider here, so let's have a look. So first, if the strikes aren't available in the next monthly cycle, they will be eventually. So you could wait until more strikes begin to show up in that cycle, which usually happens with at least a few weeks to go in the cycle. But second, you could also consider rolling into a nearer term weekly cycle. These cycles typically have more strikes available. Just be mindful of the bid-ask spread differential and make sure that it isn't super, super wide, making a fill in that option a much more challenging task. But third, you could always roll your strikes up or down too, even if you don't want to, just to get into that next monthly cycle. When you do this, just be aware that you are potentially altering the intrinsic value of the position. More specifically, assuming the strike or strikes are in the money, whenever you move the strike further away from the stock price, it will boost your credit collected, but it will always move the position deeper in the money. Similarly, when you move the strike closer to the stock price, it will lessen your credit collected and possibly even require a net debit, but you are reducing the in-the-moneyness or intrinsic value of the position. Now, which should you choose? There is no right or wrong answer. It's all about gimmies and gotchas, but those are the things to consider. So FAQ number 3, 21 days to go. Defined risk and undefined risk. Handle these guys differently or handle them the same? Well, here is how you want to think about this. Undefined risk. Always roll at 21 days to go. Don't think about it. Don't debate it. Don't hesitate. Just go ahead and do it. There's no reason not to do that because you can always do it for a credit. But defined risk. If you can roll at 21 days to go for a credit, then go ahead and do it. But if you can't and it's a debit, then just sit on it. Sit on it and hold it all the way to expiration if you need to. Remember, you have that long leg in place, so you're not exposed to the gamma risk that you would be with a naked position. So when it comes to 21 days to go, defined risk and undefined risk strategies need to be handled differently, and this is how I would think about them. All right, so moving right along, FAQ number 4. Are there any exceptions to the never roll for a debit rule? Yes. Let's look at a couple of them. There are 2 main exceptions to the never pay a debit to roll rule. The first is with an undefined risk strategy like a strangle, inverted strangle, or even just a short put. Paying a debit to roll when you recenter your strikes is definitely something to consider. Now, if you don't want to mess with this and just keep rolling for credits, like that's always an option. But if you want to reposition your strikes into a more favorable spot and you're willing to use some of your collected credits to pay for that debit roll, then by all means, it's something to think through. Second, with a defined risk strategy, one situation where you might want to consider paying to roll is, say, a vertical spread where the cycle that you're rolling to has earnings. Earnings are binary events that always have the potential for explosive moves, so it might be worth it to you to pay 20 cents or 35 cents to roll a $5 wide vertical into that cycle and see if the earnings can bail you out. Yes, you are adding risk to the trade and you must be aware of that, but the potential payday from an earnings move in your favor might make it worthwhile to consider. All right, so FAQ number 5, and this one is kind of a twofer, and it is dealing with our old pal, the iron condor. So number 1, should you roll the untested side of an iron condor when the other side is tested? And number 2, should you consider legging out of the strategy when one side is tested? Let's dig in. As for rolling the untested side of an iron condor when one side is tested, yes, you can certainly do that. And if risk reduction is your primary goal, then you should absolutely consider this adjustment. Just be aware that the closer you bring those short strikes together, the more and more difficult you're making it to make money. This is largely because the region of profitability is shrinking smaller and smaller, and with the long options on each side, your margin for error to make money is already on the small side due to the friction between the longs and the shorts in the strategy. So yes, you can roll the untested side in on an iron condor, but don't forget, you can also choose to do nothing. And I would also add that if risk reduction in a defined risk strategy is your primary goal, I have to point out, you might be trading too large. Your total risk in a defined risk trade should be controlled on entry. It shouldn't be something that you feel pressured to reduce during the life of the trade. Like, you want to have full freedom and flexibility to do what you want to do in a given moment, not feel like you have to do something. Okay, fair enough. But what about potentially legging out of an iron condor? So rather than roll the untested side in, why not just take it off? Well, this is definitely an option to consider, and you can certainly do that. Our research has shown that this doesn't really help you over time, but that doesn't mean you can't do it. It might not help you per se, but it doesn't appear to hurt you either. So if you want to close the untested side and just handle the tested side, by all means, give it a go. Just be aware that keeping the untested side on can really be helpful when it comes to rolling the strategy forward, though. This is because you'll always be able to roll the untested side for a credit, whereas the tested side will usually require a debit. So by keeping the untested side on, it does give you more options to keep rolling your iron condor forward for credits. So moving right along, FAQ number 6. Why is this so important when it comes to rolling a vertical spread that you keep your strikes the same? Why not widen those strikes out to improve that credit? Well, there are a couple of parts to this, and let's have a look. With a vertical spread, as we talked about back in episode number 2, if you roll for a credit and you keep your strikes the same, you're always improving that risk-return dynamic. You're decreasing potential risk and increasing potential return. That's good. But if you widen your strikes, that might not be the case. Suppose you had a $5 wide vertical that you collected $2 on at order entry. Now you want to roll the position, but to keep the same strikes, you would have to pay a 40-cent debit. So that's a no-go. But let's say if you widen to a $7 wide vertical, you flip that into a 90-cent credit. Why not do that? Well, that credit does go to improving your profit potential, as you now have $2.90 collected, not just $2, so that's good. But you also now have a $7 wide vertical, and your total risk has also increased from $3 in the original trade to now $4.10, or the $7 width, less the $2.90 collected. The last thing we want to do is add risk to a rolled vertical spread, so that's why this is a no-go. All right, so FAQ number 7. Are there any situations where normally you would roll and the mechanics suggest that you should roll, but you actually don't want to roll? Are there any special situations where this is the case? Yes. Here's at least one example. There's probably more than this example, but I think this is the one that is going to be the most common one that we come across as tasty traders. You have a binary event in the next cycle. The next cycle that you were thinking about rolling too. So this could be like a Federal Reserve announcement. This could be like an earnings date. Those would be two classic examples. And maybe you just don't want to deal with it. Like maybe you don't want to roll into that cycle because you don't want to have your position on during that event. That makes perfect sense. So what do? Well, here, maybe you roll into a weekly cycle before that event. That's an option. Maybe you close the position altogether. That's an option. And maybe, just maybe, you hold that position just a wee bit longer to see if the market comes back to you. Just don't tell Tom. All right, so FAQ number 8. This video is never going to end. How do you track your P&L on a rolled position? Well, let's have a look. This one is really simple because all you need to do is pull up the order chains. Doing this will show you every roll that you made, every piece to the trade package compared to the new mark price, which will always give you an accurate real-time P&L for that position. And lastly, believe it or not, we are very close to the end now. FAQ number 9. This might be the number one question that I am asked as it relates to rolling on a regular basis. Jim, I have a strangle on. I've made my first roll because one side was tested. How do I know when it's time to roll again? Let's take a look. This situation is very much a gray area, and there is no hard and fast rule, so keep that in mind. But once you make that first strangle roll and you reduce your directional bias by 30 to 50%, how do you know when to roll again? Well, here, I would normally look at my new break-even points. If one of those gets hit, it might be time to move into a straddle. Okay, so now you're in a straddle. How do you know when to roll into an inverted strangle? Well, again, I would use the break-even points. Once those are hit, it might be time to consider moving into an inverted strangle. You could sit, do nothing, and wait a wee bit longer, but this is the time when moving into the inverted strangle is absolutely on the table. All right, so now I'm into an inverted strangle. Now what do I do? Well, generally speaking, you've reached the final stop on the train tracks, as I like to say. You could make the inversion even wider. That's a possibility. You could consider paying a debit to uninvert, also a possibility. But by and large, the default setting here will be to do nothing, let the extrinsic value fall off the options, and hope the stock stays within your short strikes. All right, so that was all that I had planned for the rolling FAQ. But you know, man, we are having so much fun. Let's toss in a couple bonus FAQs. So these are a couple of FAQs that came through my Twitter feed just recently that I wanted to include here in the crash course. So the first one came from Larry over there at LT Baxter over there on Twitter. So definitely give him a look, give him a follow, and connect with him. He had a great question. He said, Jim, why don't I just forget about rolling? Why don't I just close the positions and find a higher probability setup and just kind of start fresh? Because rolling is just technically starting a new position anyway. That's a really, really great question. Let's dive in. So to be clear, that itself is a solid strategy. Like, don't roll, just take what comes by 21 days to go and then move on from the trade either way. We have found, however, that by following our adjustment mechanics, adding duration to our losing positions, and doing so in ways that always look to reduce risk, it's worthwhile to stick with a losing trade for at least a little bit to give it a chance to come back. But not even rolling at all, as Larry suggests, is certainly an option. And it's a good one at that. And second, and lastly, the final FAQ of the whole crash course, I promise. Mark over there at MarkNoCollins11 on Twitter. So definitely give him a look. He wanted to know, hey, Jim, wait a minute. If I have a deep in the money short put, can I just keep rolling this thing out forever? Like, can I just keep rolling this thing out forever, keep picking up extrinsic value until the position recovers? Can I do that? And the answer is, the short answer is, the long answer is, yes, you certainly can do that. At this point, a deep in the money short put is basically just stock. It's basically just stock. You hold on to it for as long as you can. You get a little extrinsic value along the way as a bit of a kicker, and you just hold it until the position recovers. You can absolutely, unequivocally do that. Wow, man. And like that, we are finished. I promise. We are done. The rolling crash course is done. The FAQs are over. It is finished. And so, guys, I am so humbled. I am so appreciative of your attention and your time and your investment in this crash course and maybe any of the other crash courses that you have checked out. We now have about a handful of them on the YouTube channel, so definitely give those a look if you haven't done so already.
I was very, very, very shy as a child. I was shy. I didn't really talk until I was probably in 5th or 6th grade. And that's why my dad always said my speech is as fast as it is, because I didn't speak for the first 8 years, and then I had to keep making up for it. So then my dad was in a wheelchair my entire life. He had muscular dystrophy. His limb girdle, so it was his arms, his legs that didn't work. So he had very strong hands, very strong mind, very strong feet. So he could drive, and he drove an electric wheelchair. So he's very defining in my life in the fact that he was this very gentle creature who, instead of showing you how to do something, could talk you through anything. He was interesting because he really facilitated a level of independence. I got put into things at a young age. Like I took auto shop in high school. I was the only girl because my dad said, I can't help you change a tire. I can't help you if you run out of gas. You're gonna have to do this on your own. The counterbalance to that was my mom was also extraordinarily independent because she had to be as well. So my mom would be the one mowing the grass. My mom got on the roof to clean up the gutters. So watching both these people that were just very, very, very independent in their own rights was pretty, really kind of cool to grow up with. My mom at this time managed a golf course called Big Run, and she was managing the bar, and lots of traders would come in, and she found $30,000 in an unmarked envelope underneath a seat and wound up giving it back to the person, and they were so thankful of this, and they said, is there anything we can do? Because she didn't even look in the envelope, just handed the envelope back to whoever it was the next week when they came in. And it wound up being the head of Bear Stearns in the bond room floor. She said, my daughter is in finance, and is there any kind of internship that you can do? It was my junior year in college. He's like, you know what? Absolutely. So I got my internship for between my junior and senior year on the bond room for Bear Stearns. That bond room floor really changed my life. It was one of the most exciting places I'd ever been in my entire life. And it was where I found my people. No one told me to slow down. No one. I graduated early in December. I got recruited from Anderson Consulting. So I went down the corporate finance route and sat behind a desk, and I said, I can't do this. I decided to call the trading floor every single day, but I got him so many times where I'd be like, Mike, it's Liz again. How was your kid's soccer game? Because I'd called so many times, I knew about him and things like that. So he finally said, stop calling me, you got a job, get in here. And then I worked there for the next 12 years. Learning how to trade in your own money, learning how to make money for you, it is a very, very, very liberating experience. So I have the ability to say I'm with my husband because I love my husband, not because, financially we're stuck together or anything of that nature. This is the one industry where it's you versus you. It doesn't matter if you're 14 or 85. It's something that you can do and make money with that is completely up to you. You don't need anybody else. There's no inventory. It's your time, your money, and your risk tolerance.
It's so crazy because when it comes to roller coasters, I'm completely scared of those. Still to this day, I'm not a roller coaster person, but I definitely was more of a daredevil when I was a kid. Kindergarten, second, first, third grade, I was definitely the class clown for sure. My mom worked at a daycare. She ran a daycare, and this was, growing up in Miami, and my dad worked for IBM. It was definitely impressed upon me that I needed to investigate something along the lines of doctor or lawyer. Like that was definitely something that was pressed upon me very early on. By high school, I decided I was gonna be an anesthesiologist. I heard they make $100K, you know what I mean? Like I didn't know anything about really the path to be an anesthesiologist. I just heard they made a good salary. I heard that you could get there via chemistry, which I really found that I liked junior year of high school. So yeah, I was like, cool, I'll go this route. And by the time I started classes as an undergrad, chemistry I liked a whole lot, but the biology part I didn't. And so the anesthesiology thing went out the window. And at that point, I started looking at other things that I was gonna do with chemistry along the way. Applied to Chapel Hill, I applied to North Carolina State, didn't hear a word from them, but because of the connection with the guy that I had in my undergrad and that he had at Wisconsin, heard from them right away, and I said, I guess I'm going for the summer. And I ran into the program that I think I'd been searching for all my life, which was material science and engineering. And I've been searching for that because I'll continue to say it, people laugh at me every time, but I was a huge fan of the show MacGyver. And that show was just incredible to me that this guy could find things with these materials and make whatever he wanted out of them. And that's exactly what material science and engineering was. And so that's where engineering came into play, and that's how I wound up at Wisconsin. So I did a master's degree there, and I started looking around for a job. And it's around this time period that finance starts to enter my life, because I was blindsided by finance in a way. It was a recession when I finished my master's degree, and I couldn't get a job. I cast a pretty wide net. I mean, I was really kind of ready for anything. At this point, I was actually 30, looking around for different jobs, and I ended up coming to a career fair at the University of Chicago. ended up meeting Peak Six Investments, which is eventually where I worked at, which is an options trading firm. It was the funniest thing. They gave you this one sheet page, and it was like, do you like video games? And all these kind of weird questions, to be honest with you. And even when I went to the interview, I mean, I was still in Madison. I drove down to Chicago 2.5 hours, and the whole way I'm like, what am I doing? I'm an engineer. Like, I'm really gonna work at an options trading firm? What do I know about that? And I go there, I go to the interview. It was, a lot of different questions. A lot of it was math related, like, what's the square root of 139? I mean, it's a weird question to ask somebody, but there's methods of trying to figure it out. And that's what they wanted to see. Do you panic or can you figure it out? There's about 12 of us that are trading assistants. And the idea is that for the first 6 to 9 months, you're learning how to trade options day in and day out. And even though we weren't working on the floor, it's the upstairs extension of the floor. So we were doing mock trading in a classroom, which is really hard. And then you're also day in and day out giving ideas on the desk, which is interesting because you're trying to learn and you give an idea to somebody that you want to trade something, and half the time they'll be like, that's a stupid idea, I don't care. Like you have to deal with that, right? You have to deal with rejection, you have to deal with failure, success. It was a lot of different things before you could actually get your portfolio, which took me about 11 months to get my own portfolio. The way that I learned was, if you like a trade, you put that trade on as big as possible because eventually it's going to work in your favor. But we also traded very differently. I mean, we traded options along with hedging with stock, right? Which is a lot more expensive than what most retail traders do. What we do here is just try to help people find their comfort zone. Try to give them a few guidelines. I mean, our mechanics aren't gospel, but it works for people who don't have any mechanics at all. You gotta have some mechanics in this market. Otherwise, you can find yourself lost at times. So every day I go on, I try to talk about things that I see, things that I'm doing, and personal and trading. I mean, we're just so real and personable, and I don't necessarily know if you get that. No, you don't get that from other places. I mean, that's the one thing that we have that's different than anybody else.
I grew up as an only child, so I had like a lot of imagination. I was constantly like reading books. Like I learned to read like at a really young age, and my mom was always just like fostering that. I would get into telling jokes with my grandpa, and I would like check out joke books from the library. I remember one, this is an actual book, it was called like Snappy Comebacks and like Funny Insults or something, and I must have checked that book out like 5 or 10 times. I grew up just very, very solidly middle class. Both of my parents are veterans, and they are both in the Air Force. That's actually how they met. I like to imagine it was kind of like Top Gun, but I don't think it was anything like that. But they were two people who were like born to be parents, and they probably should have had more kids, but that's on them. When I was younger, I really wanted to go to space. Like I really loved anything that had to do with like exploring far away places. And then I found out that you probably need to know like a lot of math and science to go to space. So I realized I probably wasn't gonna become an astronaut. But when I was little, but when I got older, I wanted to work in advertising. I wanted to write copy. But yeah, my degree is in journalism from Indiana University. So my first job out of school, I was a pharmaceutical sales rep. They came to the journalism school because they're like, hey, you guys are all communications majors. You guys are good at talking to people. You guys are good at learning information and disseminating information. And they're like, yeah, we can teach you, we can mold you. My first job was with Eli Lilly, and I was a pharmaceutical sales rep for probably over a decade. And it was very rewarding because I did love learning, pharmacology and science and talking to doctors and really advocating for patient care. But it's also really stressful because it's a sales job. And so sales, it's, okay, I don't care what you did last quarter. Sure, your numbers were great, but what are you doing right now? This is your quota. This is what you have to do. And that sort of coincided with the financial crisis in like 2008, 2009, 2010. And it was getting really hard and stressful to keep, making your quota and keep succeeding. So I'd started taking improv classes, and I was having a lot of fun with it. So I figured, well, maybe I can find a job where I can give the writing a chance. It was around 2010 that I just saw a random Craigslist ad about Tasty, and I thought I was gonna get murdered in a basement, but I didn't, and I ended up here. I really like hearing different people's perspectives, so this company just allows you to pretty much find a project that you're passionate about and they will support it. Rolling trades was a concept that I had where I wanted to merge my love of like food and travel and trading, and I wanted to, be able to go to all these places and in a more casual setting learn from the greatest minds that we have here in finance, which are our own employees. Each episode had, just a different concept, so a different type of trade, a different type of management, but it really helped me become the trader that I am. Like, I'm really aggressive about my management. I'm really aggressive about managing winners, but I like taking the best pieces of everyone that I got to learn from. Like we have some of the smartest people I've ever met, but they're not jerks about it. And I think also too, it's just the ethos with which, Tom started the company. Like, he, from the very onset, didn't want to be traditional financial media. Like, he wanted to be more like Howard Stern, and like that's just in his DNA. And he talks so much about the goodwill model of Tasty, where we provide so much to so many people and we don't charge for anything, and it feels good to work for a company like that. And to think that I would get to write funny financial articles like, it's really weird. Like, people are like, well, what do you do? And I'm like, I don't really know how to explain it. Like, I'm a financial comedian. Like, I'm a news reporter. What is this job? Like, what do I do? But like, I like that I can't really describe it because it's not like it's the unfinancial network. Like, we had that as a tagline for a while, but that's really true. It's the unfinancial network.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, Tasty Nation. Welcome back to the show. My name is Mike. I'm here with Jamal. This is Options Trading Concepts Live. It is Friday. Everything on my screen is green except for a handful of names. The Cubs got a dub last night, going to the playoffs. Jamal, I think it was because of you. What do you say?
It was epic, Mikey. It was pretty awesome, man. My buddy came through, and you know what's funny? And you were the first to know. He hit me up literally like we were 20 minutes into the show. I wasn't looking at my phone, obviously, and so as soon as we got done, I see this message. Are you into the Cubs game? And it was like 40 minutes ago. And I'm like, oh my god, like. Am I too late? Can I say yes? Can I still say yeah? And I said yes. He's like, you're in. I was like, yes. And so, yeah, it was awesome, man. Like 20 rows up. I posted a couple of pics about it where my seats were, from the seats, I should say. Like 20 rows up behind home plate. You could see every call, man. It was awesome, dude.
I love it. Yeah, it was a tasty research trip, right? To make sure that the branding and everything looked good.
Absolutely.
Yeah,
Absolutely.
yeah.
I mean, we're still up there way on the outfield. It was awesome. I mean, the real winner here is Tasty Trade. That's the one who really, our sponsorship really kind of helped push the Cubs over the edge.
Indeed.
Now I got to deal with in-house battles because my wife's a Brewers fan.
Ooh.
Yeah.
Yeah, that's going to be a conflict for what, a week and a half.
Yeah.
Yeah, that'll be a fun series though. I'm excited to see what happens, but yeah, they're finally getting things together. They had a rough patch last couple of months, but glad to see them in.
This next series is going to be absolutely wild because again, Craig Counsell used to manage Milwaukee, right? Just more recently. So this is going to be a lot of infighting for sure.
Yeah, and Milwaukee has a bunch of studs too. They're legit. So we shall see. We shall see. But yeah, market's funny.
I know. What do you think today, man?
I think we pinned 6,800 in the E-minis. The narrative is strong where, you just got to end the week on these round numbers. Makes sense, right? Big moves in the E-minis and NASDAQ. Bitcoin continuing its rally up to 123. I think this is the pretty close to the all-time high in the futures. We got as high as 125,955 about a couple of weeks ago, a month ago. But yeah.
I mean, that's one day's work to get to all-time highs. That's
At this rate, that's for sure. But yeah, some other futures moving. Silver had some whipsaw action. It was up big, then down big, up big again, almost up 4%, leading the charge in the CME futures watch list here. Bitcoin following suit. Ethereum up almost 1% too, but you have some movement in the yields also. 10 no, not yields. I thought that was 10Y. 1 ounce gold. Okay, perfect. Crude up 0.66. We're up 1% there. We bought the dip there with the micro contract, so glad to see this. Hopefully this continues up towards like 63, 64. But yeah, seeing some a lot of green on the screen. Biggest mover, silver. Everything else over 1%. Bitcoin, the Russell, gold. Downside though, only one thing is down more than 1% on this watch list. That is natty gas, which is to be expected. I mean, this thing's super volatile. It's always been super volatile. It will continue to be super volatile.
I'm happy that that's down over 1% because again, I put that strangle on yesterday, and honestly, my biggest fear was to the upside. So that's dude. I don't think I've ever had Nat gas fall kind of I don't think I've ever had a situation where I made money on a Nat gas position so quickly. I put on the wait, before I lie, let me just make sure. I think it's a 325.10 strangle. It is the Z contract. And I sold that yesterday for 16.5 cents, and it is currently 13 cents. I mean, I literally can't believe I'm almost 20% on it already. I actually can't believe it.
Yeah. I mean, I guess when you think about it, like we've had the wild moves to the downside and upside, but from 2 weeks ago, we're in the same spot. So that's likely crushing implied volatility a little bit. You can see that in the 5-day IV exchange, we're down 1% in around that 30-day aggregate. So a little bit of a vol crush there, but that's good for you for sure.
Heck yeah.
I did close some positions this morning, and I've made that adjustment in UNH. So UNH continuing to rally here. Love to see it. We were talking about this adjustment yesterday. I had the 400 strike calendar spread with my long option in November, short option in October. Into this rally, the short option really wasn't moving. It had already decayed. So after today's rally, I bought back the 400 strike, rolled it up to the October 31st cycle, so 2 weeks out, and up to the 420 strike. So I moved it up 20 points, still collected $1.80, and that's because I am now in the earnings cycle. But I like the way this position looks. I've got a 20-point wide diagonal spread on for a basis of $390. It's up $300 right now. But with the strength of this market, I don't see, I'm basically playing for a continuation of this move while still reducing cost basis. So if we do get a continuation up to 370, 380, 390, I will definitely take this off prior to earnings. I'll still probably do something here for earnings, but if this happens, this will be like $1,000 position. It'll be a big winner. So I'll want to kind of book that win and size down for earnings. But hoping to see we get that continuation in UNH. And we've seen quite the move. We've finally broken out above the previous high, which was on the 12th of last month. And we got up to 362. We just broke through it. And if you look at this, I mean, we had this huge sell-off from 600 down to 450-ish. Continuation, another big gap down. So we could see this fill up pretty quickly, considering the huge liquidity sell-off here and here as well. So hoping we get that.
Is this it's funny, the stock has been strong in the last couple of days, feels like, since we've thrown these trades. And is this just a what's Humana doing? Is this just a UNH thing, or what's Humana doing? What is it? Cigna's the other. What's Cigna doing? I didn't know if this was a group thing. Oh, holy cow. I didn't realize Humana was up $20 today. Oh my God. Yeah, what's CI doing? It must be kind of a group. Holy cow. Well, then now, you know what? UNH, you're laggard, bro. Like, what's going on here? I'm just realizing this. Oh my God. It's so hard to keep up right about now. Holy cow.
Yeah. And we had, so XLV, I mean, this is crazy. Yeah. So I put this trade on yesterday, maybe 2 days ago, but basically just decided to fade this move. So even with this rally, you're seeing a little bit of an increase in implied volatility now with a move to the upside, because this move is just getting ridiculous. But with that said, XLV still only has an 18% implied volatility. So we continue to exceed implied volatility with these realized moves to the upside. I think it's a great environment to fade it if you want to take that shot, specifically because you can get into a really small trade. $390 is my cost basis here. Even into this continuation, it's only down $100, but this is a long-term play. Just looking for a reversal closer back down to 135. If we get it, this will be a $200 winner, somewhere around there. But yeah, the implied volatility here is so cheap that you can do whatever you want in here, and it's going to give you a lot of leverage if you're playing on the debit side, which is where I'm at.
This move is massive, man. Humana, it's pretty amazing. Wow. The other thing I was noticing is just for the metals, real quick. Like it's interesting how copper all of a sudden now is, copper really could not get off the mat after the just sort of dislocation that happened, right? But if you notice, the last 10% it's starting to get strong again, and copper might actually be really of interest now.
Yeah, and it's always interesting when you have these huge gaps, right? Because this is a huge move through it, and if this continues, you could very quickly see this just go right back up to 5859. But given the fact that this is still a volatile product, I think it's interesting. I think if you bought this dip here, you're obviously loving this move. But yeah, it's always interesting to look at these gap fills and see if you can get it in short order. HG still doesn't have that much implied volatility at 27%, given the moves we're seeing, but it is a pretty expensive product. These at the money options are $5,000. So certainly not a small product.
FCX is definitely the way. FCX is the way.
Yeah, so you can get smaller by using something like this. Very similar chart here. And yeah, this has a little bit more implied volatility, but yeah, much more digestible. $40. If you're doing HG, we're kind of forced to do like straight up spreads, which is fine too if you want to get into that. But yeah, some crazy moves under the surface. And yeah, E-minis and NASDAQ continue to rally here.
The other thing I didn't notice, can you go back to the follow page?
Mm-hmm.
When did the bats become the bats? I'm just noticing this.
Yeah, it's sick.
It's the bats versus everybody.
That's right. Yeah, I mean, it's probably easier to just post everything together. That would be my assumption. But yeah, nice to see.
They have those shirts that say Detroit versus everybody. I think we need shirts that say the bats versus everybody.
We should make them. I don't see why we shouldn't. But yeah, they are now merged. Tons of trade ideas coming through.
Oh yeah.
A couple from this morning, bunch yesterday. So yeah, wild market we got here. And I'm kind of just sitting here with a couple of positions that are working out nicely. But if you look at my P&L day, there's really not much moving other than UNH to the upside, micro crude to the upside. Everything else is kind of just meh. So
yeah, I do have I probably have, I think I said this yesterday on the show and I'll say it again. I definitely have some of the most ideas I've had on a while. And honestly, it's good. I'm at a point, and this used to happen to me when I was learning to trade. I'm at a point, I'm a lot better about it now too. I'm at a point where honestly, I just need to sort of manage some positions. If there's something that's, and this happens, and I think I implore a lot of people to try to figure this out. You need a point where it's like, okay, if I see an idea, is it great? And if it is, like when you're like me right now, so I'm at a point where I'm probably using about 70% cash. I got a decent amount on the sidelines. If there's a trade that comes in, it's got to be great. And then I got to figure out what would I replace, or what is it time to take off? Like that's kind of where I am right now. So it's a little more risk management, but again, I'm not opposed to putting on a great trade that comes in. It's just got to be good. And I got to figure out what would I take off.
Yeah, absolutely. So if you're watching on the YouTube channel, we're streaming live there. Just head over to tastylive. If you are not already there, throw in your trade ideas, questions along the right-hand side chat. We got plenty of time to get to them. But yeah, I pinned a link to the Money Match promo, tastytrade.com/moneymatch. 30-day commission-free trading, 1% cash match on any and all deposits within your 30-day window. Great promo to try out the platform, get a bunch of trades in. So yeah, come join the dark side, I guess we could say. But yeah, without further ado, I'm going to check out this YouTube chat, see what we got going on here.
As you do, I got to tell you one more thing, man. Yesterday was such a Chicago affair. Jim Belushi kicked it off by doing the let's play ball.
Yeah.
Vetter was there. Vetter and Chris Chelios were like down by I think maybe the third baseline. I'm not exactly sure where they were. Apparently Kuzak was there, which totally makes sense, is on brand. And that's just the people I saw. I can't imagine who else was there. Surprisingly, one Tom Sosnoff was not in attendance. He was in LA. I texted him. I was like, "Were you here?" He's like, "Nah, I'm in LA."
Yeah. It's funny you say that. I texted him too. I'm like, "You got to be there." He's like, "No, I'm at the show." I'm like, "Oh yeah."
I forgot.
But yes, we do have a handful of other shows coming up this year. So tastylive.com/events, October 12th, coming up shortly here. We're going to Dallas. It's
you guys, right?
Yep. It'll be me, Nick, and Katie. Grab your cowboy hats. We will be there Sunday, 6 p.m. Totally free show. Come join us. And then after that, we've got Dr. Jim, Sunday, October 19th in Detroit. Love that. And
he's from Michigan, right? Isn't he? It's hard to keep up because he loves every single team there is in the NFL. But I think he's from Michigan. I think so. So that's kind of a homecoming for him.
I know he's a Red Sox diehard, but he's absolutely not from Boston. That's all I know.
Right.
Yeah. After that, October 24th, at Work by 11 in Charlotte. And then San Diego will be back. And then Austin. And then Tampa. And then that's that. So we got a bunch more coming your way. tastylive.com/events. Go sign up today.
Speaking of Boston lost last night, of course, Yankees win, but Detroit messed up our all home winners playoff baseball situation.
Yeah, and I actually parlayed. I bet all the home teams to win, and then Cleveland decided to kill that, where the other two they were winning without a doubt. So yeah, that was unfortunate.
I did too, and I also added the Rams for last night, so I wouldn't have won anything anyway.
Yeah, that was an insane loss. They're like on the 10-yard line going for it instead of just kicking the field goal. I mean, I get it, but at the same time, I don't know. It's a 50-50.
I got Kyron Williams in one of my fantasy leagues. He had a great night last night, but it would have been nice to get an additional 6 points.
Yeah.
Instead of losing 2.
Yeah, he went nuts. CMC went nuts as always. Love to see it. All right. What do we got here? Quad U ripping to the upside. Is this tradable? I mean, these products are the bid-ask spreads aren't too crazy, but over 100% implied volatility. Looks like it's not that elevated of buying power relative to max loss, but yeah, if you want to trade this, you certainly can. I just have a hard time. I have a hard time with these charts where the stock just triples in price in a couple of weeks. But it's a $17 stock, so you can get pretty small in there regardless.
Yeah, I don't really. Geez. I mean, the markets don't look terrible. I will say that. I like you. I just don't know what I would do in here, and I don't really know what is this one specifically. Energy. I mean, what is it?
Quad U.
Yeah, I've seen it ticker, but I don't even know what they do.
I think it's a crypto thing. Let me double check.
Yeah, I'm not even sure. I don't know if it's energy related to crypto or AI.
Uranium. So it is
uranium. I do vaguely remember that.
Adjacent. Yeah. But yeah, Quad U. I haven't touched it. I'm not trading it. But
same.
If you're in here, I think even with a $17 product, I think you go defined risk. You can get directional or get neutral, but not hold all that risk. SMR versus Oklo. What would you trade? SMR, NuScale, nuclear products. I mean, nuclear is certainly the future, in my opinion. I mean, how else can you power the AI boom without something like nuclear power that's sustainable, cheaper than something like solar, wind? I think this is just the beginning for nuclear products. SMR versus Oklo, though, I think from a tradability standpoint, SMR is much more feasible at a $40 price point. Oklo at 128, 100% implied volatility in Oklo, 100% implied volatility in SMR. I would probably go with SMR just because if you're selling premium, I'd rather be in a $40 stock with 100% IV than 120, given my account size. You can still get a ton of premium here, even with just like a cookie cutter strangle, picking up $500 on this product. So they do have earnings projected early November. So just beware of that if you're taking risk on both sides. But yeah, SMR, I think, is probably where I'd go. You know what? I'll throw on a trade here. I'm just going to sell an at-the-money put because I don't want risk on both sides going into earnings if I'm selling in the earnings cycle. But picking up $500 on a $40 product, sign me up.
Yeah, I'll sell that with you.
Let's do it.
What are you doing? The 40 or
the 40? Yeah.
5. You're gonna put out there at 550? Oh, that was you. You just got filled.
Yeah, 545. 545.
Trying to sell 550s, huh? Weird. Bingo. Oh god, 550 bid. Awesome.
Yeah. Love to see it.
Yeah.
Looking at the trade feed, a lot of trades not following tasting mechanics. I would disagree. I think there's some rogue trades out there, but for the most part, like, it's not all about selling premium, especially in high flying 100% IV stocks. Like this is a nice trade that I'm willing to take because I'm willing to have 100 shares of stock at 40. But in some of these other products, like XLV is a great example. XLV ripping through the moon, up over 10 points now in 3 days, and implied volatility is at the bottom of the barrel. Like you couldn't pay me to sell premium in here. So it's just a matter of what you're doing, but we always have some kind of cost basis reduction component, even if we're doing a debit trade. So yeah, I think there's reasons to do both. I'm much more comfortable having a strangle perpetually on in something like the E-minis or NASDAQ or IBIT, where a lot of these single name products, I'm usually going to define risk, sometimes take directional shots, just because they hold greater binary risk that you can't necessarily predict versus something like the E-minis or NASDAQ.
Yeah, to that end, I would say, tasty mechanics is an ideology, honestly, and we've shown how well a lot of the mechanics work. But what you're finding in that, if you see that, what you're seeing is that some people also kind of adapt some of their own kind of mechanics that work well for them. And so tasty guide mechanics are really kind of like a guideline for those who've never really traded before, right? It's a good way to learn. It's a good way to give yourself some discipline, etc. But a lot of us have learned a couple of other things along the way. We might, add that to what we do day to day.
Yep. Kind of continuation on that. Cherry Bomb this morning had a trade idea at 21 days. Thought we roll at 21 days. Generally speaking, yeah. But there are exceptions to that. So like if you're selling a spread or you're selling a put, like this is a great example in Apple. Apple has earnings projected to be after the 21-day cycle. If you're trying to avoid Apple earnings, but you still want to do something in here, you would have to go to the 21-day cycle if you're trying to avoid earnings. So there are exceptions to every rule, but yeah, generally speaking, we're rolling at 21 days for undefined risk trades to make sure that our undefined risk trades have extrinsic value and we're not on the bad end of gamma if we get a big move against us. But like a credit spread, defined risk trade, it's less important to be rolling at 21 days because these are Greekless trades anyways. Especially narrow spreads like this. So definitely a good call out, but there are certainly exceptions to the things that we do on a day-to-day basis.
I like the Mikey B dictionary, Greekless trades, calendarize. I love it.
Diagonalize.
Diagonalize.
Let's see. Cat. What's Cat doing?
What is it?
Ooh.
Oh, Jesus Christ.
Whoa.
What is
John Deere, Cat.
Seriously.
Listen, if your stock's not up 3%, what are you doing? Actually insane. So yeah, Cat tied up in AI. Some people saying.
What? Come on. Now
That'd be crazy. That'd be sick. That'd be sick if farmers eventually just like are chilling, just like remote controlling their equipment from their lazy boys.
I mean, it's going to happen at some point, right?
I mean, yeah, it has to. Or they're just completely automated, which is also certainly well within the next 5-10 year timeline. Cat earnings October 29th. Yeah, this is a tough one. I'm definitely waiting until earnings, but $500 price point kind of narrows our ability to trade whatever we want in here. Implied volatility isn't super crazy. Right now, we're looking at earnings in the 28-day cycle based on the boost in implied volatility here, but only a 36-point expected move on a $500 stock, and we're a month out from earnings. So this is going to get even smaller in terms of implied volatility relative to the stock price. So we're definitely going to be defined risk in here just because of the $500 price point, but we'll come back to this one for earnings. We'll see where it's at. Maybe it'll be like up here in the $700 range by then.
Deere actually, looking at the charts, Deere might be the more interesting play here. Speaking of calendars, actually, these are kind of cheap in a way. These calendars, that might be the play.
Yeah, it looks like DE reporting in the 42-day cycle based on this implied volatility boost here. So yeah, that's another one we can keep our eye on. But yeah, if you're trying to calendarize something in here or just take a little shot, cheap implied volatility, really for both of these, but cheaper implied volatility for DE relative to CAT.
I'm about to throw that on. As I sit here and say, I need a great trade to get rid of any, but God, there's so many possible trades right now. I'm about to throw on the 500 calendar and deer. Just to keep a marker on it. That's pretty cheap. It's 230. Let's see if we can. Oh, immediate fill too. I don't know what that means, but just to keep an eye on it.
Love it, love it. Since vol is so low, I'd highly recommend getting some hedges on TQQQ or NDX and then just shutting off the brain and going long on moving names. Yeah, I mean, we say it time and time again, like if there is ever a time to throw on a downside hedge, it's certainly cheap when the market's at all-time highs. Volatility is in the teens. We're looking at VIX futures here in the teens. Steep contango between the V, X, and Z contract. If we look at the actual VIX, 16. If we look at the VIX 1 day, bottom of the barrel. So yeah, if you want to throw on some hedges, you totally can. From my perspective, I like to do diagonal spreads here because I have a lot of bullish positions in here. But if I'm throwing something on in SPY or the Qs, if you want to get more tech-centric around those big Mag 7 names that have gone straight up, you could go to the Qs. But what's nice about these is like if you go to like December, November, these are pretty cheap hedges to throw on. So if you go to like the 600 December and then the November 590, you can get into a 10-point wide diagonal spread for $700. You could even go wider if you wanted to. Do a 20-point wide for $900. I actually kind of like this one better just because if you do get that swift sell-off where there's a huge market move to the downside, I'd rather put up an extra couple $100 to have another 10 points of room before I get stopped out from intrinsic value. So, and the nice thing about this is you have 20-point wide diagonal spread. You're paying under $10 for it. So if the market continues to rip higher and this option loses a lot of value, you can still move the 580 up to the 590 and have collected credit in doing so. And your overall cost basis is going to go from 911 to let's say like 750, and you'll still have no risk to the downside in that case too. So I think I've talked myself into just doing this.
I think you just talked me into doing it, and I do need some short delta. This is definitely worth probably doing, whether I do it in here or whether I find a similar trade in SPY. It's definitely something I need to do because I probably have more long deltas than I should. Even if they're not like huge, if they're mostly calendars, it's still long deltas.
Yep. So yeah, we'll bite. We'll throw on a little hedge here. So I got the 20-point wide diagonal spread, long December 600 strike, short the November 580 for 912. And again, like I said, if the market keeps ripping higher, I will just buy back the 580, roll it up to the 590, reduce basis a little bit more. But I've got other positions on here that will offset the entire cost of this position if we keep ripping.
Yeah, it's actually pretty awesome. We can do the similar trade and SPY for like around 855. I'm doing the 670, 650 in SPY. Yeah, that's gonna do that one.
Cool. 670, 650, December, November.
Correct.
Yeah. There you go. And yeah, you have a nice big hedge to the downside. And really, like, I'm not looking for these. I'm not looking to hold these for any long period of time. I think if you got a 100-point move to the downside in the E-minis, like that's all I would need to take this off, especially if we get a sell-off in the E-minis or NASDAQ and volatility doesn't react. If it's like only up to 18 or 20, I would need to see more of a move to the upside and a flattening of this contango if I wanted to hold it and see if it goes in the money. But first we need a sell-off, and then we can talk about strategies after that.
Exactly. We'll worry about that when the actual sell-off happens.
Mm-hmm. What happened to GME calls?
I saw GME trending on Twitter. I you know what? It's at a point where I barely look at that thing. I'd have to see it in multiple places. I look at a couple of different things that show me that names are moving, et cetera. And so if I don't see it in multiple places, I barely pull the stock up. I mean, what's actually happening there? Anything like?
Last couple of weeks had a nice run up, but the funny thing is, like a couple of years ago, the meme stocks that you wanted to be in were GameStop and AMC. Now there's like 50 other meme stocks that you can trade that are not necessarily meme stocks, but stocks that move in a meme way where they go from 10 to 40 overnight. And like some of these are legit companies. Like SoFi went from 10 to 30 in the matter of a couple months. Like there's plenty of products that are moving in a big way to where if you're looking for that gamma exposure and products that can rip, there are a lot more now than they used to be.
Yeah, for sure. I mean, even the LACs of the world, the MPs of the world. I mean, those things are actually moving. Those are probably the ones I'm looking at more.
Yep. Someone asking about the UNH position. So yes, I did make an adjustment this morning. If you pull up the follow page and you go to my name here, you can see it. But basically what I did was I bought back the 400 strike call for I think like $1, and then I rolled it up and out to the 420 strike in the October 31st, picked up $1.80. Cost basis is down to $390 now on this 20-point wide diagonal spread. It's up $300. If you want to close it and just take some risk off, that's totally fine. I'm just leaning on this because it's kind of rare to get to leg into a 20-point wide diagonal spread for less than $400. So given that, I'm going to just hold on to this, see if we get a continuation pre-earnings to the upside. If we can get up to like 375, 380, this will be like a $500 or $600 winner, and I'll just take it off and then revisit for earnings after that.
Love it.
And if not, I'll just hold it through earnings. Given the cost basis that I have, I think it's worth a shot. Lunar QQQ, October 17th, long put spread, partially financed by a short call spread. Paid 55 cents for it. Should I roll down the call side or hold and hope for a down move next week? Let's check it out. QQQ.
I'd like to know what your original Lunar. What was your original assumption on the trade? Because that's a part of it.
Yeah. Let's see, 575, 565. So this is way out of the money. The put side is 575, 565, trading for 40 cents. And you've got the 590, 595. So yeah, I mean, it's a tough trade given the fact that it's 2 weeks out. You're outside the expected move. The market seems like it's impossible to fade at this point. You paid 55 cents for it, but you have this $5 embedded credit risk here. So yeah, I mean, as of right now, it's $130 less than max loss. So if you wanted to close this and save yourself $130, you totally could. You could also take this one off and restructure a new one that's closer to the current price, because this spread here, the 575, 565, it's projected to be worthless. Like, you would need a massive move in here to get this to fill up. Not saying it's impossible, because we've seen such a strong rally in the Qs that if we did get a sell-off, it wouldn't be too surprising to see that kind of accumulate with selling pressure. But yeah, at the same time, I think if you wanted to just close this, save $130, you could do something in the same cycle that's just closer. So like the 615, 620, 605, 600 for a scratch. You're basically financing the cost of this long put spread with this short call spread almost completely. And this will certainly have a higher probability of giving you $500 back. So I might do something like this versus holding on to the one that's in the money. What about you?
Yeah, I mean, if your original assumption is correction, you leave it on a little bit longer, but and then maybe eventually, I would eventually personally just close it. If I really feel like at some point, okay, really nothing's going to happen within what's left of the cycle, and just close it and just reestablish at a different position. I mean, hey, I would hope you were waiting on the correction, but it also depends on, I guess, if you had any other longs on too. Again, you just heard Mikey and I talk about putting on some hedges. I'm assuming this might have been a hedge for you, or maybe it was just outright play on the correction and you didn't have any other longs. Either way, I would just hold it for a little bit longer, just see what happens over the next couple of days, and then maybe with 10 days to go, just go ahead and say, okay, whatever. I mean, by Monday, make a deadline for yourself. By Monday or by next week Wednesday, I'm just going to close this thing and just reestablish a new one.
Yep. So Aiden was actually asking about GME calls. It looks like, so whenever there's a stock split or something crazy going on in the market, there will be two deliverables. So the NS1 is the standard delivery where you're looking at what you were looking at before. It looks like there's something going on here because if you pull down the drop-down menu of the deliverables, you can see NS1 10 shares of GME, WS 100 shares of GME. So did they break this out for like a 10% equity thing? I'm not sure.
Now I got you. It said apparently there's a special dividend next week.
Yeah.
Existing stockholders as of Friday will receive one warrant. Oh, they're doing warrants. They're distributing. The company's getting closer to distributing warrants to shareholders that will allow them to purchase more stock. Existing shareholders as of Friday will receive one warrant for every 10 shares. For those who don't know, warrants are essentially like call options or whatever. They're usually pretty far out. In this case, these warrants will allow you to purchase one common stock at 32 until October 30th, 2026. So, yeah, they disclosed the special dividend last month and they're distributing the warrants on Tuesday. I didn't know what they meant by what happened in calls. I thought they were just talking in general, but yeah, clearly there's some action going on, a corporate action.
Yeah. If you have position in there and it's looking wonky, you can call the trade desk and they can explain how they will settle it if it's like a settling thing. But yeah, definitely some weird stuff going on in there. What else we got here? Anything on the earnings horizon? We do have the banks that generally kick off earnings. If we look at Bank of America, they're coming up October 15th before the market opens. JP Morgan, 14th before the market opens. Wells Fargo, 14th. So we got basically 2 weeks before the banks kick off the next earnings cycle. And the week after the banks are usually, your Apple.
Yep, it is. Yep.
Netflix, etc. So yeah, we got
the week after the banks, I think, is from what I still remember this morning, is Tesla and Netflix for sure. And then the week after that, I think, is when we get the Apple, Microsoft, etc.
Yeah, love it. So yeah, we've got we're kind of in this weird period of time where it's hard to find trades that are not in earnings names unless you're going to ETFs or tastyfx or the futures market. Speaking of tastyfx, let's check out this one position I have left.
Yeah.
Ooh, coming in today. Short the dollar CAD. Okay. All right. I'm probably gonna be holding on to this trade for quite some time because my basis is here. Maybe not, but look at this Bollinger Band range just exploding to the upside with that move. Love to see the sell off here, but we got to get this thing back down here.
Yeah.
It's the only position that I have on still. Everything else has come in nicely with how volatile these have been.
I didn't know you looked at Bollinger Bands.
Oh yeah. So we had Glenn on and we were like, what should we look at? Like, what should we put on here? Because the charting package here is sick. He's like, well, I usually just throw on some Bollinger Bands and then just like look at stuff that's at the top or bottom of the Bollinger Band range. And it's been working nicely for us. So Bollinger Bands are absolutely on our tastyfx platform. We could throw it on the normal equity platform too. But yeah, I kind of like them. It's just nice to see a range, give me some context on these things that I really don't know too much about, but I'm willing to take risk in.
Yeah, totally. I mean, again, I'm not somebody who's opposed to technical analysis. I like using just simple moving averages, but I think, it's just an extra added little piece of information, which is always nice.
Yep. You should, so Sergio asking about the FX tab, you should have the tab here. If you don't have an account, it would just prompt you to open an account. And if you don't have this tab, maybe you need to update the desktop platform. But yeah, you should see it if you've got the desktop platform.
Yeah, Sergio, bro. Come on, check your updates.
Got to get in.
A minute.
STZ Monday after the close. Constellation Brands, okay. October 6th. Yeah, that is Monday, huh?
Oh, wait, real quick. I got to do something very important because Mikos just said, "Hey, Chicago, what do you say? Cubs are gonna win today." That's how we finished that, Mikos. You know what I'm saying?
Hey.
Very important.
Yeah. What a dub. What a dub. Yeah, we'll come back to this Monday for sure. Luckily, it's Monday after the close, and they're not trying to sneak it in before the market opens. But $8 expected move, $140 stock. So nothing too crazy in terms of implied volatility. But yeah, these markets are certainly tradable, 10 cents wide. Not too bad. But yeah, really low implied volatility in the back month. So when you look at November, 13-point expected move in either direction. And then you look at the weekly cycle, 8-point move in either direction. You have a lot of implied volatility in the weekly cycle relative to these back months. So definitely on the table for maybe a call diagonal spread if you're trying to buy the dip here, which I think is probably something I'd be interested in. But again, I'm going to wait till Monday. I don't want to hold the weekend risk in here. And especially with this 5-day rally, 4-day rally we've seen, maybe we get a little sell off on Monday. We'll see. But yeah, thanks for bringing that up. We'll definitely trade that one.
Yeah, I was just looking as you brought it up, just the rest of the week. There's not a whole ton of earnings. Really, we get to Thursday before the open. You got Delta Airlines, you got Pepsi, you got Levi after the close that day. The APLD, I know a lot of people have been talking about that name at times. I haven't traded it myself, but that's kind of it. So fairly quiet on the earnings front. And we're going to be fairly quiet on the macro front as we're not expected to get a whole ton of data given the government shutdown. So,
yeah, I've been looking at the prediction markets. Let me see if they've shifted at all. Let's take a look.
Jobs report or what?
No, just when the government shutdown will end. So just looking at poly market here, looks like 48% now, October 15th or later. So a 2-week holding pattern. We've got 36% the 4 days prior. So October 10th to the 14th, only 16% have it ending next week. So looks like longer than shorter in terms of the betting markets. But yeah, like Jamal had said, we were supposed to get some more data, and that doesn't seem to be happening. The calendar that was supposed to take place, unemployment was delayed. If you go to the economic calendar, you can see that it was delayed. Next week, we were supposed to have jobless claims on Thursday. Some FOMC Fed people speaking on Wednesday. So next week is probably pretty quiet. And if we look at SPX, I'm willing to bet that this is also going to be quiet. Yeah, 72-point expected move for the entire week next week, which is not that much at all, especially when you consider there's a 28-point move priced in for weekend risk. And after Monday, only 40 points for the rest of the week. So I think we're going back to the well with the 1-day iron condors that turn into 0 days. Just take that overnight risk, see if we can get paid. I've got one here testing the upside, 67.50, 67.55. The funny thing about this one is when we closed yesterday, we were at like 67.20 in SPX. And I was like, I want to skew this to the upside. I don't want upside risk. And here we are testing the upside. So you just can't win. But the nice thing about these trades is that when you place them, if you get an inside move in the morning, you can close them for like 40 cents. This was a 40-cent winner at one point. But these are going to be super sensitive now with only 3 hours left in the trading day, that if we get a sell-off from like 30 points down to just 25, just a little 5-point sell-off, like this $40 loss turns into a $10 winner. So got to have a GTC order in just in case you walk away, go get lunch, and you get a 10-point sell-off in the E-minis. Like this could easily fill up and turn into a $100 winner if we get a 10, 15-point sell-off here. So Hoping that we get it, but we are testing my upside here with only 2 points of wiggle room. Scary.
I'm wondering if quiet week translates to essentially the same type of week which we just had, which I mean, that would be incredible. I'd like that. I mean, I kind of hope that markets just continually doing what they're doing. And this can happen at times. You can just kind of, especially if there's no reason for change. I mean, again, I know we have an FOMC meeting minutes coming out next week, and then Powell's supposed to speak on what, I have no idea, but those seem like to be the only real two catalysts next week. Outside of that, there's no major earnings, and again, there's not going to be many major macroeconomic releases. So we could end up getting a very similar week, which would be, I mean, I don't know about you guys, but this week has been pretty good to me.
Yeah, and some people in here in the YouTube chat looking at the market and how it can just continue to go up with low implied volatility and the government shutdown. So we talked about how on Monday or Tuesday, sorry, we talked about government shutdown specifically for Tasty FX and the FX markets. And Glenn pointed out that when governments shut down, it tends to be good for equity markets. And I think that's especially true in this equity market, where what are the things that could bring the market down? It's literally economic data related to CPI, PPI, jobs number, what have you, Fed interviews, Fed announcements. So these things aren't happening. These things are now delayed because the government's shut down. So the market, if the market grinds higher because there's nothing that's presented that could bring it down, you shouldn't be surprised. And I mean, you should expect to see this kind of grind anyways when the VIX is at 16, 15. Traditionally, historically, that has been what happened. Interestingly enough, these shutdowns historically have also been bad for the US dollar. Seeing that a little bit today in this short position I've got, short the US dollar over CAD, but yeah, we'll see if it holds. I mean, the US dollar has already been beaten up, so could it go significantly lower? Not sure, but definitely opportunities even with the government shutdown if we are to see this to continue to the upside here.
So with the government shutdown, does that mean that the government can't announce any new strategies into buying any new not new companies, but buying any other companies? Is that we're not going to hear any of that? Because that's definitely been something that's powered a lot of different stocks and the market higher in some way.
Yeah, I think similar to the tariff stuff, we saw a lot of companies kind of delay. Like we had an entire earnings cycle where companies were like, well, we'll catch it next time because we're not gonna give you numbers with all of the stuff that's going on. So yeah, maybe you just see people delaying, companies delaying, and we just see kind of a complacent market as a result. So yeah, for Tasty FX, if you're international, I think you might. I need to look into this. I should know this, but
I do too. Yeah,
you should be able to get access on IG at the very least. For Tasty FX, I'd have to double check. I feel like there's a way around it, maybe through maybe the direct Tasty FX app. But yeah, I'd have to look at that. At the very least, you can get Forex exposure through IG for sure.
Yeah.
This has been one of the strongest and most resilient bull markets in history. Nothing has changed since October 2022. Yeah.
Look at Bitcoin. It's trying to make a break for the all-time high.
Yeah. And fast. Look at that thing.
Yeah, dude.
Mooning.
Actually, it just got turned away at like just under, what was the high here? The high was 125.025. So like literally 175 points away from the high and turned around.
Mm-hmm. Yeah. I mean, what a week for Bitcoin, honestly. And we talked about this too. Like we saw gold rip, we saw silver rip. I would have expected to see Bitcoin to rip too if it's an anti-dollar or anti-fiat currency move, given all the turbulence with inflation and rate cuts and all of that. But we're definitely seeing a catch up here. Only took a week to get right back up to near all-time highs. And at this point, everybody was writing off Bitcoin. Nobody was talking about it. So here we are. Love to see it. Gold, silver, copper, Bitcoin, all mooning. Yep. Yeah, we are in an interesting period of time. That is for sure. What's the cause of low trading volume in E-minis? I mean, it's kind of just par for the course when you have these really narrow ranges. Like look at the last 2 weeks here. These intraday ranges in the E-minis, like they're blips on a radar. There's not even bars. Like the last range we've had this is probably the biggest one. This was a almost 100-point range on September 2nd, so 1 month ago. Since then, we have had, I guess the 5th had a decent range, but ever since then, we've only had like 50 to 70 point ranges. So really nothing too crazy here. So when the markets are not moving, you should expect activity to be lower, especially when you've got pauses in numbers that come out that create liquidity. So yeah, just kind of a quiet time.
Yeah, I mean, it is a lower volatility environment. We're still again, this is going to be under 1% move so far today. I would expect we'll see a little bit of. I wouldn't be surprised if at the end of the day here, VIX starts to drift downward, and we kind of saw that same effect. We see that effect a lot of times heading into weekends, especially in markets like this where it's somewhat complacent, if you will. So that's probably the one thing I'd look for is VIX going to sort of pull back? Are we going to get under 16? I don't imagine we will, but I actually don't want us to. I want 16 to sort. I want us to kind of maintain 16. Again, that's pricing 1% moves, but again, if we don't move 1%, I would expect VIX to sort of pull a little bit under 16 today.
Yeah, I mean it's just a tough pill to swallow. Luckily, we've had these 0-day iron condors that have been fun. But yeah, like I said, like look at this. We got a 2-point move and this came in 20 cents, 30 cents. This is now a scratch on a 2-point move. So these are super sensitive right now. Hopefully I can get filled on this one. At the end of the day on last call, Nick and I are going to be hosting last call. I'm going to throw on another one for Monday. And as of right now, if we go to the 3-day, yeah, we can cover a pretty decent range here. I'm probably going to skew it to the upside again. But yeah, I've been trying to collect closer to $2 for these. 5 points wide. I want to collect closer to $2 just because if there is a big blowout move and I'm selling premium in a 7% IV environment, I want to be protected with the credit I received up front at the very least. So, and if I'm right, I want to be able to make more by getting narrow. So yeah, probably looking something like this. I would like to collect closer to $2, but we'll see where the market ends up later today. Couple minutes left here. What else we got?
Fascinating.
Everybody drink Modelo over the weekend. Okay, I can get behind that.
Yeah, Modelo and chill.
You know what? I'll get a case of Modelo at Costco.
There you go.
Since Costco is down, I got to give them some revenue. Get this.
Yeah, it's having a little trouble getting off the mat more recently, but I'm unfazed. I mean, again, it's not like it's a negative reason. It's just I guess the other money is going into really other areas of the market, different stocks.
Yeah, I would be surprised to see this go significantly lower than this. I think we'll chop around this range, but yeah, I like having a bullish position on, which I do here in Costco. I've got the 1010 diagonal spread on for 720. If we get a rally, the nice thing about this is that if we get a rally back up to like 950, this trade will be just fine. It doesn't even have to go to 1,000. So, but yeah, I mean, Costco is Costco. It's not going anywhere. This is one of the stocks that is at a discount relative to others. So if you're looking for bullish positions in a market that's at all-time highs, like these are the products that we're going to. And it doesn't have to be a huge position. It can still be small. Like the one I just showed you is less than $1,000. You could do credit spreads here in November, October, 5-point wide strikes. You can really do whatever you want here. All right, 4 minutes left here. What's your prediction for next week? Inside up, down, outside up, down? What do you think?
I think, I think inside up. That's kind of the way I'm playing things. So I think I just have to go ahead and call that out. Like that's kind of what I see, especially. Again, the assumption is based on there's no real resolution to the government shutdown. And again, I really don't think that mostly affects markets, but I think if that were to get fixed, my wonder is how the deluge of data sort of presents itself, and I think that could change how markets go. But the shutdown itself doesn't really affect markets. The data that's being withheld could affect markets, and so that would change everything. But assuming we don't really get any resolution, I expect a lot of the same. I expect a little bit more movement in quantum computing names. I expect movement. I think we're going to see some continuation in some of these healthcare names, it would seem at this point. And I do think we're going to see a little bit more movement out of, I don't know what else to call it outside of maybe you call it the White House basket, the LACs of the world, the MPs of the world. I can't remember that one company. Is it USAR? I don't know, whatever that is. That's another one. You could almost start making a little basket out of those companies. And I think we're going to see just more of the same.
Yeah, I would agree. I think in these times, I think it makes sense to just listen to the data, and the data says market tends to grind higher, and in a low VIX environment that we already have, it's hard to envision it because we want to see some volatility, but like Jamal said, everything is kind of on pause right now. And if that means the market's going to just slowly grind, even if it's just sideways, I'm going to be playing for that. Someone in the YouTube chat asked about Bollinger Bands. If it's a moving average and then one standard deviation around it, it's traditionally 2 standard deviations, but at least I believed it was. But what's cool about this tastyfx platform is you can go to the indicators. So if you click on this little chart here, you can read about all of these indicators. So they have little explainers in the Bollinger Bands. I think we created a 2 standard deviation here. Maybe it was 1 standard deviation. 20-day moving average, standard deviation add on top. Okay, there you go. But you can change these to different ones. You can use all of these. All of these have little explainers, which is really nice. So check it out. And with that, we are out of time. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We have a stress-free Bulls week or Bears week because they don't play. They're on bye. So we'll watch the other teams, see what they're doing. But hopefully everyone has a great weekend. We'll see you same time, same place, 11 a.m. Central on Monday. And catch me on Last Call at 2:30 with Nick. We'll see you then. Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But for whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options. If I had a $100,000 account, I was long like 20 grand's worth in the front month for sure. Don't do it, kids. Don't do it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everybody, and welcome back to another segment of Risk and Reward. We're going to be running solo again today, but we got some trades of the week to break down. We got some fun things to talk about. Hope everybody's doing well. Hope you all have had a great week adjusting positions. I know it's been kind of crazy. We had some government shutdown talks. We were supposed to have NFP today. Maybe that muted a little bit of the volatility. But it's been a week nonetheless. You know, we're going to get into some very specific breakdowns on a lot of the content that we covered all week. I know we've been placing some trades together too. I know on Monday, Tuesday, pretty much most days this week. I think there was one day, including today, we didn't trade, but we're going to break everything down into detail. Hope everybody's doing well. Ready to get into next week. I don't know how this is going to play out with all the government shutdown news. This is one of my first experiences just trading the markets with understanding is NFP still going to come out? Are these things still going to happen? Are we going to have those volatile binary events going on in the market? So everything going on is always a learning lesson, but I hope everybody's doing well today. And let me pull this. What's going on, Bob? What's going on, Wolf? Is Gus in London for the football game? I think he's out there. I was telling him, you got to go check out Liverpool. I don't know if we got any Premier League soccer players out here. But I don't know if he's going to be I don't know if he's going to be heading to the game. We'll have to hit him up here soon, get an update, see what he got going on. Maybe he can get some content for us and we can check it out back out here in Chicago. But the UK, it's great. I know he said he's been out there before. So I'm looking forward to having conversations when he gets back. hopefully the market is still here by the time, you know, he gets back. Hopefully the market isn't chopped in half by that time. Sell-off, are we getting a sell-off right now? We'll head into this market in a little bit. What's going on, Pablo? What's going on, Mikos? SPX dropped pretty big at the top of the hour for some reason, huh? Something caused the market to drop like a rock. RC, what's going on? Happy Friday, guys, happy Friday. We'll get into the platform here in a little bit, and don't worry, we got the Tasty Trade platform we're gonna be pulling up here because we got some things to look out for. I know a lot of us have some positions on in UNH as well. That's been popping off recently too. Don't know if anybody else is still holding some of those positions. But with that being said, you know, I hope everybody had a great week. We can go ahead and get into some of these slides. We broke down some of the top trades of the week, or some of the top trade ideas for the week. And there's a couple trades in here that I'm not very proud of. I think the execution is good on some of the trades, but there's one trade in here that's a little bit more embarrassing to show, but I will show it. Just not good decision making on some trades in the day. And we're gonna break all of that down because I think we can all relate to a certain extent. What's going on, Whit? No Fed speaker until Logan talks in 30 minutes. Yeah, what's going on SPX? Going straight down all of a sudden. Let me just pull this up on another screen too at the same time as we get into these slides right here, so I can make sure the sky isn't falling or the spy isn't falling by the time we get started. Let's see what's going on. Okay. You guys are putting a little, last 5 minutes, Last 5 minutes we've been getting a little bit of a sell-off. Vol has spiked to 16 as well. So we'll circle back around to that. But we got some trades of the week, trade ideas of the week. It's a quick breakdown of the highest conviction NASDAQ setups, highlighting some of the value areas lined up and the opportunities that create more of a great risk reward opportunities. That's what we kind of consider as, you know, a good trade. Does this trade make sense? And we were able to take one every single day except for today because we're at all-time highs. I'm kind of hands off of the wheels when it comes down to this market environment, but we'll get into that. Let me go here. But as you guys know, we got the quote of the day. This is like the third quote of the week. This might have to start being a daily thing. But quote of the day, when you create a trading journal, you break yourself or you bring yourself face to face with your worst trading and turn it into opportunity. It doesn't matter if it's blemishes that mar your account. It's your account red marks and all. You make yourself stronger when you reach out to your flaws, embrace who you are, and take the first step to becoming the person you're capable of being, right? I think it was, actually, I forget who said the quote. He said something along the lines of how the market is a direct reflection of yourself, right? So I know if we go back and we go through all of our trades, you can find certain personality traits, right? Certain traits that you have as an individual. If you go back and journal some of your trades, you might find out, wow, I'm a very fearful person. Wow, I'm a very impatient person. Wow, I tend to be a little greedy. Wow, I tend to, after the third red trade, tend to size up a little bit more. After the third red trade, I tend to take trades outside of my normal process or whatever it might be. But that's one of my favorite quotes. The market is a direct reflection of yourself. And I think it's one of the most truest statements said about the market. So as we get into the first slide here, this was on Monday. We talked about this one, we broke this one down, but let's talk a little bit more about the thought process. We got some bullet points up here too, to talk about what we were looking for, what we did kind of well, what we could have done a little bit better. But this is all gonna resonate from the information that we talked about with auction market theory. So these are gonna be trades with NASDAQ off of the value areas that we're gonna be looking off of. I put this vertical line here, that's 8:30 Central. I thought it adds a little bit more context in terms of when the market opened, when some of these trade opportunities are arising in the market, and how long some of these trade opportunities take, right? Because I think, you know, it might be a little surprising to know that, you know, this week on average, some of the red trades, I mean, I was in there for maybe a minute or two, right? And then the green trades are on average a little bit longer, around 10 minutes. And I find that really interesting too. So as we get here in the morning, the market opens up, we're looking for our levels of value. Market starts to consolidate here in the morning and we get a breakout into our value area low. This was our previous level of balance. This is where we consolidated at the all-time highs on NASDAQ. So as we come into this Monday, that was the only established level of value that we had to go off of. Now, the market opens up pretty far away from that level of value. So I'm thinking, will we get an opportunity today? Well, we might. This is a low volume node area, meaning there's not a lot of trading activity that occurred in this range, right? This more white range, anything that's outside of the balance has lower trading activity. So in an environment like that, it makes it more conducive for directional strategies. We got the breakout in the morning. we started to trade at that value area low. So my thought process now is like, okay, we could potentially reject off of this level of value, or we could accept inside that level of value, which would then become a balanced market, right? So we took a couple of trades, we got chopped up 2-3 times, it happens. We got to manage our risk. And then later on in the day, we got the sell-off that we were looking for. And this is where it can get a little tricky, right? Because whenever the market is shifting from that balanced market to the imbalanced market, it's like that shift is really what you're looking for. That shift is really what's going to give you the context in which you're looking for, because that's going to give you the confidence or game plan on getting short or getting long, right? Because we can accept into balance. Maybe some people took the long. I decided to take the short for my reasons, for my personal reasons, right? So it was a good short attempt off the value area low. I think sometimes even if we have red trades and we're forced to manage, I think that it's not always quote unquote a bad trade. And the same thing with green trades. I think sometimes we can have green trades where we kind of went outside of our process. Maybe it was even maybe a little indisciplined, maybe even added more to the trade than we really should have. So I think even sometimes with green trades, we violate certain parameters that we have for ourselves, but we kind of brush over those ones. So I really want to acknowledge that sometimes taking a red trade is sometimes the right approach or right move to make, especially depending on your risk profile in that specific trade. So we started to chop around at this value area low. Whenever we start to chop around, that's when I just tell myself, okay, just be patient, let the market show its hand, wait until you get a little bit more clarity so that you can be more decisive with your trading decisions, right? So we chopped around and then we built a new auction. Auction is a new phrase that we haven't spoke about before, but an auction is pretty much the entire market, right? The market is an auction. But when we use auction, we're going to talk about consolidation areas in the market. Whenever the market is auctioning up and down within a specific range. So we started to auction around this value area low. And then later on throughout the day, about at 11 o'clock, or maybe it was 10 o'clock, we finally sold off. So what we gathered from this day was the small losses were necessary and they were a part of the process. And another thing I want to point out is even if you take a loss, if you manage your risk well enough, don't let that defer you from taking the next trade that you see, right? So we can even talk about managing our confidence levels when going through the trading day and taking multiple trades as well. But that was Monday. We got chopped up a little bit. We talked about that one. What's funny is, and what I want to point out is, look at these levels. This is 20. This is, oops, sorry about that. This is 24,940. This next level that we're looking at is a 24,840 level of value that we were looking at all week. We got a couple short opportunities at our upper end of value, which we didn't have to take too much drawdown, right? Because that's at like one standard deviation that we're looking for. Price was pretty overextended, so we wanted to fade that move. We wanted a mean reversion type move. And that's what we got. The market sold off down to the value area low, so that's why we covered that position. Now, we start to chop around once again at our value area low, which is a very similar type price action that we saw the previous day. We start to chop around, things get a little confusing. Once we chop like that, I would like to label things as like an NTZ, like a no trade zone. It lets me know when to be a little bit more cautious. Oh, sorry about that. It lets me know when to be a little bit more cautious. Let me adjust this. There we go. It's did because there are minutes on the clock for 5 additional Senate Dems to vote to reopen the government. That's interesting. We'll take a look into these. We'll take a look into these other underlyings that we got in here too, because maybe we do some adjustments before we head out of here today since we're getting more volatility kicking in. I know volatility just dropped like a rock. Again, it popped and then it dropped. So this market is volatile. With that being said, though, we sold off on Tuesday, chopped around, and then we were able to get another short opportunity. And the real takeaway from this slide right here is the fact that the same level offered the same opportunity twice in the same day. So we got the shorts in the morning, and then we got the shorts more towards the afternoon, and they both played out pretty much the same way. So it just lets us know we're looking for opportunities in the market to put ourselves in a position where the market is about to make a decision. Right, so we're getting short up here, but the market obviously could have easily ripped to the upside, but we understood, again, we're putting ourselves in a position where the market is about to make some directional decisions. I can't stand putting on or taking trades when the White House is speaking live. I'm in the same boat, and we're going to get to Friday here, but I made some comments on the Friday about how I wasn't even comfortable trading today, depending on what was going on, and things of the sort. So I'm in the same boat as you, Whit. But over here, lastly, before we move on to the next slide, is we sold off. We started to chop around our value area low, which we took 2 more paper cut losses. We took a couple break-even trades there, and then later on in the day, again, we got the short opportunity. But I think really what the lesson learned here from Monday to Tuesday was more of not taking the opportunity over here, not taking the second opportunity on Monday, even though it showed itself right over here as we broke down. And not being scared after getting chopped up twice, not being scared to pull the trigger and take the trade with confidence and just manage our risk as the trade plays out. So that's one of the main takeaways there on Tuesday. And this is the one that I didn't really feel like talking about. I didn't really want to talk about too much. It doesn't feel good talking about trades that you didn't manage very well all the time, especially because we spoke about this one on stream, right? We took the short here at our value area high, right? We get a 112-point run. We trade to our value area low. I was convicted in a lower down move in the market, so I wasn't worried about getting that mean reversion back to the other end of value. I was like, oh, we might switch from balance to imbalance here. We might break out to the downsides, right? That's my thought process. That's what I'm thinking. I mean, we're even here sitting live talking about this trade, and then throughout the afternoon, I get stopped out at break even, right? I let a trade where I was 112 points in the profit come run back against me at break even. Personally, I don't think when you're 112 points in the profit on a trade, you don't take anything off. That's a tough decision to make. Now, it was a great short entry at the value area high. We held through 100 points, but we let the trade come back on us, and we need to reflect on why exactly did we do that? You know what I'm saying? So these are the type of trades that I think we like to brush under the rug, but I think are necessary to really reflect on. So wanted to share that with you guys. And then we got Wednesday. We got a couple shorts off the value area low. Keep in mind, this is the same level of value that we've been trading in pretty much all week. So you can see over here, this says 24,840. And if we go back a couple times, 24,840, we go back again, 24,840. So the market was in play around this range all week, which made it a little bit easier to get consecutive trade opportunities. So with that being said, we got a couple short opportunities here. This trade over here in the middle that I stopped out on break even, this trade would have panned out and we would have caught this run to the downside down to the new lows. I hesitated on the entry, and because we hesitated on the entry, it widened our risk parameters. So then we weren't too comfortable sitting in the trade after that. So we just cut it. Then we took one more that we cut, but it was great. Short idea at the value area high. Hesitated, it created a wider risk. Cut trade due to poor risk management or poor risk reward. And without hesitation, you know, obviously would have worked out pretty well. But don't want to brush those little details under the rug. Then come Thursday, we broke this one down yesterday together. This was a pullback into our value area high that we were looking for. We understood that the market was in imbalance mode. So because of that, that's why I looked for the directional opportunity off of that value area high, right? And that was the only opportunity for yesterday. And then into Friday, no value area, no trade, no value area, no trade. When it comes down to trade opportunities, if there's no value that we're trading off of, I don't see very great risk to reward opportunities that we can really take. So if there's no great risk to reward opportunities, I'm thinking about sitting on my hands. So with that being said, we can jump over here to the Tasty Trade platform, and we're going to go over some of the trades that we put on, some of the trades that we're still managing, and take a look at UNH as well. Fed's sending more troops to Portland. He's got his own show now. Where did Gus go? Gus is in the UK right now. Gus will be back next week, and we'll be back to regular programming hours. But in the meantime, you're stuck with me in NASDAQ. In the meantime. SPX selling off a little bit here. Volatility spiking to about 16 pulls back. But let's look at some of these positions. The only position that's really working very well for me right now is UNH. So we got Baidu. We sold an out-of-the-money call spread on Baidu. 49 days left till expiration. We got Oracle. We sold an out-of-the-money put spread on Oracle. Sitting around break even on that one, down a little bit on Oracle. QQQ, these were short positions on QQQ, and as we rip to all-time highs and continue to rip to all-time highs, those aren't going to pan out in our favor. And kind of same thing with SPY. We can think about managing SPY if we want to. We still have 2 weeks left till expiration, so that's a thought, right? But UNH coming in clutch, right? Down at the bottom of the portfolio. UNH coming in clutch. And let's see what kind of news UNH had on the day for us to have a pool like this. Let me see. We were looking at the November 21st cycle. We sold the 330, bought the 320. We were able to collect, what was that? We were able to collect $4.08. So we were able to collect a little bit over the third of the width that we typically get on some of these trades. We got a lot of time on those ones too. Other than that, we can look to see what other positions that we have on that we could sell some premium in. If we look at NASDAQ right now, /NQ. Charts, what time frame are the charts with the white background? Yeah, those were all 1 minute. Those were all 1 minute. I know, kind of crazy. At least they weren't 30 seconds. I think we got a 30-second option. I think we got like a 15-second option, and I think like a 10-second option. So if you want to go crazy, you can get some 10-second candlesticks. FSLR range in the 50%. Got a whole lot of redirecting to do. It's overwhelming. I need a nap. FSLR, let's check it out. And then we'll go back to NASDAQ. Errol, it occurred to me yesterday and today, your show is actually better when you're humming it alone. Nothing wrong with Gus or Dr. Jim, but you cover a lot when not cutting up with a counterpart. No, I appreciate that, Whit. I think they're just different styles. I don't know. I love going back and forth with Dr. Jim and Gus. They're extremely great communicators. But I know we got a lot of NASDAQ, and I know we got there's a lot of trades that occur on NASDAQ. So that's why kind of we have a high frequency of trade opportunities with NASDAQ just because they're on a lower time frame. So they pan out over and over again, a little bit more frequent. But I appreciate that, Whit. Let me see if we can find market open here. It's kind of easier to gauge what the market's doing for the day whenever we have a line in the sand on where the market opened up. So we got 8:30. Let me see. 8:30. Got a little bit of a sell-off in the morning. Market's trying to sell off more here now. I mean, I know we talk about it all the time, but really, how much further can the market really continue to go up before we even get any type of consolidation? You know what I mean? But let's look at our watch list and see what we got on the premium side. High options volume, gonna go to change. Let's see what's moved the most throughout the day. We got plug moving. Let's go to the daily, get our larger. There you go, plug popping off, very high IV rank. We got earnings November 11th. Options chain not looking very attractive either. Or our QS. Let me check out QS QuantumScape. 77 IVR, we got earnings October 22nd. That just reminds me, my mom's birthday is October 20th. So, you know, I think October 20th, I think this is Sahil's birthday, actually. I think October 22nd is Sahil's birthday. My mom's birthday is October 20th. QBTS. Hey, Errol, who's winning the Premier League this year, Arsenal or Liverpool? Killian. Come on, there's only one answer. But no, I'm going to be riding with Liverpool. I think I'm a Liverpool fan for life. I'm going to miss Klopp for the rest of my life. I think he was a great manager. But at the same time, I think it was kind of good that Klopp left because, I mean, our new manager, Slide, he came in the next year and won a championship for us. So that was pretty cool to see. But the one thing that I like about Liverpool is they build with the team that they have. They're not like a Man City where they go out and they just have all this money and buy all the best young players, and then their team is just stacked. I like Liverpool because they build with the base that they have, and they really develop a lot of their guys from the academy level, from high school age, right, up into the professionals. So I think that's dope. I love their culture, you know. RGTI still popping off. Anybody still holding RGTI? I think Gus had some RGTI on. So hopefully he still has it on because this is a cheaper underlying. So we were trading at $20 just a few weeks ago, and now we're trading at $40. We've doubled. Liverpool isn't what they were last season. That is that's unfortunate to hear. And that reminds me, I need to call my dad. My dad's like the Liverpool analyst, pretty much. That's where I get all my updates from, and we need to touch base so I can hear his thoughts and opinions. Let me remove this RJTI. Let me look at this options chain. Earnings November 11th. Let's go PSG. PSG. That's crazy. No, I like me some PSG. I like their jerseys. I like the Jordan branding. That's why I like PSG, right? We're in Chicago, and PSG's branding is the Jordan brand, right? What's going on, big deal? FC Bayern. I like FC Bayern. Not a big fan, but I like them. The only team I don't like is Real Madrid and Man City. Those are the only teams I don't like. So, CIFR. Let's see if we can. I think we can find some good ones. Everything's ripping to all-time highs right now. Is it too late to buy 100 shares of RGTI? I mean, my personal opinion, I wouldn't feel too comfortable. It feels like we're chasing the move a little bit. But at the same time, we're only at 39 bucks. What if we're at 40 tomorrow? 70 cents away. But no, this is one of those, this feels like the overall market to me, right? Like this looks like a great opportunity, but I don't know how to get involved. So when I don't know how to get involved, I don't want to chase it. So I'm going to sit on the sidelines. So whenever I see something like this, I'm more in the camp of, I'd rather not do anything than put a short on because I wouldn't get long. So that's kind of where I'm at. But if you had that mentality, I mean, over the whole last year, 2 years, 3 years, I mean, if you look at the market, that would have worked out really well. So take what I have to say with a grain of salt. Oscar, we got Iron, Oscar, CLT dot, Riot, Beyond. Not a big fan of the cheaper underlyings. Roblox, a lot of potential. I don't know if anybody in chat right now has kids, but let me know if, are they playing Roblox? Because Roblox is doing a lot, and I think Roblox is going to get connected with a lot of things that have to do with the metaverse and the blockchain and the NFT. I think we're a little ahead of the curve on that, but I really do think they're building things and integrating things for that to come. Because there's a lot of it has its like own in-game economy as well, and I think games that have their own in-game economy have a little bit of an advantage. Hold RGTI cost base is $15. Nice, Kyle. We're trading at 40 bucks now. I should have done it yesterday, like someone in chat recommended, whoever that was. Yeah, no, RJTI just feels like it's getting away from us a little bit more now here. Let's go back to it one more time. I don't think the options chain was very attractive. Options chain is perfectly fine, actually. That was something else we were looking at. Another thing you could always think about doing, right, so you want to get involved in RGTI. So with RJTI, we're trading what, $40 now? I take you $4,000 to buy 100 shares. Let's see what a zebra would cost us if we put on a synthetic position. So we get near 100 deltas. Because I assume, RGTI, you're buying shares, but it doesn't, unless you believe in the company. Unless you really want to hold that long term. But let's find our 70 deltas. Let's do 2 of those. Cancel out that extrinsic value. We're at 91 deltas. You can see that extrinsic value. We're almost canceling out that extrinsic value. So we're going to go, we're going to go here. We got positive 93 delta, which is synthetic, right? 93 shares. And that is only going to cost us $950. So it's a lot more capital efficient than buying the 100 shares if you weren't planning on holding those shares long term. Also, this is in the 14-day cycle, and then also if you buy those 100 shares, maybe you want to sell some calls against the 100 shares that you have. So there's that too. I do in DARPA. QS up 10%. I seen that on the watch list. Big deal. I had seen that on the watch list. I think this was the options chain that wasn't looking. No, this one isn't either. I do, and so does DARPA. I just want to buy low and sell high, man. Don't we all, Rancher? Don't we all? Don't we all? Again, though, I think the RGTI Zebra is not a bad. I don't want to get short. I don't want to jump in front of this train. But whenever it is time to get a little short on RJTI, I'd probably do that using the Zebras, just because it's about 25% of the buying power than if we were to short 100 shares of RGTI. but we're gonna look to get something on before we do. And every 5 minutes, we need to check the overall market to make sure that we haven't sold off like 50 points or something. 15 points, good enough. Let's see what we got over here. Let's go back to our watch list. You're gonna pass on Rigetti. No, I hear you. I hear you. Plug. Let's go to our biggest losers of the day. I know we just took a look at Roblox. Getting hammered. Pretty decent IV. Earnings October 30th. Earnings are in the way a little bit. I want to see what the daily is looking like. We'll find something. We'll get something on. Let's look at Tesla. I know Kim was trading Tesla the other day as well. Tesla was looking like it was going to fail its breakout, and it's looking like it's continuing to do that. So earnings are October 22nd. Go to November 21st. What can we do in here? I want to be opposed to a skewed iron condor to the downside on something like Tesla. I want to see what the premiums are going for. There we go. Let's skew this. We'll bring these up a little bit. Pull these puts down just a little bit. See what we're working with. 325. We're about neutral on that one. Let's see if we can get some more negative delta. Probably have to be a little bit more aggressive here. It's tough. It's always tough shorting into the hole. It's always tough shorting into the hole and getting long into the rib. It's always tough. But we can pull this away a little bit. We need more short delta. Be patient on Tesla with earnings October 22nd. Any word from Activision? I heard their stock was up because of GTA, my elite sum new date or something like that. Did they release a new release date? I know GTA was planned to release in the beginning of 2026, I think it was. I'm not sure if they're still on track for that, but I mean, we've been waiting 6-7 years now for the next GTA, so, I don't know. I don't know how you fall off track after 6-7 years, but it's gonna be a big deal. I mean, all the hype built up to it, GTA turned into a meme. I can just see a day when Tesla goes the way of Lulu. What do you mean by that? The way of Lulu as in how the stock is performing now? Oh, wow. That Lululemon. Lulu absolutely beat down. No earnings on Lulu. That's in the way, though. We're in the November cycle. 178. You know, I like Lulu. You know, I don't have Lulu for myself, but as a brand, I do like it. I think they got a lot more potential than what they've already done, too. But their stock is not reflecting that. Lulu has had so many more competitors over the years, too. We got Aloe, we got Aritzia, and I think there's some other brands that are on the come up. It's like that aesthetic, clean feel type brand. You know what I'm talking about? It's the aesthetic brands that people are making like day in the life videos with, you know? I think those day in the life videos and that influencer culture really does influence people's purchasing habits and like what they like, what they think is cool, you know? And I think we saw a massive run of that with these type of athletic wear. I've never completed a GTA. I've never completed a GTA either because every time my dad walked downstairs, I had to shut that off before he saw what was on the screen. So I've never completed a GTA either. Have you seen the Chinese anime GTA? We don't need a GTA 6. I have not. I just finished rolling that 170 strike out to November in Lulu. 170 strike, where are we at? Nice, November's a good amount of time. Where were you? And you were in the October? Cost is still in a lawsuit with Lulu. Not sure if that got resolved. Let's see what Cost has been up to. There's also a report about Activision accidentally leaking content for Call of Duty Black Ops 7, not GTA, which is separate from Rockstar. I'm kind of over Call of Duty, to be honest. Like, it was fun that we grew up with it. You know, I'll still play it here and there. My girlfriend and I will play it here and there, but at the end of the day, I think I think Call of Duty has ran its run. It's not even the same game that it was 5 years ago, you know? I mean, it's not even, I mean, there's everything is a new age, right? Like there's a huge market of young gamers. There's a huge market of young traders now. Like it's just weird. It honestly is getting like weird getting older and like having a generation right beneath you and starting to see the things that they interact with, especially when you were so used to being that young generation. You know what I mean? Because I said something the other day and I felt old when I said it. Like I was kind of complaining about like how things used to be, and I was like, whoa, am I getting older by me complaining about how things used to be? Like, times have changed. An emperor has no close scenario overpriced stock without fundamentals. Cost range-bound stock. I mean, if you're selling iron condors in here over the last few months, you probably did pretty well. Or premium sellers, at least. I don't really play any games. I hear you, big deal. Neither do I, but I'm trying to remind myself to play them sometimes because I find them really fun. I don't really ever play, but when I do, I'm like, I forget how much of a good time I had. And we're in the season of like finding new hobbies at the same time. So let's see, we got cost. IV ranks pretty low on Costco right now. Nike was the talk of the town for a little bit. I'm pumped for Battlefield 6-2. I've never played Battlefield. Again, if you're Call of Duty or Battlefield, you're usually one or the other, especially like 5, 7, 6, 7, like more like 10 years ago. I keep saying 5 years ago, but this is more like 10 years ago. You usually chose one or the other because the mechanics are completely different. Nike 21 IV rank. Don't worry, guys. We're going to get something on before the weekend. We need to get more premium positions on as well. Brandon, brother, you changed your profile picture. What's going on? I think you did. I didn't know this, but in Vegas, Fortnite has a competition every week with like $1,000 guaranteed prize. Then from there, they stream on YouTube. That is genius. That's genius. Stream the live gaming live. That's going to get a ton of attention. That's genius because, I mean, I would tune into that. PLTR getting hit pretty good today. We'll take a look there too. Taking a quick look at Nike. IV rank is pretty decent. I'm not going to force anything though here. We'll take a look at PLTR. Gaming is getting way too expensive for kids. Microsoft just increased Game Pass price by 50%. I didn't know that. That also might mean that my Game Pass probably increased by 50% as well. So I'm curious about what your guys' thoughts on this too, though, because it affects all of us. The business industry affects all of us. It just hasn't hit your industry yet. But video games, right? It's going to more of an on-demand type feel, like a Netflix, right? That's what Game Pass is. You can kind of pay your monthly subscription, and then you can go in there and see what type of games are on there and what's available to play. Sometimes they might take games out that are not getting very good traction, then they might add new ones to keep it fresh, just like a Netflix, just like a Hulu, or any of those services. But it's kind of weird to see it happen to the gaming side of things, right? Where you pay a subscription. But at the same time, you know, the thing that I think about is having to save up $60 to buy the new Call of Duty, you know, and it's like that subscription that we pay monthly for Game Passes. I mean, I don't even know what it is. But if you buy any brand new games year to year, you know, that's $60 a pop. Now they're like 70, 80 bucks. So gaming industry isn't cheap for sure, but I was more fond, not of the price increase, but more of that Game Pass type access that they were doing. PLTR down on the day, 13 points. We got earnings November 3rd. I'm not opposed to PLTR. Earnings November 3rd. We're in the November 21st cycle. I'm not opposed to getting on some long delta in PLTR. I need some long delta on in general, but we do have earnings coming up here soon. Still watching Tesla, Jared. Tesla's getting hit on the day. I can almost kick myself for not selling that at a money call spread now a couple days ago, but I still don't like that I have to pay the same price, but I can't trade in the game or sell it to a friend or even give it to a friend. Big deal. What you're talking about right now, there's a solution a lot of blockchain engineers are working on right now. And this is a part of that in-game economy that I was talking about a second ago with Roblox. And this is one of those things where I'm not like a blockchain, you know, Web3 NFT kind of person, but I think it's one of those things that is going to affect all of us. Again, quick plug for Dan and Shelly. I think they've been doing a great job killing it at Tasty Crypto. But I think we should definitely take advantage and ask them more questions, because when it comes down to in-game economies, first, they can answer those questions a little bit better than I can. But also, big deal to your point, you're purchasing a video game and you're not able to sell these digital items or these digital assets, right? Digital assets. You gotta just lose 100% of your money on it. If you could sell it for 50% of what you purchased it for, that's better than nothing. But there's no system in place for us to be able to digitally sell these assets back and forth to one another. So with that being said, blockchain is going to take care of a lot of that. It's just, when is that going to happen? Like imagine you being able to the first concert tickets that you ever went to, or let's say you go to an artist that is just now popping off, and like you were a supporter from day one, and you went to one of their first concerts, and you have that QR code, or you still have that digital purchase, right? And let's say they blow up and become extremely famous for whatever reason. If you have one of those select few first concert tickets, you could probably sell that to somebody that likes to collect these items, and they're probably going to purchase it, right? Because the blockchain is more like that digital ledger. So I think that's fascinating, right? I think that's fascinating. The minds that are working on these blockchains with the smart contracts, I mean, it breaks my brain, but what they're doing is fascinating. It's a fun little workout too. $27 every 3 months. We're gonna skip PLTR for now. We're gonna look at Carvana. Playing Kung Fu VR. That's my new thing right now. That sounds fun. It sounds like a workout too. I know you're sweating in that thing. Because I remember I was doing the boxing in the VR one time, and I was legit getting in a full body workout. You getting absolutely hammered on the day. Let's go back to the daily. The only time I ever go to the daily chart, if we're being completely honest, is whenever we're scalping or if we're trading something like NASDAQ. Other than that, it seems daily charts seem pretty pointless. Fun little work too. About PLTR, Army memo flagged. Fundamental security, flaws in the modernization of the battlefield communications network they're helping to build. Okay. EPS up to 73%. Piracy is about to make a move into gaming soon. We're going to need more solutions for that. So that might just mean opportunity at the same time. U's getting absolutely... Unity software right now, guys. Not even to ironically pull up Unity software, but Unity software is taking a hit. IV's popping a little bit on here. IV rank is at 40. We do have earnings November 6th. But I'm not opposed to this one. I think it's only right. It's only right. 61% pop, 73% P50, about 17, 18 positive delta on that. $327 worth of buying power, about $175 to collect on credit. Not opposed on this one. I like this one a lot better. 40 IV rank. IV rank just went up as we spoke to. Let's see. The thrill of the fight makes you sweat 100%. The thrill of the thrill of the fight, and then wait, I don't know if the Kung Fu Panda in VR is like you physically like doing some type of combat. But maybe if it's just a thrill and no physical aspect to it, maybe mentally it can be thrilling. But I always enjoyed the Kung Fu Panda series that in the movies that they came out with. We're just gonna take this down one credit. And get a feel. We'll get a fill here in a moment. Maybe not. Take it down a couple more. We'll leave it at that. 173. We're not gonna go below 166. Gonna sell a put there, Rancher. Yeah, I mean it's been beaten down a little bit. The IV is there. Maybe we get a little bit of vol contraction if we get that pop. And maybe Unity will do a little bit better if GTA, doesn't pan out. Now we're just looking at Carvana. Some underlyings just look so boring. And I know we're not here to, just have fun with the trading, but some underlyings are boring. Goodness gracious. Got to throw in an Iron Condor in those ones. Core Weave, no thank you. Dell's the OG. Dell's been popping off, pulling back a little bit here. IV rank's not too high. Volatility's not too high considering how volatile this market's been in Dell. Rancher, what expiration are you looking at for you? Pony. It'd be awesome if we could find 2 trade opportunities. Go ahead and manage those. Lift. No, kind of consolidating at the highs. We got earnings November 5th. Oh, you like the buying power to max gain ratio? Gotcha. I got you. Speaking of Lyft, how are we doing with our guy Uber? Everything's at its highs, huh, guys? CMSA sell put. CMSA, we'll take a look. $24 underlying. The beginning of June, we were trading at about 20 bucks. We're up $4 since then. Iowa looking at 14 DTE, but not sure if that's where I'm going. Thoughts on UPS? UPS absolutely beaten down. Really solid IV rank. This is something like I feel like Tom would just look at it and be like, "Oh, I love it. Sold off so much." You know, I forget exactly what he says when he sees it's been beaten down, something. But October 23rd, we got earnings on UPS. It's just something to look out for. We have earnings season right around the bell. So not a terrible trade idea. I mean, the IVR is there for sure. That's something to consider. Take it with a grain of salt. But I love beating down underlyings. GME, no thank you. SoFi, 28 IV rank. We got earnings before the bell, October 28th. I'm gonna leave that one alone. What's the deal with Plug Power? I know they're on the watch list. I think they're up the most on the day than anything else in the market. Yeah. Again, I know it's a cheaper underlying. Let's see if they had any news. 930, Plug Power gains after HC. So shares of hydrogen fuel cell maker Plug Power plugs soars 26%, their highest level in 14 months. TP $7 to $3, citing rising electricity prices and stronger regulatory support for nuclear power. 50, 100% plugs, brokerage notes. I'm curious to know what the market cap and float of this is. 2.7 billion. So I mean, that's small, but it's not tiny. I mean, we have a lot of market caps that are like 100 million, 200 million, 500 million in the market, 800 million. So 2.7 billion is not terrible, but it's not massive either. Let's go over here. Look at me going into this intraday chart. Curious to see how this thing's been moving. Zoom back out. 14 days. I think that was the options chain we looked at. That was kind of ugly. How about selling the 35 strike, 28 DTE in U? Let's look at that again. I know, have we gotten filled yet? So I've been filled on U, but let's go to 35 strike, 28 DTE. What are you getting? So about 515 bucks in buying power, 69% pop, positive 33 delta, $1.66 in credit. You're getting just a third of the width on that one. Shout out to the trade idea by Rancher. That's another really solid position. And you have 28 days on that. $515 worth of buying power. I know we went defined risk on mine. It lowered that. Lowered that credit just a little bit. And then also when you're selling it naked, your pop is a little bit higher. It's gonna be a little bit higher, which is nice. Is it on the follow page? I'll send that one through. I got you, Rancher. I sold the. Look at that. Great minds think alike, Rancher. I sold the 35 strike as well, and then I bought the 30 strike. And I did that for $1.73. But I do like your undefined risk position. And we'll go ahead. We'll send this through. Yeah, I went with the spread. But we're looking at the same exact strikes. And then UNH, we're going to manage. This one was a $10 wide. We collected $4 on this one. So we'll probably take this one around 200, 300, 400 bucks. We'll see what it is. Shout out to Warren Buffett for boosting this a little bit. Yo, imagine Warren Buffett had a Twitter. Imagine he had a Twitter. Talk about influence. CLSK, Roblox, Beyond. Never been a fan. Anybody trading gold lately? Or are all the gold traders non-existent now because of what has been going on in gold? Gold's still screaming to its highs. This is another one where I'm just going to be patient for. I'm not going to try and pick off the top. I'm not going to try and do any of that nonsense. Once we actually turn around, then we'll get involved here. But gold has been nothing to play around with lately in terms of very aggressive positions. And then a similar story in something like silver. Oops. Cool. Thanks. Going with the cash secured puts. 28 DTE. Love it. I almost like the undefined risk better, but I love it, Rancher. You're hodling on gold, Bob Sala? Are you long? You're long gold right now. I mean that's beautiful. That's beautiful. But I know we had some people trading gold, especially on these moves, taking advantage. But I missed the boat on this one, so now I have to deploy patience and not miss out. PLTR put 140 on PLTR, 42 days to expiration, collected about 450. Gov talking right now. Let's go to NASDAQ. We got a couple minutes left, so we'll see if we can watch some volatility before we start to wrap here. NASDAQ making new lows. We definitely did get some volatility in the market. It was a no trade day, but gotta go have a great weekend and all. Good job, bro. Peace. I appreciate you. You take it easy. Have a great weekend. We'll see you next week. Or we'll see you on Sunday when we open back up for futures. We'll see you. But I'm liking this move. Just because I feel like one of the market participants that just can't get involved with the market once we keep screaming at all-time highs. And I don't know. Again, I've been trading in the market now for, 6-7 years now. I've been trading options for about 4 years. And I'm always curious how people, approach all-time highs. It's still something that feels like, it almost feels like when I got into the market over the last years, we're now just always trading at all-time highs. So it's like this, a thing traders always had to deal with, 10 years ago, 20 years ago, always being at all-time highs, making new highs, so maybe we can pull back from there, get some more vol kicked into the market. That's been another thing. It's been feeling like we've been watching paint drive on the vol side. And I mean, last April, it was just so much short-lived than I would have anticipated. We have had no significant spikes really since then. Last, we had a quick drop beginning of September. We thought that was something, not really. Then July 31st, a little bit of something. June 18th, a little bit of something. But it's about like once a month, we get a little bit of a pop in vol. And it's like if you don't take advantage of that, you kind of miss the boat on some of the best vol opportunities, in my opinion. April, one of the best opportunities to get on more long delta and selling some premium. But again, a lot of this is hindsight, right? I mean, you wouldn't have known this until after, but moving forward, when volatility expands, we're 1,000% going to be taking advantage of that. So maybe that's Monday, maybe that's Tuesday, or maybe that's whenever the market decides on what they're going to do with this government shutdown. And maybe it's like a sell the news kind of event when it gets confirmed. So we'll see what we get there, but we're going to start wrapping up for the day. We got UNH still on. We just put a position on in... what was it? It was Unity Software. We broke down all the trades of the week. Appreciate everybody that's been following along all week with some of the trades that we've been taking and managing those together. How do you approach market? The trend is your friend. Momentum trading has been a winning strategy in a long-term bull market. I hear you, Bob. I hear you. I know some of the opportunities we took this week, I lacked some confidence trading the NASDAQ scalps, but due to the point that you just made, leaning long on those areas, really what gave me the conviction to get long. But it does feel like it's one of those areas where you can't have the conviction that you want to have. You know what I mean? Like the idea is there, the trade is there, but sometimes I want to have a certain level of conviction when that's where you just got to be disciplined and patient. Like if now's not the time to call for more convicted trades, and now's just not the time, and we shouldn't force what we want onto the market. But Bob, appreciate you being here. Always appreciate your insights. Scramble, Wit, Big Deal, Sergio, Rancher, Chris. Appreciate you guys taking the time to hang out. Bro, your shoulders are looking huge. I don't know. Maybe it's just a see. I feel like my traps have went down because I've not been taking in as many calories as I should be taking in. But I appreciate that, Big Deal. That's going to wrap it up for today's segment. Thanks for everybody taking the time to hang out. We will catch you guys next week. Be sure to stay tuned for more coming on next, and we'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is we are trying to do. We are going to shoot from strength again here today, hopefully with a video that works, and continue our discussion around a deep dive into Delta. So Matt, go ahead and bring us right into the sliders. So when it comes to Delta, there's 3 different ways that you can use Delta, right? We talked about option price movements. We talked about it as a probability gauge. And now here, number 3, this is going to be the most common way that traders use Delta, at least here inside of the Tasty universe. So Matt, go ahead and bring us into the information. It's going to be as a directional bias measurement. So when you have delta, it not only gives you the underlying price movement when the stock moves, it not only gives you a probability gauge when it comes to probability of in the money or probability of a touch, whichever of the two you might be looking at, it also gives you a measurement of the directional bias that you might have. And so this is usually going to be the most common way that traders will lean on delta when it comes to what it can do for you and the types of ways that you can interpret this metric. So when you think about delta and you think about how you can use it as a directional bias metric, you want to think about it in two separate ways. Number one, you have individual positions, and then number two, you also have Matt, can you take us into the information? Yeah, there we go. So number one, you have individual positions, and then number two, you also have your overall portfolio. So when it comes to individual positions, the best way to think about directional bias in terms of what delta can give you is to remember that an option contract is worth 100 shares. Right. So if you were to exercise the contract or the contract were assigned to you or whatever, it's going to be a 100 share transaction at the end of the day. So it's very helpful to remember, all right, this is essentially the maximum, weight of the contract. This is the maximum exposure of the position, 100 shares. But here's what's very, very interesting. Whenever you put on a position, an options position that has some delta, it could be 30, it could be 50, it could be 70, it could be 80, whatever, a call or a put, it doesn't matter. That delta is actually telling you what percentage of the contract are you actually exposed to directionally right here and right now. So case in point, if I have a 30 delta option, call or a put, it doesn't matter. That's going to feel like 30 shares. It's not going to feel like the full weight of the contract just yet. It's going to only feel like about 30% of the weight of the contract. Similarly, if I have a 50 delta option, that's going to feel like 50 shares. If I had a 75 delta option, that's going to feel like 75 shares, and so on and so forth. And so when I think about delta, and I think about what it can do from a directional bias standpoint, this is why, when you sell an out of the money put or you sell, an out of the money strangle, it's not going to feel like the full weight of the contract. Because if I sell an out of the money put, which is probably a better example than an out of the money strangle, I'm going to sell maybe a 35 delta like we saw yesterday with the probabilities. Like that lines up from a probabilistic standpoint. That's going to line up from a probability of profit standpoint, but it's also going to help me better appreciate just how much directional exposure that I might have in this position. Okay. But now we need to remember that delta, just like everything else in the market, is dynamic. So just because you sold a 30 delta today doesn't mean that it's going to stay at 30 delta. In fact, every single day, every single moment of every single day, all of these things are moving, delta included. So it's very, very dynamic. Your 30 delta option could become 40. It could become 50. It could become 75. It could become 95. And at expiration, if it's in the money, it is going to become 100. So you have to understand that right now I'm selling this put. It's only a 30 delta. It's not going to feel anything like the full weight of the contract, but that can and will change if you are tested. The option goes in the money, and all of a sudden you have a much, much bigger position on your hands. Okay. What about the other side though? What about using delta as a directional gauge in your overall portfolio? Well, this is where, the Tasty Trade platform is really, really nice because at the very top of your portfolio, you're going to see your beta weighted delta number. That is telling you for all the positions that are in your portfolio, here is the beta weighted delta number. Now, I don't have time to get into beta weighting of deltas right here and right now because that's a little bit beyond the scope of where I wanted to go with this material, but maybe we'll go ahead and address that at some future point and some later conversation. But if you think about a beta weighted delta, and you think about what it's giving you, it's essentially telling you how many equivalent shares of SPY are you holding in your portfolio. So for example, if you look at your portfolio delta right now, if you have Tasty Trade open, you can look at it right now as we speak. If you see a positive 100 delta number at the top of your portfolio, it's telling you that all the positions that you have in your portfolio, Pepsi, Conagra, McDonald's, whatever, Wolf, of course, everybody's got a little Wolf exposure. Whatever you have in your portfolio, that is going to be the equivalent of 100 shares of your 100 shares of SPY. And if you have positive delta, it's like you're holding long shares of SPY. Okay, what if you look at your portfolio and you see negative 300 delta? Now all of a sudden you're on the short side. Now all of a sudden you're on the dark side. And so what does that feel like? That's going to feel like being short 300 shares of SPY. And so when I look at delta in a portfolio context, it's the same type of thing, and from the standpoint of it giving me overall directional bias, but I don't want to look at it at on a per contract level, because now I'm much more macro than just one option contract. This is no longer about just one individual position. This is about the collective nature of my whole portfolio and what type of directional exposure do I have in that portfolio. And so hopefully this gives you a little bit of an understanding around the 3 different ways that we can use delta: option price movements, probability gauges, and then of course a directional bias measurement. So, all right, Matt, bring us into the portfolio. Man, let's take a look at what's going on in the market. Man, we are still here, barely. Guys, look at this. And I'm so excited. The video has held out so far. I'm so excited. I feel like if we make it past like the 3-minute marker, then we should be good. And of course, those are famous last words. And so I'm sure at this point, the video is going to drop and you guys are going to be left with my sultry humor. But look at the market. EMI S&P is down 8. Guys, I didn't know this was allowed. NASDAQ, risk-free instrument, which of course we know is an extremely high-risk product. It's all good and fun. NASDAQ down 170. You've got the boomers up 244. You've got the Russell 2000 Futures Index up 14. So a mixed market. But man, even the S&Ps were strong all day. NASDAQ was strong all day. And it just looked like, man, it was going to be on a one-way train to 7,000 like today. Like it was going down now. Government, no government, NFP, no NFP. Like who gives a rip? This thing is going to all-time high after all-time high. But au contraire, mon frere, man, look at that. EMI S&P is down 8. Wow, I can't believe it. You got, look at the shifties though. Gold up another 37. That makes sense. That's a pretty average day in the gold world. So obviously Peter Schiff and all of his shifties are very, very excited. Let's look at silver. What's silver doing? Silver up $1.40, so obviously silver doing quite well for itself. The Hunt brothers, they probably don't need to slang those pizza slices anymore. They're probably just good to go with all this long silver they've been hoarding for about, 40, 45 years now? And so silver looking pretty good. Silver was up a lot more, I think, earlier today. Let me bring up like a 5-minute chart. I don't want to go like 1 to 2 minutes because I don't want to quite unlock the Errol Coleman settings. But if you look at the high of 48.32.5. Man, so it was another. So silver is up $1.40. It was up another 50 cents on top of this. I mean, that is some crazy, crazy stuff. It's going to be, I mean, it looks like it's going to be 50 here pretty soon. And so that, of course, means that 48.32.5 is probably going to be the high. And so, man, gold going to 4,000, silver going to 50, crazy, crazy stuff. And then, yeah, if you look at the E-mini S&Ps, you can see, man, look at that. I mean, what came out? We didn't have NFP. Because nobody works at the government anymore. Like, there's nobody there to even turn the lights on. Right? I think they're all still cashing checks, of course, but nobody's there in terms of their official capacity. And so what happened, guys? Help me out here. Like, did somebody say something? Was there a tweet? Was there a, some, Canadian durable goods revision forecast print that I missed? Because I usually have that on my radar. I mean, it's all over my studio in terms of don't miss this number because this is the market mover. But guys, what happened out there? You guys got to help me out in the chat. And I see you guys in the chat, man. I see you guys a lot. Man, look at you guys. I appreciate you guys. Man, Wolf's in the house. RC's in the house. Man, Harold's in the house. Harold, I will not be taking any baseball questions at this time because baseball season's over now. And so now we focus on March. And so, yes, but I thank you for your joining the stream today. But yeah, so E-mini S&Ps, wow, crazy stuff, man. All right. So let's go into the portfolio. And then I want to get to you guys, man. It feels so good to have the video back. Right? Because I know that with the sultry voice, you guys are like, I could do with this. It's like, nah, you really can't. It's like, we got to do, I mean, I can't, right? So we got to do the audio and the video. And so I thank you to Ryan on the production team, helping out in a big way, kind of getting me situated, giving me a chance to test out some different things. And hopefully it works, but who knows, man? I have no idea. And so Scramble, everything's in the house. Ash Finn's in the house. Look at Tiago in the house. I really can't believe the market reversed today. Like, I was watching it today and I was just like, this is unbelievable, man. It just doesn't matter. It does not matter. And maybe this is going to be the chink in the armor. Maybe this is going to be a little deal that, slows down this runaway train. And so, of course, that means we're going to be, 68.50 probably on Monday of next week. But, a man can dream. A man can dream. So, all right. So, man, look at our portfolio, though. So, first and foremost, man, we really, really got smashed in this goal position. And I'll tell you what. So, obviously, we lit the stack of cash on fire, and, that's pretty much par for the course. But here's the thing that really, really is it gets my goat. I think that's the phrase I'm looking for here. I don't think I've ever said that in 10 years from theory to practice. I've never said that once. But, man, that feels so right now. You know what really gets my goat when it comes to this goal position? A lot of alliteration going on right there. We had a nice winner on our hands. So when gold dropped, it was not yesterday, but I think it was maybe 2 days ago. On Wednesday, when gold was down a ton in the morning, right? I mean, I've got so many other things going on in terms of things going on for Tasty, in terms of potentially glute pumps, tricep pumps, etc. In the morning, I'm not necessarily able to, monitor all the things that I've got going on in the portfolio. Well, when I have these butterflies on, normally I will, kind of have an eye out for these positions and be at the ready to manage them early should the market accommodate me. I try not to let those guys slip through the cracks. And then the understanding is hey, you guys know I'm trying to do all my trading on the show. I'm doing the best that I possibly can to do that. But when it comes to these expected move butterflies, from this point forward, I'm probably going to be leaning on some GTC orders a bit more because that's a really, really nice way to have something in there just in case you do get the move that you want and you can't necessarily, access the markets at that very time. I think I got a little bit lazy and a little bit complacent because I was like, man, we've got from theory to practice every day. I don't have to necessarily worry about missing Wednesday with today's assignment, with Aero, with things like that. And then the complacency got me, it 100% got me. And so that really stings because we had basically whatever we wanted to the upside. We had a $5 winner, we had a $10 winner, we had all those things, and now it's turned into a full loser. And so the moral for you guys, the teachable moment is whether it be GTC orders or just regular strategies or just however you approach your day-to-day trading, it's one thing to lose a trade. It's one thing to put on a position, directional or not directional, it doesn't matter, and the trade just gets away from you. The market just beats you, the stock beats you, the trade beats you, you don't have a chance. You never see the light of day, and it's over. You end up taking loss, you end up taking max loss on a defined risk position, whatever. That's fine. That's hard, but that's okay. That's part of the deal. That's what we're all signing up for. When you have a winning trade, though, especially a good winner like this gold butterfly, when you have a winning trade and it gets away from you, man, that stings a lot more. It's kind of like, hypothetically speaking, winning the first game of a 3-game wildcard series, knowing that previously all 12 teams that have won the first game have gone on to win the series, but then you lose the series. Right? Again, just hypothetically, this is not based on any real series or any real teams or anything like that because baseball season is indeed over. But hypothetically, it's exactly like that. Those feelings and emotions are one for one in terms of the Venn diagram. There is a perfect overlap between those two states of mind. And so the teachable moment for you is, in the world that we live in and what we're trading, high probability, managing winners, you don't really want to let your winners get away from you. You don't really want to, try to push the envelope too far on your winning trades when you have a really nice winner, kind of under your belt. You need to book that winner. You need to move on. And if you are using strategies like butterflies and you aren't able to access the markets 24/7 or 25/8 or whatever, then I would lean on some GTC orders. I think it'd be a great option for you out there to, have something in the books to help you when you run into situations where you can't be in the markets, and maybe the markets are moving and things are happening, but you want to, get out of things moving your direction. So that's our gold lamentation. Unfortunately, it didn't work out. But again, we had a chance and we missed it. But man, look at Best Buy and look at Chipotle. For every gimme, there's a gotcha. And that gold is a pretty big gotcha. But here's a couple of baby gimmies for you. Man, look at Best Buy up 87 cents. And look at Chipotle up $1.18. Man, I'll tell you what, they doubted us. Man, they doubted us, but look at us. We are now only $8.50 away from bringing this thing back. All we need, we may get Chipotle tonight. Friday night is oftentimes like an eat out night at the Schultz household. And, anyone with small kids is going to appreciate what I'm going to say next, more so than just like regular, single people that maybe don't have kids or maybe haven't had small kids in a while. Although this is probably something you don't usually forget. It's very, very difficult to find something that all of your children like to eat. It's very, very hard. And so when you have one child, it's easy because you just force feed them what you want to feed them and they don't really have a choice. But when you start getting multiple children, and now you've got the peanut gallery, and now you've got commentary, negotiation, blah, 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 it's like, man, I don't want to deal with any of this. And so Chipotle is actually one of the few things that all of my kids will eat. Some of them like it better than others, but I'm like, I don't give a rip. They'll all eat it, and there aren't too many complaints. And so we may very well get Chipotle tonight, so I can help the cause a little bit and see if we can get CMG up a little bit more than $1.19. And so that's Best Buy. That is Chipotle. And then, man, going on down the list, you know, believe it or not, there's not really anything to do in here. I know that we're bleeding red. We're hemorrhaging cash all over the place. I mean, look at Rigatoni. Even Rigatoni's beating us up. How did Rigatoni get to 14 days? Wow. Okay, so maybe we will do something in Rigatoni here. This is Rigetti Computing. Again, I think that's Dave Rigetti, the old New York Yankee, I believe, if I'm not mistaken. I think he also pitched for the Angels, but I'm not actually sure about that. I'm kind of thinking, yeah, 14 days to go. I don't really want to. Let me roll up this put, I think. So let's go into Rigetti here. Let's go to October. Okay, so Rigetti's got earnings on November 11th. Okay, so this is interesting. So number one, what if I roll this put up? Let me just take a look at this. So the 21 put is 30 cents. If I roll up to a straddle, you know, that brings in another $1.30, which is not too bad. And so I'm kind of thinking, so here's why I'm pausing. Here's why I'm hesitating. Before I roll this guy up in this cycle, I'm trying to figure out if I even want to hold this into November. And I don't know that I necessarily do. And so with Rigetti having earnings on November 11th, which you can see right here. So, you know, Rigetti has earnings on November 11th, which is right there. The November cycle is 49 days to go. And I don't really want to roll into a weekly, especially for something like Rigetti, which, I mean, I'm shocked this company is still solvent. And so it should be any day now. And so when it comes to, you know, liquidity and things like that, staying in the monthly cycles is always going to be a better bet for you, for me, for anyone that's trading. And so going into November is a little bit dicey because the earnings are on November 11th. And so you could make the case, all right, well, actually, hold on. Let's do some calendar math, which is trickier than you might realize, especially live here on the Tasty Network. As the market is now green, so you got EMA S&P's up 2.5. NASDAQ only down 100. So there you go. I'm kind of thinking now. So my initial thought was I'm not going to roll this into November because I don't want to deal with earnings November 11th. It's an underwater strategy. I have no intention of carrying an underwater strategy into earnings 99 times out of 100. And this is not going to be the one exception. And so what would be the alternative? I probably would just close it right now. Let me just take the $600 loss, whatever. It's not really that big of a deal, not for a $30,000 account size. And so it's very manageable, like very, very doable. But now that I'm thinking about this a little bit more, and I'm like, all right, November 21st, like, let's do some calendar math. So 11/21. I'm going to manage this at 21 days to go. So that means that I'm going to be managing this on October 31st, Halloween. So I will be managing this one way or another on Halloween. So that is still 10 days before. So that is 10 days before earnings. Right? This is very, very high powered, like high tech type of analysis that you see here. Final Jeopardy pens and arrows and circles. I mean, this is good stuff. 11/21 minus 10/31. This is when I'm going to manage the position. That still leaves me 10 days until earnings. Now, there's implied volatility expansion going into earnings. I think we just talked about this recently. I think it was even yesterday. As you guys couldn't see me, I tried to make do with a Final Jeopardy pen, which is probably a suitable substitute for an actual video feed of Dr. Jim. So I'll keep that in mind in the future. But now that I'm looking at this, I'm like, yeah, let's roll this out to November. So now I'm thinking, let's roll up to the straddle. Let's kick it all out to November. And this will give me a chance to buy some more time, pick up some more credit, and let's see if we can't get, you know, Rigetti to cool off a little bit. Again, he hasn't pitched in 47 years. And so I would think that we could get a little bit of downside movement here in Rigetti. So let's go ahead. Let's go to our positions tab. So I'm going to go ahead and highlight both options. I'm going to go to roll the expirations. I'm going to roll it out to, I can't even do November 21st. I mean, I can, but it's just, hold on. Okay. So I had to tick up the expiration a couple times on the trade bar, but no big deal. So 14 days to 49 days. We're rolling out from October to November. the 21.32 strangle to the 21.32 strangle. So that all looks good. And I'm going to pick up $3.38 if I were to leave my strikes the same. I don't think I'm going to do that because the put is so far. I mean, we are so far gone on the put side. And so I'm thinking, let's at least roll the put. Let's roll this guy to, I mean, even if I just rolled it to like a 30 to leave just a little bit, because I really like having some real estate. In fact, let me do a 29. That'd be what, about $5? Yeah, let me do a 28. Okay, I like this. So I'm not going to go to the straddle because I know how valuable that real estate is between the short strikes on a strategy like a strangle. The same can kind of be said for an iron condor, maybe even more so because the risk is defined. And so you want to maintain that real estate between the short strikes as much and as long as you possibly can. Because once you give that up, there's really no going back. I mean, I guess there is going back where you're buying guts and you're selling wings and you're uninverting an inverted strangle. But generally speaking, it's going to be closer to the end of the road than the beginning. And again, Boys to Men tried to warn us 39 years ago, and here we are. Like, here we are finally kind of bringing that guy into the markets. But I think for Rigetti, I think this is it. I think this is the roll. We're going to roll out to November and roll it up to the 28.32 strangle for $4.94. And so, or $4.92, whatever, same thing. And so let's go ahead and let's push this guy out. All right, so we got filled. Oh, 489. I guess it must have moved down before I clicked the send button. So all right, beautiful. So we're in Rigetti. We made the adjustment. The only other thing I want to say, and then I want to get to you guys, man. I see you guys in the chat. Video is still holding out. Man, thank you, Matt, for having an eye on that. I appreciate that so much. Look at Home Depot. This is our calendar spread in Home Depot. Look at this thing, man. We're up like 50 cents on the trade. We're up 54 cents on the trade. It's so funny. If you look at the rest of the P&L opens, man, the P&L open bros, they got me today. I mean, look at all that. I mean, that looks like, again, hypothetically speaking, that looks like a Boston Red Sox roster Game 3 wildcard series. Like, that looks like a pile of doo-doo. Right? Again, hypothetically, baseball season's over. I'll see you guys in March. But if you look at Home Depot, man, that is a breath of fresh air. You know, I mean, we're getting crushed here, we're getting crushed there, we're getting crushed, every which way from Sunday. Hey, Home Depot gave us 51 cents. So, at least we got a little something. And so, anyway, I think we might start doing some more calendar spreads on the show. I think Joel James, you brought this to our attention just a couple days ago. And I really appreciate that because we don't do a lot of calendar spreads, but it's a nice way to diversify our strategy set because we're usually selling premium and I'm usually doing a lot of butterflies and a lot of vertical spreads and whatever. But it's like, man, let's mix it up a little bit and kind of have, some strategic diversification where we have some things that are much lower risk, that are a lot more slow moving relative to the things that might move a lot faster, like a butterfly, even like a strangle that's undefined risk. And so it could be a nice way to kind of, just kind of mix things up a little bit. And so I really, really like the move to maybe incorporate some calendars. And I know Liz and Jenny love calendar spreads. And I mean, now I see why. I'm reminded why. I haven't done a calendar spread in quite some time. And so we might be kind of mixing that guy back in here on a more regular basis. But all right, let me see here. Where are you guys at? Did you guys tell me what happened in the market? I don't know if you did. Let me see. I want to surprise and delight somebody in the middle. And so, oh, by the way, if you're watching on the Tasty Live Network, I would pop on over to YouTube, and now would be a good time because this is where I start taking questions and comments from the YouTube feed. And so if you're kind of like confused or lost as to where I'm going with the show now, I'm in the YouTube feed. And so if you were also in the YouTube feed, not only could you like the video, not only could you post a comment yourself to push this out to more people and fool the algorithm into thinking it's quality programming, but you could also subscribe to the channel. Like you could do all three of these things and more. And you could, of course, communicate with your brethren who are also watching the show. And so I appreciate you guys, but yeah, I don't know what happened in the market. You guys are not telling me, not from what I can gather. I see you guys trolling me though, which is good. The trolls are a little better than usual today, and so this is some good stuff. Let me see. Oh, here we go. I got a surprise and delight in the middle. Let's do it. I see Manny TP. What's going on there, Manny TP? Longtime viewer, loyal from theory to practice, family member. So thank you, Manny TP. Certainly part of the core position. I appreciate you. Manny TP says, Dr. J, I am short a Microsoft November 485 550 strangle. Earnings trade I am managing with earnings trade. I am managing with 1360 net credit now. I can exit with $1.40 loss today. What would you do? If not, would you? If not, what's your move? Yeah, so when does Microsoft have earnings? Let me take a look at this. It's coming up, right? It's in a couple weeks, I think. We just looked at this, I think. Yeah, so 1029. You said you're in November, right? Yeah, you said you're in November. 485, 550. Okay. Okay, so 1029, you've still got 4 weeks, right? A little less than 4 weeks. Like I guess it'd be, yeah, almost. I mean, you've got like 26 days or whatever. That's a pretty long time. That's a pretty long time. I don't think you need to exit the position now because right now Microsoft is cooperating quite nicely. It's basically perfectly centered between your short strikes. So this is really, really nice. But what do you need to be on the lookout for? So right now, I think you do nothing. Right now, I think you stay in the position because right now you're almost at a scratch because you have so much time left and you still have a couple of weeks before you get that pretty reliable implied volatility expansion going into the earnings day. I like staying in the trade for maybe the next couple of weeks. Now, when you get right around that 14-day marker, 14, 15 days, I mean, well, even, 21 days is kind of when we would typically look to adjust. But if you're not going to roll this out into the future, I mean, Tom's gone, man. We can do whatever we want. If you want to hold it to 14 days, I got no problem with that. And the gamma won't even get that upset with you. I wouldn't hold it into earnings, though, because that's where you have the potential for a catastrophic position, a catastrophic situation on your hands, which can be avoidable. So I would sit tight and do nothing. Let's see what happens. And maybe if you can get out for, a couple bucks, even $1, $1.50, something economically significant over the course of the next week or two, then I would take that opportunity, man, TP. That's what I would do. And so hopefully that's helpful for you. But thank you so much for all the support of the show, for a really phenomenal question. And that's good stuff. Scramble Everything said, it looks like breaking news was Moody's downgraded Dr. Jim Power Hour to C+ humor with a hold rating. Yeah, I'm going to say that that's probably right, especially now that you don't know if the video is going to hold out. Like, you're on pins and needles, I'm on pins and needles. Right, like you're on eggshells, I'm on eggshells. Like I don't know what's going to happen, and so I would say a C+ rating is probably fair. And so let me see here. If let me see. Where are we at? Well, Margin Walker, here we go. This is kind of a mixture of like some fun stuff and I think a trading question. Margin Walker says, yo, Dr. Jim, how does your garden grow? I know you're talking about this lettuce right here. This patch of lettuce. Man, it's the good Lord, man. And by the good Lord, I mean it's the good Lord, but I think it's just my dad. Like I have done nothing. I've done things to actively work against my hair over the years. Like I'm not in the shower with Propecia. Like I don't got like special shampoos and like whatever. I only wash my hair like once every 2.5, 3 weeks, which is probably pretty obvious if you are watching the video feed here today. But I don't even now watch it. I watch it more regularly than that. But I don't do anything special for it, and so I'm just thankful that I've got it. Because 44, almost 45 now, it's like a lot of my friends, my own brethren. I mean, it's gone, man. It's gone. It ain't coming back, right? Even the Propecia, it's pretty much a scam. Right, we all know that that's certainly the case, and so no, I'm just very, very thankful. But Margin Walker says I collared some Rocket Lab shares today near the new all-time high, so the stock probably pumps from here. You should probably get long and inverse me. Yeah, Rocket Lab, man, we just traded Rocket Lab just recently, right? I can't remember if we made money or lost money. I think that was from one of you guys. Wow, Rocket Lab is at 55 now. I feel like this thing just shot up. Even potentially rocketed higher, some might say. Let me look at a daily chart. It was in the teens, wasn't it? No, I guess I'm misremembering. Okay, so it was in the 50s. I mean, it's on the highs now, but when we traded this, it must have been in the 40s or so. I thought I remember this thing like being in like the 15 or 17 range. And so yeah, so that's it. That always happens, Margin Walker. It happens to every single one of us, right? You're in a position and you decide to be strategic and you sell a call against it, you collar it off, whatever, right? Then you finally get the move you've been waiting for the entire day, for the entire week, for the expiration cycle. That is just trading, right? That is 100% trading. That tends to have about a 100% win rate when it comes to that happening to you, to me, to all of us. And so you are not alone there, Margin Walker. All right, but let's go to the beginning. Where are we at? I see Harold's comment, but I will not be taking any baseball commentary today because the season's over. Like, why would I take any commentary? It doesn't even make any sense. And so I'll see you on opening day. I think we've got the Guardians on opening day. So Sam L says, happy Friday, Doc. Time to wrap up, but I appreciate you, Harold, very much. Time to wrap up the week with some B-minus wisdom, a couple of red candles, and maybe we close unched just enough to fund that extra pre-workout scoop. Man, I don't know. Maybe the Home Depot calendar will get us enough to get a pre-workout scoop. Although the pre-workout we're taking these days is more on the expensive side. Maybe it's inflation, maybe it's whatever. I don't know. But if you really want the proper dosing of beta-alanine, you're going to pay for it. Like they're not just handing that stuff out on the street corner. Like you've got to pay the man. And so I don't know if Home Depot is going to get us there, especially in the sea of red that is the rest. That is the rest of the portfolio. It is funny though that look at if you look at let's see here. Yeah, market's up 12 now. Man, look at that. You've got the NASDAQ down 71. Wow. The market is ripping right back. It's going to be hilarious if they close it. If they close it back at 6,800, like that's going to really, really be funny if that ends up happening. So funny. And so, but I appreciate you, Samuel. Samuel says no fake NFP numbers this Friday. I guess the Open P&L Open Bros will have to fake their gains instead. Well, they may have to fake their gains, but they don't have to fake the shade that they can throw at me because it's right there. It's on the screen. It's not going anywhere. I mean, obviously, you guys know this if you've seen the show, but just in case you are brand new to the program, if you ever have something like this happen in your own portfolio, like what can you do? Like what's the best thing to do? Just do this, right? If you just kind of do that, leave the winners, of course. But if you just kind of do that, then you're good to go. You're good to go. And so, all kidding aside, the P&L Open is not nearly as relevant as some might make it out to be, because if you are managing winners, that's always going to be red. Now, it doesn't have to be as impressively red as mine is, but it's still going to be some gradient, some hue of redness, even in your own portfolio, because you're taking off all the winners early. You're not giving them a chance to build up P&L Opens. And so you're always going to be having some type of red number in the P&L Open. And so, but that's what I would do. Just get yourself a little black drawing tool and you'll be fine. So RC's in the house. What's going on there, RC? I appreciate you, my friend. Thank you so much. Let's see here. Big Deal Donuts. I need a Tom Sosnoff stress ball to squeeze. Yeah, I think we all do. I think we all absolutely do. Scramble Everything says, hello, Dr. Jim. Good to see you didn't cave into selling options for income this week to fill the new Wednesday show. No, that's going to be next Wednesday. Like, you think that this educational content is going to just create itself? Like, we've done 3 of these now, the 3 little mini series, which you're going to see this one come out on the weekend, this weekend, I think. So again, I'm counting on you guys. You got to go out there. You got to watch it in its entirety. And I don't want any of this 2X stuff. I don't want any of this 1.5X garbage, because YouTube docks me on the watch time. Like, if you watch it at 2X, I only get half the watch time. If you watch it at 1.5X, I only get 67% of the watch time. And so I need you to watch it. I need you to watch it on half an X. Right, I need you to go down to a quarter of an X. And so that would be amazing. And so obviously comment on it on YouTube and do all those kinds of things. But we've done extrinsic value. We've done theta. We've done delta now. And so where are we going to go next? We're pretty soon we're going to run out of topics. Like, pretty soon we're going to run out of things to talk about, which again, that's my fear every single day when I come on this show. I've told you guys this before, but I'm like, man, 45 minutes, what am I going to say? Like, I'm probably going to run out of things to say. And then we've just got dead air. And so thankfully it hasn't happened, not one single time in 10 years, but Monday could be the day. And so once I run out of topics on the educational front, we're going to be selling options for income. We're probably going to be shorting futures for income. Like, we're just going to do all of it, which would have worked out today if you would have, obviously stewed in the bathtub of filth all morning, which would have been quite painful indeed. But let's see. Big Deal Donuts says the green shirt. No, I didn't go with the green shirt. I do have it though. Obviously. Oh, I do have it right here. So you can see the green shirt is right here. And so, but I was going to wear it today, but it didn't feel right. Right? Because, when we were at 6,800, I'm like, all right, this is a green shirt day. But then they sell them off. I'm getting ready for the show. I had to take off the green shirt and go with kind of the dark gray, kind of laid back polo. And I was able to call in sick tonight from my public shift, because I'm like, man, this is good stuff. Not only am I not going to wear the green shirt on the show, but I don't even need to wear my Publix uniform, because we can take a night off, because the market is actually down a little bit. And so, Harold, best way to spend a Friday. Thank you, my friend. Thank you so much for being here. And all kidding aside, good luck to your Yankees the rest of the way. And by good luck, I hope they get swept by the Blue Jays. And that's all she wrote. But Sergio says, Dr. Jim, Harold's a good sport. I know that he is. Sergio says, Dr. Jim, let's go. Always good to see you. You are even popular with my oldest son. Man, how about that? Man, tell me in the chat what your oldest son's name is, because I'd like to say hi to him, but I'd like to say hi to him by his actual name. So that's amazing. Like, that's so cool. So tell him I said thank you, but let me know what his name is. I would love to know. Jared Kramer, Dr. J, wishing I YOLO'd the puts on Tesla instead of selling calls. Yeah, I mean, don't we all, my friend? I mean, that seems like, that was the move to make, in terms of just playing Tesla to the downside. I mean, look at this thing, man. I mean, Tesla is, wow. I mean, if you go to the chart for Tesla, that's a daily chart. Man, that's really something. I mean, they come out with really strong delivery numbers and, they gap up on the open and then they just stomped on them. They just completely squashed them, blown to smithereens, Tesla. And by that, I mean that it's like 7% off of all-time highs. And so it's still doing quite well for itself. But yeah, it's surprising, again, I mean, it's so hard to trade the news. It's so difficult to trade the news in the short term. I'm not even sure if you can do it in the long term, to be honest with you. Now, when I say that, I mean news like delivery numbers and things like that. I do think that, when you start thinking about like companies that generate more revenue and they earn more per share, they increase their dividends, like whatever, like those companies, you're going to see their stock price rise over time 999 times out of 1,000. Like if you zoom out far enough, and you look at like a 10-year chart or a 20-year chart, and you look at like performance of the company, like the financial health of the company, and you also like overlay that with the stock price performance, you're going to see a pretty highly positive correlation. Because, when you do zoom out like that, like that's what investors ultimately care about. Like they ultimately care about, are you selling more stuff? Are you generating more, cash and more profits for the shareholders? That's what matters in terms of the long game. But sometimes it can be years, it can be decades before that plays out. And so that's obviously not going to be the, the time window that we're going to be focused on. But it still is no less true. And so, but yeah, Jared, the Tesla move is pretty crazy. Let's see. Sam L says, look at Doc rocking that pepper-colored beard. Oh, it's salt and pepper, man. That's for sure. Wall Street's first option trader turned silver fox. Still serving B minus wisdom with A plus style is what I meant to say. So thank you there, Sam L. Yes, the video is back, and I'm very excited. It looks like we made it to nearly the end of the show. And so even if it bombs right now, man, we can wrap it up, and we made it. So that's some good stuff. Let's see. Joel James says, Dr. Jim, I'm watching with my 16-year-old daughter. I'm learning about Delta with you. Thanks for all you do. Should we manage SoFi or wait? Oh, man, Joel, I appreciate you, my friend. So please say hello to your daughter. Let me know her name, too. Hold on. Let me see. Did Sergio let me know the name of his son? Maybe not. Well, let me know next time there, Sergio. And Joel, let me know the name of your daughter, too. Like, I just think that's amazing. Like, that's so cool. Like, man, you guys are spreading the love, and this is some really, really good stuff. And so let me get back to, you said SoFi, right? Where am I at? Yeah, SoFi. Man, you guys are blowing up the chat. Like, really blowing up the chat. Wow. Hold on. Let's go to SoFi. Where is our position? If I go to SoFi, we have 25.31. Yeah, so this is still a do nothing situation for sure, right? We're above our put strike just barely. I'm going to sit tight. I'm not going to roll the call down. I like to be a bit more patient with my adjustments, and so sometimes you get burned, of course, with a rigatoni or an IWM or whatever. But still, I generally like to sit tight. Let's sit tight. We just put this trade on recently. Let's not do anything right now. Let's see if the do nothing strategy can't bail us out just a wee little bit. And so, but thank you there, Joel. Let's see, where are we at? Here we go. Wolf says, Dr. Jim or Dr. J, with the government shutdown and zero access to data, should we shift our focus to Fed member Hammock's Monday speech in Frankfurt? Have a great weekend. I'm not sure if this is serious or if there actually is a Fed member named Hammock. That's a great name. I mean, if you don't have anything else to go on, if you don't have any NFPs to get you through to the next day, if you don't have any like imaginary CPI prints to get you through to the next day, which isn't CPI supposed to be next week? Let me think. It may not be next week. It may be the following week. I don't know. But if they don't get their act together and they don't turn that money printer back on, like this is not going to be good. It's not going to be good because what are we going to do without our imaginary CPI prints? What am I going to do without my fictitious PPI print? Like, I'm not exactly sure how to proceed from this point. And so somebody's going to have to help us out. And so I hope that, they turn it back on for that reason alone. But yeah, if you've got to look at Fed member Hammock's situation on Monday coming out of Frankfurt, I think that would be totally fine. Apparently, I am getting word that it was some Fed commentary that sent the market down here this afternoon. And so is that correct? I don't know. You guys got to let me know. But Big Deal Donut says some C plus humor. Man, I appreciate you so much. And then Margin Walker asking about the lettuce. Again, nothing special there. Stefan, hey, Dr. Jim. Have a great weekend. Always appreciate your insights, man. I appreciate you, my friend. Thank you so much for being here. And man, you guys are amazing. Tiago says, happy Friday, Dr. Jim. I just left the LA show and the market is imploding. Time to put on the helmet. That's right. Oh my gosh. Did you guys hold Tom's feet to the fire? Man, I hope you guys went out there and been like, bro, like what's going on? Talk to me, Goose. Like, talk to me, man. Like, you guys, he's going to be in Charlotte. I think he's also going to be, I think there's one other show. I can't think of where it is. But LA, obviously, today. And then Charlotte's coming up as well. And then I think there's one more. And of course, we've got Detroit coming up in a couple of weeks at the Magic Stick. So I hope to see you guys there. You can register for that, tastylive.com/events. And again, I need bodies in the seats. I need heartbeats in the room. I don't even care if you know anything about options. It doesn't even matter at that point. We just need you in the room. And so I really hope that you can make it out there. Well, let's see here. Daniel Perkins. Hey, Dr. Jim. Don't take any crap from the P&L Open Bros today. CMG, baby. That's what I'm saying, Daniel. I'm keeping my eyes on the prize, my friend. If you take a look at this, you can see that. Let me grab my, this is all we're focused on right here. This is it. This is the whole game. There it is. It's Chipotle up $1.30 today. It's amazing. It's unbelievable. They laughed at us, right? They mocked us, and look at us now. Only another $8 to go. And so let's see if I go to, Ash Finn's in the house. What's going on there, Ash Finn? Dr. Jim Tom, let's go. What's up, my friend? Sam L says, Doc, I was being sarcastic about Delta Airlines and your Delta course. Oh, I get it now. We learned from the best B- humor teacher. Yes, you did. You got me, man. So that was yesterday, right? I think it was. I was so thrown off yesterday because the video dropped. I was so thrown off that I was like, man, it's one thing if the video drops, it always throws me off. And so if the video drops where it's just like a normal show where it's just like, oh, it's talking about positions, talking about the markets, having some fun, whatever, talking about trades and strategies, it's like, okay, that's fine. But it's like, man, I've got this educational stuff earmarked. It's going up on YouTube. We're trying to do some different things strategically. And then boom, video drops. I'm like, oh, this is brutal. Like, this is doubly brutal. And so I totally missed the play on Delta there. That was well done, my friend. Well done. So Big Deal Donuts, what's going on? HK back in the house. 10 Delta of pain and a few Theta of hope. Yes, that is right. That's a good way to put it. We need some T-shirts made that have that on it. That would be good. Let's see. Scramble Everything says, wow, Palantir getting crushed, down $16. Man, what does that mean? Does that mean that the government's not going to come after all of our data? That can't possibly be what it means because we all know that's going to happen. But Palantir down $12. Wow, yeah, that's pretty serious business, man. And so I don't know what the news is out on the Palantir front, but yeah, she opened at 186, a low all the way down to 170 at one point, and now it's rallied back a little bit to 174. And so yeah, not good for Palantir out there. For my Palantir bulls, they're kind of taking it on the chin apparently. Let's see, Manny TP. Oh, Manny TP again. Wow. So Manny TP, you got surprised and delighted, I hope at least. And now I've run into another question from you right here in the chat. So let me do it. It's now I lost it. Rats. There we go. Dr. Jim, what is a recommended delta to maintain as a percentage of net lick or relative to buying power used or other? Basically, lever that may be considered too risky. Okay, this is a great question. I'm really glad you actually asked this question because I meant to mention this at the end of the little the delta information today, but this is a good time to do it. So there is it's too much for me to answer right here, but there's a great resource for you. So Manny, go on the YouTube channel. You're already there, obviously. On the YouTube channel, in the playlists, you'll see the crash courses. Find the crash course that's on portfolio management. So the crash course on portfolio management, it's like a 4-episode crash course, or it might be a supercut now, where it's just like 40 or 45 minutes straight. In that crash course, at the very beginning, I walk through exactly how you should think about how much delta you should carry. In my opinion, it largely depends on, what type of leverage you want to have relative to the SPY index. And so if you're short, you can use the delta to theta ratio. I talk about that too. But if you like carrying long delta, which a lot of traders do, you can't really use the delta to theta ratio anymore because that ratio is intended to be a short delta use case because you're trying to get a feel for how much theta protection do you have against your short delta and vice versa. Like those two things are intended to work together. Long delta over theta is not really going to help you because if volatility spikes, you're going to get hurt on both. You're going to get hurt on delta and you're going to get hurt on your theta because of your undefined risk exposure. And so if you have long delta, I give you a completely different way to figure out how much delta you should carry. And so I would take a look at that, and it's right there on the YouTube channel. But guys, I got to run. I'm out of time. I can't believe it. We made it to the end of the show. I'm so excited about that with the video. But guys, if I can help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler, and I got Errol Coleman in the house. Special guest today on Friday. What's up, E-Money?
Jamal, what's going on, brother? Another week, another government shutdown. What's going on?
Not a whole lot, man. Not a whole lot. How was your week?
It was a good week. A lot of learning, I would say, this week. So 5-6 years ago, I learned a lot about interest rates because of inflation and all that. Now I'm learning a ton more of government shutdowns, how that might affect NFP, all these kind of things. So it's been a great week. It's been fun. Other than that, actually, I take all that back. We're at all-time highs. I'm not happy. So other than that, how you been? How's the week for you?
It was good, man. I mean, look, I'd be remiss in saying, and again, just on a personal front, it's been awesome, man. Like, obviously we've had a lot of changes in the content, and the network, and the people and the pairings, and I mean, I hit the luck of the draw. I'm with Mr. Whiteboard himself, Mikey B. We're holding down option trading concepts live, and it's been good, man. It's been a really good week, just kind of rolling with that, and otherwise, personally too, let's see. Well, I mean, I was at the Cubs game yesterday. That was dope. Posted
They took
pictures
a
and
dub.
stuff. They took a
And Ryan
dub. A
was
big
telling me
dub,
that, yeah.
baby. Listen, you still got time. You know what I mean? I know you from Colorado initially, but I mean, you still got time, man. You could be a Cubs fan. Nobody would even look at you funny.
Hey,
you know?
I'm still a Rockies fan, but last time I was a Rockies fan, like Matt Holliday was still the top
Exactly.
player. That was like 15 years ago.
I'm giving you an out, bro. You still got
You
time.
can't give
It's
me an
not
out
too
with
late.
other Rockies fans watching me accepting this bargain live.
It's fine. It's fine. There's no Rockies fans. Why? I don't even know any other Rockies fans besides you. I mean, seriously, like
I'm watching. No, I'm definitely still gonna get that. I want to check it out. It was the first game of the series, right?
It was what, the other day?
Yeah, it's a series, right? It's a playoff 7-game series.
This is a massive fail by you, Errol, but I'll let it go because again, you're not a Cubs fan yet. This was game 3
Oh, it was
of
game
the
3.
wild card, series, and so it was basically a clinching game yesterday.
Ooh.
It was 1-1, and so the Cubs had to win it, and they handled business. It was dope. My boy hooked me up with some great seats, so he was there too. It was dope, man. It was like 20 rows up. I was like right behind home plate. It was awesome. Yeah, it was awesome.
Okay, I'm gonna check out the next game. So.
Yeah, you definitely should.
I will.
Saturday
tune in
against the Brewers. They play. We will be monitoring all games. We will be reporting and talking about all games here on Engineering to Trade and other shows that I'm on. I'm sure.
Wherever you find Jamal, you're gonna get an update.
Yes, exactly. Wherever you find Jamal, you're gonna get an update. But it was cool, man. And then as far as trading, I mean, I definitely put on a bunch of different things this week. We can go to the platform. Errol and I are going to sit here and just chop it up about different things we've done throughout the week. And then, guys, how about this? The last 10 minutes of the show, why don't you just, throw in some questions in the chat, or you can throw them in whenever now, and we'll get to them within the last 10 minutes of the show. How about that? But looking at SPX first, it is a trip because earlier late last week, we were all talking about the impending government shutdown. Personally, I never thought that it would affect the market, and it really didn't. And the only real effect that it has is, like you mentioned at the top of the show, withholding data, right? And so non-farm payroll, I mean, you can't ignore how big that was for a Friday like today. I mean, obviously, we've been moving about 1.6% on average in one direction or the other for non-farm payroll. And coming into this week, it was pricing like a 66-point move, which essentially is a 1% move. So it was underpricing anyway. And it looks like that was even overpricing what eventually happened here. I mean, with an hour to go, we've only moved about 45 points in a total range on the S&P 500 this week. So yeah, definitely under. But tell you what, it's right in line with what we've seen recently. 38 points. Sorry, I'm tripping. This is not the week. So 45 points today, I should say. I'll talk about the week in a second, but just look at some of these moves on each day recently. 38 points. 62 points, so almost 1%. Just looking at ranges here, 50-point range, 32-point range, 44-point range. So when everybody's talking about, oh man, VIX is low, this is what you're seeing. We're not necessarily, VIX right now is a 16. That's pricing 1% moves in either direction each day. Mm-hmm. We're not even getting 1% moves overall. I mean, you look at 50 points to 53 points. So all of these are under 66 points. And that kind of speaks to how kind of quiet the moves have been on the index front, but not with individual names.
You have anything going on in the indexes? I know, for example, us ripping to all-time highs, I've been having to keep a close eye on like my QQQ, my SPY. I don't know if you are fond of any of those indices like the Russell or anything like that.
I haven't in the past. I actually don't right now. And yeah, I was totally wrong. Like on the week, we moved 109 points. So that totally outpaced the weekly move. 130 points last week, 120 the week before. So that kind of gives you an idea of the weekly moves. I have nothing on in any of those big ones you mentioned, whether it's SPX or ES or NQ. I got nothing. Most of, if not all of my exposure right about now is individual names. I will say I did just put on a SPY trade, first time in a while. I needed some short delta. It was actually we were talking about this on Options Trading Concepts Live. I think somebody was asking a question, and somehow or another, before you knew it, we had talked ourselves into a trade. Mikey did a diagonal trade in QQQ. I decided to do it in SPY since I feel like a lot of the names I have are following S&P 500. So I did the 670, 650 diagonal. I'm long the 670 put in December, and I am short the 650 put in November. So I decided to do that diagonal, get a little short delta.
Yeah, you got some time on that.
Yeah, definitely. I mean, I got some time on it, and I really needed some short delta overall. I added, I almost got to flip this thing by days. I added a bunch of positions in the last
we see that
couple of days. Yeah, I know. Just looking at this. Yeah, some of them are ads, some of them are flips, but
yeah,
like Oracle, I've had this strangle on for a minute. That I think that was an adjustment essentially. DraftKings, I just put on. Yeah, I just put that on short put. I just put that on earlier this week. There was, I don't know if you saw it, but like there's basically, it was moving down pretty big a couple of days ago on the news of prediction markets, and that might be taken away from their revenue. So
okay, they're taking a hit.
They took a hit.
You're not touching gold with a 10-foot pole, or what's going on over there in the metals?
Yeah, I don't have any gold or silver on right now. I've had them on in the past. I was last in, probably the 22nd, I think was the last time I was in. Let's see here. I didn't have anything in GC. I'm pretty sure.
We got a question on gold for you, Jamal.
Oh, cool.
So James said, "Happy Friday, guys. Is now a short call spread in gold worth it? Thoughts? How about the Dodgers versus Phillies? Who do you like?" So he added a little Philly in there too.
This is now the time. I don't know, man. You want to go first?
So
first of all, do you have anything on in gold right now? Gold and silver?
I don't. This is a conclusion that I came to. I feel like I missed the boat, and you can get long. I don't like the risks rewarded. I don't believe it's too favorable. So you can size down. That's kind of the boat I'm in. Same thing as like NASDAQ. I felt like I missed the boat, so instead of chasing, I wanted to sit on my hands a little bit, wait for the opportunity rather than chasing the move or potentially catching a falling knife either. So that's the boat I've been in. It's been a tough one.
Very smart, man. And I feel like because we just touched on this last week. Remember, I think we were talking about silver, and I know you were kind of struggling as to what you wanted to do with it. And I already made my decision as far as like I don't want to do anything. I've played it at other times, both of them throughout the year, gold and silver, particularly gold. I played in both directions, but I mostly played it long. And I tried a couple of times to short it. I don't remember when, but let's just say, whether it was March, whether it was April. And then finally I was like, you know what? And then I said, I'm not going to touch it. I really didn't touch it in here. And then when it made this other big breakout, I was like, okay, now I'm back in, and I got long. And I did that a couple of times, but I'm good here. Like I just don't feel the need. To the question, do I want to short it? I'm not going to tell you what to do, but I just don't feel the need to try and short right now. Personally, I would rather short once I see a little bit more weakness, once I see kind of like maybe a breakdown below this blue line here, which is the 2-week moving average. If I see a breakdown below that, but as you can see, gold is largely ridden this 1-week moving average, the green line up here up top. Just look at it. It's just like boom, it's riding, boom, boom, boom. Every time it may pull back and then jumps, pull back and then jumps. And so that's just really strong price action, which again, I'm just not trying to call tops. Calling tops is really hard, especially in something that's just got a real strong bullishness to it. So nothing for me right now. And as far as Dodgers Phillies, I got to say Dodgers because my dad is a Dodgers fan.
Who won the series last year?
They played last year?
No. Who won the MLB last year? You got to give me a break. Everybody else, please bear with me. It was the Dodgers, right? Okay, that's what I thought.
Yeah.
But no, I think you couldn't have said it better, Jamal. It's very difficult to call tops. I mean, can you call it? Could you sell the call spread now and you top take it? You could absolutely, but it is difficult. It's difficult to know where the high is going to be. So.
Yeah, and so for that reason, I'm choosing to stay away for the time being. If there's a sign of weakness at some point, like a sustained sign of weakness, maybe it's a little bit more interesting. But yeah, just
do you have a no short list? I guess gold and Nvidia, according to Jared, is going on the no short list. I know Tesla's on that for a lot of people. Does Jamal have a short list or no?
I really don't, but I have a.
I got
it's
one.
It's more of like a list that I like to get long, I would say. I don't necessarily have a short list. Tesla's on my list of time like play things I like to get long. Like that's definitely one of them. I mean, because when it goes, it really goes. You know what I mean? Like
it does. When it flies, that thing flies.
Yeah, this is a couple of days of weakness, though. I wonder if it's going to test this lower bound here of the breakout. What was that? 410? Oh shoot. Oh, 402. So yeah, I'm a little hesitant to try and get long right now into this weakness. And again, this is what I'm talking about. Like if I saw this in gold, then I'd probably would try to get short. If I saw this 2 days of weakness and this really strong and look, it's breaking some support levels here, I think that's where you really kind of, not that I want to do this with Tesla, but if this how the gold chart looked, I would attempt a small call spread here just to see how it would play out.
Tesla is one of those. If we get a pop in Tesla, personally, I'm selling an out of the money call spread. I'm pretty bearish. I just don't want to chase into the hole, but that kind of, I want to get some delta there in Tesla.
What else did I do this week? Let's see. I did play Nike earnings. I played those to the upsides.
UNH
work.
Notable
UNH
today for the day at least.
Yeah. UNH has been real nice. It's this was actually a YouTube recommended trade. Somebody came up with the idea, and I was like, I kind of like the idea. So doing the Jade Lizard, I think I collected like 11. So I mean, obviously sold the 320 put. I sold this 410 call spread. And I'm pretty sure I collected like $11. So I mean, it's riskless on the upside, if you will.
Yeah, and it might have some room to run. I know you got Warren Buffett backing behind it, so.
Yeah, for sure. I mean, it's been strong. But look at these other names in the space, man. Look at Humana today. Humana making a big move with some kind of news on Medicare or whatever. I don't care about the news. I just care about the move. The CI, Cigna Group, another big one. So this whole space has been on the move today for sure. Humana's kind of the laggard with regard to the way the rest of these names are moving.
86 IV rank. It's up there.
Yeah, no touchy for me. No touchy. Yeah, you mentioned IV ranks, and you mentioned that one, and like earnings are starting to come up. Not really yet. I think they don't really kick off until JP Morgan, which is almost 2 weeks. Yeah, the 14th. You got any early earnings plays or anything like that you paying attention to, or what?
Nah, not too much. If anything's earnings kind of been in the way. Yeah, they've been a little bit of a nuisance trying to get on some new positions, but I am looking forward to the next earnings season.
Yeah, agree. I mean, like I've had several things that I like closed. Like Oklo was one that, even though the vol was fairly high, and I usually don't like to sell earnings months, but the vol was really high in here, even above and beyond earnings. And so I was short this for a while, but this week I think it finally settled in. And so I just closed like at least 2 or 3 strangles because they were in the nose cycle. And I think whatever little, because obviously this thing had a huge pop. And so a lot of the vol in here wasn't just earnings related. Same thing with like Baba and Baidu. These things had really run like in a major way. And so even though it was November, you were able to still sell earnings and make some money off of it for at least like maybe a week or so. And then finally it settled in. Now I think it's just like earnings vol, and you don't want to be short. I don't like to be short things with earnings along the way. I'd rather just short them after or without any earnings. Although that hasn't necessarily worked as much in this Oracle, no earnings, but this thing has still kind of been bid. I think I'm making a little bit of money today, but IV in this has been elevated, man, 50s and 60s. It's just been kind of sitting there. And so is Accenture is another one I'm still short, strangling, still been sitting kind of elevated, no earnings. So I'm just going to hold on to these. I'm not really making money the way I want in those 2 names right now, but I'm still holding on to them.
When did you get on that Oracle position? It's looking like it's sitting right in between those strikes. Did you adjust them? Or you just
I adjusted for sure.
Okay.
No, I adjusted. I initially had like, I'm sure we can pull up my log here. I mean, I initially had, what did I have? Oh, see, no, we don't need to go back for. Let's go. I think I've had this on total 2 weeks, maybe. Yeah, I had the 260, 370 at one point, and probably should have just stayed in that arrow, honestly. You know what I mean? Sometimes you just like maybe do a little bit too much.
Right.
And so stock moved, and I think I adjusted on both sides a little bit. And, overall, I probably should have just stayed in the 260, 370, and I would have probably just been fine.
No, I got you. Got a lot of time on those contracts too, almost 2 months.
Yeah. Now I'm like probably a little too close, right? Like this is a 30 delta. This is a 19 delta. Yeah, I don't know. It's probably but now I'm just in it. So now I'm just hoping it doesn't move around as much over the next week or so, maybe, especially as we're getting to that 45-day cycle, and maybe we can get this actually coming in a little bit more without moving too much. Maybe this IV gets down to the 30s if I'm lucky, and stock still is generally in this vicinity. That would be awesome.
It would be. Again, 49 days till expiration. We got time.
Yeah, true. Oil. I really haven't done much with oil in several months, but I decided to buy an oil contract the other day when oil hit 60, 80.
That's the only underlying on my no trade list, actually. Or my no short list, my no short. I don't short oil anymore. Yeah.
Why is that?
Wild
bad
guess.
story?
Nah, not even a bad story. I think it has to do with just being more new, to this type of market. So look, my very first trade, I remember being down 25 cents on one of my accounts on my phone, and my heart was pounding, right? So I think it just happened to be like it was one of those newer trades, so it felt very emotionally exhausting and very emotionally taxing because of how volatile oil was. So I think that's all it was. One of my first experiences trading one of these products, and managing the risk was difficult.
I get that.
So I'm like, it got hot in the kitchen real quick. Had to take a step out. Haven't been back yet.
Somebody's asked me a question about the Tesla and the Netflix calendar calls that I put on this week. The chunky calendar calls, as he called them. So what's my thinking? My thinking is, and more than just a bounce back in Tesla, my thinking is it's kind of, as the stock is pulled back here, I figured it was a way to get a little bit of Tesla alpha on and see if it does bounce back, and using the calendar call is the easier way to do it instead of trying to sell a put or a put spread. Even the put spread, the vol is not crazy high, so I wasn't interested in selling the put spread. And again, the way that this name moves around, it gives me kind of some feeling that maybe it bounces back again and drop back to that. It dropped just below that 420 level, which is always kind of interesting in Tesla, it would seem. So yeah, I'm just trying to play, again, I want to do it by getting long, and I'm doing it by basically getting longer earnings month where this fall still stay bid to some degree. And I'm doing it further upside. So if it does continue to move the way it has been, I wouldn't I'd be surprised if I even get beat up on these short upside calls. So yeah, that's my thinking. And the same thing with Netflix. It's kind of a very early earnings play, but the stock is down, right? Like the stock has been down in the dumps a little bit more recently. So I just figured it was a nice way to try and get long. I was able to only really get one in here. Again, these, he called them aptly. Chunky calls, like chunky call spreads, calendar call spreads, I should say. The literally one is $1,000. So I'm not trying to get too carried away. I just put on the one for now. And it's also another way of just kind of keeping a marker on and keeping an eye on the price day to day. So that's my thought.
No, I like it. Sorry, quick question. And natural gas, what's going on over there?
Nat gas?
Yeah.
Oh, dude, this is probably the trade of the week for me.
Okay.
I don't always do well trading natural gas, Earl, like many of us. And it just so happened I saw the bounce this week. I saw the IV. I was feeling pretty good about a lot of the trades I put on this week, and I saw this IV was like 40 and change. And I looked, and much to my surprise, I feel like other times when I try to put on Strangle in that gas, it's crazy expensive. But this one was not. And I was actually surprised. And yeah, I ended up putting on the 510 320 Strangle and Nat Gas. And now when you look at Nat Gas, let's look at the chart here. Let's look at the Z contract /NG, because that's what we're in, Z5. I just told you I have the 510 right here, 320 ain't even on the map, Strangle. Yeah, I'll take that. That'll work.
Right.
But what I did not expect is for it to come in so fast, man. That thing came in. This is literally from yesterday. I put this on like yesterday. I don't know, like 11 a.m. Central Time or something like that. And yeah, it's just coming pretty fast.
Yeah, I was like, what's that position doing so well in the middle of the port? He's not going over. I'm like, what do we got going on in that and natural gas? Let us know.
Yeah, that one's been really nice. Yeah, don't talk about it too much. I might hear you. Yeah, that one's worked out pretty nice.
Yeah.
Any other questions, guys? Hey guys, had to step away. Did the Senate complete their vote? I'm not sure. I don't think so. I don't know. I haven't noticed anything. You heard anything about Senate votes?
We talked about it a little bit on air a little bit ago, but nothing after that.
Yeah. Oh, Mike, my brother from another mother. What's up, man? How you doing, man? He's giving you some props too.
Mike. I see you. Yep. What's going on, Mike? Miss that one.
Yep. Yep.
You know what's funny? So on one of my TikToks a couple weeks ago, Jamal, I meant to bring it up. It was one of those Fridays. I was gonna hop on here with you on one of those Fridays, and someone commented, he goes, "Yo, bro, I dude from Tasty Trade, I love ETT. I love engineering the trade." Someone commented that on my TikTok videos, like, "Yo, dude from engineering the trade," and I'm like, huh, "Wrong, brother." But appreciate it. Wrong, brother. That's why I died laughing. I thought that was hilarious.
I mean, but you are on engineering the trade. Maybe that's what
True,
you're talking about.
but he said I love your show. I said,
oh, he does.
That's my boy Jamal right there. That's his show. But I had to relay the message.
We got the same hairstyle. Maybe he thought. No, I'm just
We're
kidding.
going to within the next decade. I mean, you, and my dad, carbon copies. I'm not gonna lie.
Well, whoever that guy is, thanks for watching the show, bruh. Appreciate you, man. Young Errol does look a little bit different than me. You gotta recognize the difference. I gotta tell you. Yeah, man. So I don't know. What do you think about the next week? What do you think here? What you thinking?
To be honest, I don't know. I'm curious to see how the market's gonna digest everything. No NFP Friday, government shutdown. I mean, for any traders like myself that I consider us a new age trader, has been trading within the last 5-6 years, and this is new. So it's exciting to see how the market will digest it.
It is. Like I just said earlier, talked about different moves, weekly moves. It almost feels like, I mean, I'm not paying $7,000 for an SPX straddle, but it seems like you could easily buy it and make money given, like I said, the weekly moves we've been seeing. I mean, they've been in the hundreds. And so it's been interesting to watch the market continue to drift higher. Market has been really strong here. And look, I love this action. I love everything that we're seeing about this market. I wish it could last forever. Market's continually drifting higher. You still have some actual vol plays. Just think about this. VIX is a 16, but you're able to still find a couple of things to sell. You're able to make money, probably getting long gamma, maybe buying options because things are moving just that much. You're able to realize it. And you got commodities that are making moves as well. And they have some volatility if you want to trade that way too. You got Bitcoin and Bitcoin ETFs. That you can either trade for directional or you can trade for vol. That ETHA and IBIT both have some decent vol to them. Like I just named off a whole gang of things. I didn't even get into single stocks yet.
Right.
It's a crazy market, and a crazy in a good way.
Yeah.
I think.
I'm looking forward to it.
I think it's pretty dope, man. So, but yeah, for me, I just, I don't know. I think without any resolution, resolution as in like to the government shutdown, I think we kind of get a similar market. If for some reason we do, I guess they got to figure out when they're going to drop that NFP number. And obviously we should move on that. We typically have. So that could be wild. But other than that, I mean, I think I'm done adding positions. I just got to start sort of risk managing and eventually like figure out how I can close a few things here and there.
Yeah. I mean, maybe that natural gas soon because maybe that keeps paying over the weekend.
Oh, trust me. I know. I thought about maybe closing it heading into the weekend. Sometimes you think about that when you make money on something so fast. But, dude, when I think about my strikes, again, I got the 320, 510.
Yeah, I mean, now you're in a better position. You just got it on, so.
I feel like I'm in good shape, so I don't feel you touch that at all. What's up with you, man? Plans for the weekend?
No plans. I think I'm watching the Cubs game this Saturday. I don't know if you're going to tune into that, but I got that on the radar.
Most definitely.
What about you? You guys got anything going on?
My kids got a football game.
Okay.
On Sunday, but that's pretty much the only plan. Other than that, lounging.
Okay.
Lounging.
Family healthy? Family good?
Yeah, everybody's good, man. Everybody's good. Everybody's good. No complaints. You?
Good. No, everybody's good too. I was thinking about that the other day. Can't complain. Good week.
Yeah, lounging, man. We'll see what happens in this football game with my kid. They've been double, triple, teaming.
I heard you say that the other day.
He's been beasting kids though. I mean, they, this one kid just started tackling his legs last week. He was like, I'm tired of this shit. He just started tackling his legs. Seriously, he started tackling his legs. And then another dude was like kind of engaging on top. They was low bridging. We had to say something to them, but yeah, man.
I mean,
I told him take it as signs of respect.
You were taught to go for the legs, especially a guy bigger than you. You can't tackle him up top. He's gonna run you over. It's like can't get his legs either. What can you do? He's a beast. Apparently.
I know, but you don't usually see it off the line, Arrow. Like literally, he's playing line, and as soon as they come up to engage, the dude goes and tackles his legs.
Yo, let us know. You got to give us an update on the game next week.
Most definitely, I will. Thanks for joining the show, man. Appreciate you, man.
Always.
Always great to see you. Folks, thanks for watching the show. And as always, be smart, be patient, trade them small, and trade them often. Have a great weekend. Peace. Go Cubs.
Let's go Rockies. Let's get it.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hey everybody, Tim Knight, and we're going to wrap the first week of me being on this new platform, and I think it's gotten a little better every day, kind of getting the hang of things. We've got a little bit of a green day, a green ES, green RTY, green YM, but almost all my shorts are down, which is pretty cool. It's a good day. I've also been having fun with the new OpenAI product, Sora, making a couple of fun little videos, just learning my way around that. If you follow me on x.com, I've posted a couple there just for fun. Slope of Hope is my handle on X, if you want to check them out. So let's look at some charts together as we wrap this data-free week up and our government-free week. Past 7 days have been more or less just up, uppity, up. Today, we've got a lifetime high intraday on the IYM, that is the small caps, and probably a lifetime high close. And we're still cleanly above this ascending trend line, which has been in place since the April 7 bottom. So it all looks perfectly bullish. It's going to take a failure of this line to give the bears even a wisp of hope. Speaking of, I actually we have a new property, a vacation property up in the mountains, and for the first time ever, because I've got security cameras all over the thing, a bear came wandering around the backyard. I thought, this is a sign. Coolest thing, beautiful bear too. We'll see if the universe is speaking to us or not, but I thought that was a real kick. I think I put that on X too. So another reason for you to go check out my account, because I put the video up of the bear roaming around the backyard. So yeah, that's the small caps. As far as the spider goes, we have same deal, kind of 7 up days, but we've been below that broken trend line ever since last Wednesday. We're below the wedge, and by any sane measure, this is the most overvalued market in history, and it hasn't mattered one bit. It just keeps going higher. We'll see, right? But this was the huge base down here that was established and finished back in early 2024, when exploding higher, pretty much uninterrupted, until February of this year. We had our all too brief crunch lower, and then it's just been an explosive move higher ever since. And there's the wedge therein and the break below that wedge. So pretty spiffy stuff from a charting perspective. Here's the diamonds. Same wedge, same phenomenon. Check it out. That used to be support, now it's resistance, and today's high touched the underbelly of that trend line. So from a charting perspective, it's really interesting stuff cooking. NVIDIA is actually down a little bit. And that's a big deal because it's the largest company on the planet. It's the largest company in history. It is the bedrock upon which this entire bull market rests. Break NVIDIA, then you break the SMH, then you break the cubes, and you break everything. But so far, it's near lifetime highs. It's still a $4.5 trillion plus company. But amazingly, I thought it was illegal. It actually is down today, almost 1%. In turn, SMH is also off a little bit. Here again, it's basically just kind of hanging out where it was all day yesterday. So there's no kind of sea change or anything like that. But for myself, I shorted the cubes in pretty good size early today, and that's my biggest position. It's a profitable position. We'll see how long it lasts. The lifetime high on this, on the cubes themselves, I think, we're splitting hairs at this point, but I think was, today, actually. Today was a little bit higher than yesterday. We're starting to cause a little damage to this ascending trend line. This is the same April 7 trend line. So, you can see here, it's not clean anymore. Beneath. Sometimes it's above, sometimes it's below. This is not a physical object. This is a mental construct, but it's one of the fundamental tools we use, and it is showing some tendency to break below that line. One sector whose success I am stunned by, because as far as I know, it has no revenue, certainly no profits, very little in the way of products, but it's quantum computing, which is, the concept has been around for decades, I think. It's just like, cold fusion energy, just something that is typically the stuff of science fiction. There are a handful of companies involved in quantum, and they've been doing well, and then today they're just doing even weller. Here's QUBT. This is vaulting higher by almost 25% today alone. You've got a nice little base right here. It's been struggling a little bit, but today it just shot up to a lifetime high. And you can see that over the course of its history, and this deserves another square, or rectangle down here, I would say. We've had some consolidation periods here and here, and then most recently here, where it hammered out a base, went blasting higher. Hammered out a base, I don't know if blasting is quite the right word here, but it did ascend nicely, and then we're doing it again. So on the whole, this has been quite strong. Not quite at lifetime highs, just eyeballing this, but it's a very good day for Qubit. Rigetti RGTI also having a very good day. It's up about 13.5%. Here too, very technically friendly chart. We've got this really nice right triangle pattern that we cut above back, about a month ago. And it's been pushing higher ever since. For a while, this was just a wretched IPO. They had the misfortune of coming public during a very, very weak market. And it basically fell constantly and crumbled down into literally a penny stock. And recovered, did the same stunt here, but then off to the races. And so this whole sector's been just thriving. So there's RGTI, and there's others. There's like QBTS and so forth. I didn't want the whole show to be about quantum. Roblox, RBLX, is weakening. The lifetime high here was like so. We had a go at it here, but that pooped out about a week ago, and this is starting to weaken. I've tried shorting this a few times. It's never worked out, so I've just stopped messing with it. But it's still something I watch, and it's getting a little raspy up here. The unfettered blast higher is definitely stopped. And the same holds true for Palantir. This was the lifetime high. Yesterday was getting close to a breakout, and then just today it lost like a week's worth of gains within a very short amount of time. It's still in its uptrend. That April 7th uptrend is still intact. It's still bullishly configured over the long term. But today, specifically, not doing so well. What else is going on? Oh, well, Tesla, you may know yesterday that a lot of the EV companies came out with their delivery numbers, and Tesla shot up strongly, had a very strong open, and basically fell all day long. And today it's augmenting those losses down again, almost $8. Nothing too dramatic here, but again, a week or two's worth of gains have been just sort of erased. Over the very long haul, you can see we got rather close to a lifetime high with that strong open yesterday, but it didn't quite happen. And it's a great stock long term, very richly valued. I think I saw the PE on this, I think is still in the triple digits, like 230 or something like that. But it's like the biggest of the meme stocks, a lot of psychology and emotions around this. Over in China, some weakness there, down about 0.75%. And here too, I've drawn a Fibonacci, which has done a pretty decent job of showing major support and resistance areas. I mentioned in passing yesterday that I had shorted Alibaba, which wasn't bad timing so far, because yesterday was a multi-year high on this, and we flipped a little lower. Nothing dramatic, down about 0.4%, but at least it's going in the right direction as it butted up against that purple line I've drawn, which I see as an important resistance below all this overhead supply. It's another good day for gold. It looks like a lifetime high close is coming up. This is GLD. On gold itself, we're at about $45 on the front month. GLD is up nearly 1%. It has had, the past 2 years have been just a sensation. And it's had, I mean, it's been in a broad uptrend for many years, actually. It's hard to believe that in the Bill Clinton years, gold was a couple $100 an ounce, borderline free. But this has been a tremendous run higher. And it's a little nerve-wracking to try to get in front of this race car, so I tend not to bother. Long-term gold bull, continue to be so. It seems almost inevitable. Next week will be 4,000 plus an ounce, which, is humans love big round numbers, and that will get a lot of press, a lot of excitement and attention as more and more people pay attention to gold. Silver is doing even better, percentage-wise, 2.6% on the day. It's had just a dynamite time, and as I explained yesterday, it had a clean, bullish consolidation. This sort of like can't make up its mind period for some months, and then finally blasting off to the races. So $50 an ounce seems to be the forthcoming level on that one. So silver just setting the world on fire. The miners are barely up. The lifetime high on those yesterday, intraday, still remains. We've spent really the past 3 days just kind of hanging out at roughly the same area. So this seems very tired. It helps that the precious metals are up, but it doesn't seem enough to inspire miners to be any higher. But I got lucky twice on dust. Once yesterday and once a couple of weeks ago. I'm not doing anything else with that. Lucked out a couple of times there. And I will say palladium is a quandary for me. Judged on its own, all by itself, it's a fantastic buy. It is beautiful. A fantastic bullish setup. I can't be more emphatic. If you remove blinders and notice that, it's a precious metal and gold and silver sky high, and what if they have a retracement over a month or two? Will that help palladium? I guess not. So it's a little bit unnerving because palladium is a bit of a trickster, especially being so thinly traded. But I'll just say again, all by itself, You put your blinders on, it is a dynamite looking buy. I just don't know if it'll be immune to the vicissitudes of PM in general. Oh boy, almost out of time here. What else? What's important? Let's just bang on a few more existing short positions before we say goodbye. Meta continues to do well. We've got a big old bearish engulfing pattern on that one, down today about almost 2%. This is one of my larger short positions, and hanging on, is looking good. Netflix also remains short, off over $10 today. And this is in the context of a very strong NASDAQ market. So it's encouraging that these leaders are weak even in that context. And I see I'm out of time, so I think I'd better say goodbye. So I appreciate you swinging by. You have a good weekend, and I'll be back here on Monday, unless the Bears get me. So I'll see you. Bye-bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He was my friend first, clearly. Met at work?
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it, say it.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, my friend, we are back for the closing bell here, and we've got E-mini S&P 500 futures only up 4 here. We've had a choppy day. We got as high as 6,800 on the dot. It was kind of the high of the session, and they sold off from there. The low being 67.54, which was traded in the pre-market. We didn't really see that low for much in the normal trading session here. NASDAQ actually down on the day. What is this? It's got to be the first time ever. It's down about 100. The Dow up 285, and the Russell actually bucking the trend here, up 20. It's the strongest of the group. Oil catching a little bit of a bid. It's up 36 cents to 60.84. I got into the 61 handle for a brief moment earlier today. Volatility futures have remained sticky here. 1770 on the vol futures, down 10 cents here, a little under, or a little over 0.5%. The VIX itself at 1647. Bonds down 12 ticks. They're below that 117 handle we were at yesterday. Gold and silver continue to just skyrocket. Gold's up $45. Silver up $1.71. A massive move in silver, just about 3.75%. And then Bitcoin has reached new all-time highs today. Futures got into the 125 handle. They were 125 basically on the dot. Spot got into the 123.9, which was a new high for Bitcoin.
Yeah, IBIT exceeding 70 for the first time. Love to see it. But there's a lot of things moving under the hood. Yeah, NASDAQ is down relative to the rest of the market. If you look at the NASDAQ 100 watch list, you have a lot of household names down pretty big. AMD, Palantir, AMAT, Tesla, Meta, Amazon, Adobe, all down over 1%. So on the flip side, you've got healthcare stocks continuing to rip. XLV is just mooning. It's supposed to be an ETF, mooning like a meme stock. But Humira, HUM, huge move today. Cigna Group, huge move today. UNH was up 10 earlier. It's up 6 now. So you're seeing a pretty big shift in liquidity into these healthcare names, which is very interesting to see.
Yeah, it's been a choppy market. You also got a lot of the further out on the risk curve stocks going to highs here, like some of the quantum computing stocks. I was looking at some of the like aviation stocks, like this Archer, which I know some people trade, like Rocket Labs as well. Has hit a new high here, up $4 and change. So just some big moves across the board in some of these names. I know, like, Akla was up, $3 or $4. It's now down a little bit. SMR was one that we've traded a couple times. It's kind of going nuts. CCJ, another one that, was higher today. BE is one that has just continued to be a thorn in my side. HIMS to the downside here, down $4 and change. Been a very, very choppy market. I feel like, when you look at the E-minis today on what has been a pretty active day from a range perspective, we've traded just over 1 million contracts. It feels like the indices and the ETFs as a whole aren't as engaging as some of these high-flying names, and so it seems like everybody's just YOLOing in the stuff that's moving rather than mess around with the indices here. That's at least kind of the feeling I've had for most of the last couple trading days.
Yeah, I mean, E-minis, NASDAQ, not too much of an implied move for next week or even the week after. Next week's expected move in SPX, 71 points. That's down even like 5 points from just a couple of hours ago. But the one-day iron condors that I've been placing have been nice. I closed the one from yesterday leading into today. I had the 67.50 strike that was like 1 point away, and then we sold off from the afternoon. That was a $100 winner. I just put a new one on for Monday, the 6,700, 6,750 shorts. So literally the same setup I did for today. Defined risk 5 points wide. I collected actually more this time because the weekend risk is pricing in more premium. So I picked up 215 for that one. It's actually come in 20 cents already. But yeah, these have been nice trades in this kind of dull environment where the E-minis aren't really moving too much.
Yeah, I mean, it's worked. You're now on a 4-day run, so you're past our stats here. That's good that you've exceeded that. Were you guys pretty active today trading? You put anything new on today?
Yeah. So I took off that silver short put spread that we put on with Thomas. That was a $165 winner.
That was as good as it gets.
I mean, yeah.
That was the bottom.
Yeah.
That was like the day of the bottom.
UNH, I had a calendar spread at 400, and into this rip, I bought back the 400 strike in October, and I sold the 420 out in the 28-day, which is in the earnings cycle. So I picked up $1.80 while moving it up 20 points. So I now have a 20-point wide diagonal spread on for $3.90, which I feel really good about. Especially if we continue to rally in UNH pre-earnings, I'll just take it off and then see if I can put on something small for earnings, but would love to get out of this pre-earnings. It's a nice winner already, but I think I'm going to press on the gas here, given the way the market's been behaving. Put on a downside put diagonal in the Qs. So just a general portfolio hedge. Went far out in time to December, bought the 600 put, sold the 580 in November against it for $9. So thinking here is this will be a nice hedge if we do get a downside move, but if we don't, it's a 20-point wide diagonal that I paid $9 for. So if we keep rallying higher, I can just buy back the 580, roll it up to the 590, reduce basis by like 150, 200 bucks, and call it a day. But if we do get a sizable sell-off, it will be a nice portfolio hedge to the downside. Close that winner in SPX, put on a new one, same exact setup. The 6,700, 6,750 shorts for the 3-day cycle, and then I defined risk 5 points wide, picked up 215, and I sold a put in SMR for $545 for the 40 strike put in November.
Ooh.
So
you went right at the money.
Yeah, big premium there. I'm just playing for a reversal back to highs, and if we can get that pre-earnings, I'm in the earnings cycle since I sold in November, which is why I did not add a short call leg. I just wanted to keep my direction here. So if we do get a rally, I can close this prior to earnings for 50% profit without the vol crush. So yeah, that's what I did today.
I kind of like that. Yeah, for me, I've been cleaning up a couple positions. Like I scratched out of this Airbnb trade. I had an ETH call diagonal that I closed out of. That was another nice one. I put on a new position in BE, so stepping back in front of that train with a call ratio spread. I closed out of a UPS position. We bought the dip on that one. That was a nice little trade. But other than that, I've been pretty light today. Just given the market here.
Yeah, I mean, like we always say, when the indices aren't moving, you can always find opportunities with the single name stocks. But at the same time, I'm more prone to just like getting out of something, getting into something else, not really adding on a ton of risk here. because I want to have cash on the sidelines in case there is a big move. But yeah, kind of just rotating in and out of stuff, adjusting positions. I got long micro crude yesterday at 60, 60, 70 or something like that. Let's see. 60.79. So working a little bit today, but loving the buy the dip around 60, and we've had a big sell off towards that level. So happy to get in there, take some risk. But yeah, it's kind of wait and see what happens over the weekend into Monday, and then 2 weeks from now we'll be back with the earnings season. Banks kick it off October 14th and 15th. So we've got 2 weeks before the banks release, and then the week after and the week after that, that's when all the big name tech stocks will do the same.
Yeah, next week, the two that have been on my list are Delta Airlines and Pepsi. Those are the two that are kind of tend to start the earnings season other than Nike. So after those two, the following week will be all the banks, so you get some of that. I think I'm gonna join you in that SMR position, but I'm thinking just to do the out of the money, put the 35 strike here at about the 30-ish delta.
Yeah, that works.
So why not?
That works.
325, right at the mid price. I do have some interesting stats, and they kind of confirm the sentiment that we talked about in the beginning of the session here, of just it being kind of a single name equity day. So you got 5 million Tesla options traded today, SPX with over 4 million. So those are big numbers. And that goes with, you know, the kind of lack of liquidity or less liquidity that you're seeing in the E-mini futures themselves. It's certainly been an option day.
Yeah, I think when you look at, it's always interesting when you have like SPY and the Qs with their traditional levels, but then you look at like right now IBIT, so no surprise here, but IBIT share volume 75 million today. You look at SPY 58 million. You look at the Qs 40 million. So IBIT well ahead of SPY and the Qs, which speaks to the same point. It's just like people are going to where there's volatility and they're avoiding places where there's not. So yeah, it's definitely it's always interesting when you have the single names that are moving, but they're offsetting the overall E-mini market and NASDAQ. Yeah. Like if you look under the hood, there's plenty of things that are moving, but the result is a 4-point move in the E-mini futures.
Yes, I was just looking at SPX just to show some of the insane volume that we're seeing, almost 100,000 contracts on basically every line from, 6,700 all the way up to where we were, earlier in the session at 6,750, 6,760-ish. Pretty crazy there. I had somebody point out here that the VIX is coming in pretty nicely right now, down to 1634. Has your SPX spread come in at all? Are they taking out the weekend, as they say?
Yeah, it's up 22 cents. So I sold it for 215. It's marked at 190 right now.
There you go.
So yeah, they're taking out a little bit, but I also placed this when we were a little bit higher in the E-minis, I believe.
Yeah.
But yeah, I'm definitely leaning a little bit long with my shorts at 6,700 and 6,750, just slightly long. But yeah, if we open up with a nothing burger on Monday, this will be pretty much immediately
you're gonna make the chat drink with the nothing burger call. That's what they do for me.
That's the new thing.
Yeah.
All right.
E-mini S&P 500 futures up 6 right now. You got the NASDAQ up 90. I know you mentioned Meta as one of the ones bucking the trend. Have you nibbled long there yet? I'm already in. I'm also in Netflix, which is also a dog here.
I haven't, but I certainly could.
I did in Meta a wide put spread. You might be able, might want to make it a little bit tighter. You could do some. I did the 650, 625. So on the downside at the time, it was about a one standard deviation ish. It's now a 24-ish delta, but you can move this. You could probably do the 625. If you want to do it in iron condor, you could do like the 625, 615, and then go a little bit further out on the call side, or just, sell the 650, 640 put spread for nearly 1/3 the width of the strikes.
I like it.
Yeah. Because you can't fade Zuck.
No, not
Not
anymore.
now. Not anymore.
I'm going to work a broke wing butterfly in here.
There you go.
So in the 14-day, I'm looking at, so this is before the earnings announcement, so this will decay nicely, but I'm looking at the 700, 690, 670 for 90 cents. I'm just going to leave that there and see if we get filled prior to the close, but I kind of like that idea. Oh, there you go, 90 cents. Rapidly post this to the follow page.
There you go. Some of the other bigger movers of the day in the big name stocks, you have Nvidia kind of bucking the trend here. Down, it was down $2 or $3 at one point in the session here. Again, we mentioned a lot of the high flyers, but you got to pull back in Roblox, Carvana. I get emails about all the time. You got SoFi in there and AMD, AMAT, Tesla. Those have all been weak today. On the upside, you got a lot of the Momo names here. LAC, which is that lithium company that's getting added to the government portfolio. Plug Power, I haven't even thought about that stock in quite some time. I mean, that's number one on the high option volume list. This USAR, which is another, rare earth company where there's speculation that the government's going to go in and grab a piece of that too. The quantum stocks, you got Beyond Meat up a quarter. I mean, that stock is dead. It's been kind of it's the frothiness is showing. Obviously it can continue for quite some time, but this seems a little like we're getting a little frothy.
Well, no, we're beyond froth. Now we're in zombie apocalypse mode. Plug is up 35%. Like you said, I haven't even said Plug in this context.
I thought it was gone. I thought it was dead. I don't know.
Yeah. These are the Walking Dead stocks. Zombie apocalypse in full effect. The stocks that you never thought you'd hear again. Yeah. Where's Peloton? Is that thing dead? Yeah, that's still dead.
Yeah.
But it has rallied 50% in the last 2 months. So that's nice.
Yeah, it's a little crazy.
But yeah, lots of single name stocks flying around.
Some people calling out BTU, one of these coal stocks. Shout out to Mr. Vecchio, who I imagine is listening while he's coddling his new baby. He has been
or hodling.
Both hodling. He's probably hodling it too.
Yeah.
But he's been talking about coal miners for quite some time, so that one has gone nuts to the upside.
Mm-hmm. Yeah, maybe SoFi Stadium is why they've been mooning so much. YouTube chat could be onto something there. But yeah, SoFi, another interesting name. So another adjacent product, new holdings, new bank. That's another similar idea, half the price.
To what?
To SoFi.
Yeah, but it's got a $76 billion market cap. My God.
I mean, yeah, but why not 100 billion? That's the point.
That's true.
All these stocks, why not 100 billion?
That's the question.
Yeah, and it's interesting because you look at some of these stocks and it's like, oh, SoFi is a $33 billion company. Why not 100 billion? That would put it at 75 over time.
Mm-hmm. Yeah,
we'll get there. But yeah, the biggest movers on my screen from a portfolio standpoint, gold to the upside, of course.
Yeah, this has been just an absolute face ripper.
Mm-hmm. Yeah, and now you're getting the synergy with Bitcoin that we were talking about. When we saw gold and silver ripping, we're like, where's Bitcoin's move? Because it would make sense if it's an anti-currency move that it would be Bitcoin as well. And now you're finally getting it. Do you have any Tasty FX positions?
No, I have. Well, I was in the Japanese yen trade. I shorted. I was long U.S. dollar against the Japanese yen. That was the biggest one that I had on. I only have this New Zealand dollar U.S. dollar trade on. Is there one that you are watching?
Well, I doubled down in the dollar CAD trade, so I'm short the dollar CAD as my only position remaining in this portfolio.
Okay.
But I had a cost basis that was really low, and then I added another tranche of 5 micro lots.
Yeah.
So my basis is now at 1389. So we're not too far away.
Yeah, the dollar has given up a lot of its gains over the last, 3 or 4 sessions here on the lockdown, which we have thus far survived. We'll see if we get any crazy news over the weekend. I'm sure that's getting priced in here.
But yeah, crazy non-move day. Just when you thought we were going to rip through the ceiling, we get batted back down. I could have sworn the 6800 E-mini pen was just alive and well.
Well, we had it. It was grinding up there all day today, and it felt like, I agree, it felt like that was going to be the spot. But I mean, you see here, it's just a little bit of a pullback. Maybe that was the top. Is this going to be our abandoned baby? Is that what this is? Look at this one.
Maybe.
Could be.
It very well could be.
E-mini's down 2 right now. It's pretty wild when you think about, the indices basically unchanged, and then you're watching some of these stocks up or down 5, 10, 15% within the session. There's certainly been some volatility underneath the surface here.
Yeah. And that's why it's always good to check out all these watch lists that are preset. Look at the S&P 100, look at the NASDAQ 100, see what's moving to the upside and downside. And that's an easy way to generate new trade ideas. And we do this basically every day.
Yeah.
To find new trade ideas in these products that are moving. But yeah, a lot of sector rotation looks like.
I've got this Palantir position, put diagonal spread. I'm long the 175 in November, and then I'm short the October 165 against it. Do I close this out and take the money and run for $200?
Yeah.
You
use
think
that
so?
$200. Use that $200 at the bar when you're watching football on Sunday. Come on. It's an easy one.
All right. Let's see if I can get filled above the mid.
What's happening with Meta? It's been weak lately. Could crack 700 next week.
257.
15%. Yeah, that's the new motto. The 15% motto.
Yeah. That was what my friend Justin texted me. He said he wasn't happy. The stock that I have been telling him to get in was ASML, which has had just an absolute nutty move. And that's what it is.
Yeah, that's a good one.
Yeah, that's a good one. I mean, some of these you look at and you're like, what?
Like how?
Yeah. Well, it's in the chip space, so.
Yeah. Tesla giving back a lot of its gains the last 2 days. This has been a crazy mover. I'm very intrigued to see where it's at.
I mean, it was down $30 just 10 minutes ago.
Yeah. They got to bid them up. But yeah, earnings projected to be late October. October 22nd is the projected date, not confirmed yet, but definitely priced into that 21-day cycle, as you can see with the boost in IV. So yeah, a couple weeks here, and we'll have a fireworks for a Tesla earnings report.
Yep.
All right, so next week, Monday, expected move 28 points. Nada. End of the week, 73 points. I asked the same question to Jamal. He said inside up, 73 points. What do you think?
Man. I mean, we've had such a nice run over the last week. I feel like you got to have an inside down move, like we had right here, like just a little spook the children. Maybe 1%, 2%, 3% if you get lucky. I feel like you got to have a little something. All the signs are there of kind of the frothiness of some of the names that are flying around. I feel like you're gonna have an opportunity and maybe a little bit of a pop in volatility. So I'll fade Jamal's thought and say inside down or at the expected move down.
I'm gonna go ahead and say this was your opportunity. You see this red?
2 points.
Down 5. Down 5. This is your opportunity.
That's it.
I'm gonna say for next week.
That's what it's been for a year. Has been the 10 points. That's it. That's all you got.
That's what I'm saying. This is it. There's the bell. So yeah, the market projection is to the upside in SPX is 67.90. I think we are outside of that to the upside. I think we get to 6,800 next week, considering that everything's delayed with the economic calendar. The volatility is super low. If nothing happens over the weekend, I think we get some more chop to the upside.
E-minis closing basically unch. They're down 2 points. NASDAQ kind of selling off a little bit, down 110. You got the Dow up 228 and the Russell up 16. Volatility futures basically unchanged on the day. What a chop fest. What a fun day. What a fun week. Thank you, Mikey, for joining me. We're going to take a quick little 90-second break and come back and do this all over again on Sunday night for the first call, but also Monday morning for the full session. So we're going to take a quick little 90-second break. Thanks for coming by and hanging with us. You're listening to Tasty Live.